us run a lot.
A lot, right? Like all the time?
Yes, all the time. But what I think makes it the hardest sport is that any other athlete who tries to play soccer looks extremely unathletic. Where you can kind of fake it if you're playing football or basketball or even running track, but you look really unathletic playing soccer unless you know it.
I think that's a good point.
Mitch, talk to us. We were talking to your commissioner about the state of the sport and the league and everything. I want to talk to you about what it's like on the field. Talk to us about the competition, the level of competition, where the players come from. What's the level of competition on the field? Now, you played your college soccer at Harvard. What's it like for that jump to the pros?
Oh, the jump is getting bigger and bigger. I think the gap between the collegiate game and the professional game has only grown over the past couple of years. I think when I was coming from college and going to pro, that jump wasn't as big for me. I had a good time my rookie year. But now you see people not struggling more, but really having to take a little bit more time to get to that level and mesh in with the rest of the players.
Do you feel like if I say women's soccer is finally having its moment, is it actually finally having its moment that's durable and here to stay?
I don't know if I can subscribe to that, and I'll tell you why.
Okay, tell me.
It's because every 4 years we have the Olympics and we have the World Cup, and everyone gets really, really excited about women's soccer, and then it usually dissipates at some point. I do think women's sports in general are having an incredible moment. I mean, you can see it with the WNBA, you even see it with like rugby and track. I'm with you. I believe in it, but I want to wait to see it before I subscribe.
You've been on the national teams, the U.S. national teams, for years, so you've seen the global competition and how. But the U.S. team is in my opinion, I don't know, I'm not that into it, the best team for a long time globally in terms of looking at the World Cups and so on. Talk to us about the growth of soccer internationally outside the U.S. What are you seeing in terms of competitiveness? Because I know there are a lot of international players in the U.S. league.
Oh, absolutely. And I mean, I think you can see it even with the last World Cup we had. We won this Olympic gold, which is absolutely fantastic. And I think anyone who watched the games could see that they were difficult games. It wasn't 6-0, it wasn't 5-0, it wasn't 3-0. A couple Germany games were in our favor. But in general, the competition is leveling out, and you know the global stage is getting a lot more even. So I think even seeing a lot of those players come over to our league and increase the competitiveness that we have here at home, it's really amazing to see the progression of women's sports globally.
What do you think of the how to monetize that, like as a player? Like we talked to the commissioner, we talked to a partner that sort of helps collegiate athletes monetize themselves and understand how to do that and works with colleges. Do you think this is all being done the right way?
No.
This is great. This is why I want to talk to someone who actually does the stuff.
In short, no, I don't. I think that we're still behind in terms of the industry approach on how we support players, help players, and promote players. I think one of the biggest issues I've had with women's sports in general is that the landscape for how we market women's sports has always been extremely derivative with the landscape of how we market men's sports. And
that
even
is shocking.
Yeah, they say shrink it and pink it is something that Michelle King likes to say, and I'll take that from her. But it's not even just derivative of the men's game, but we're derivative of the European format as well. And, you know, the American population, this demographic, it's a different audience that you need to cater to. And I think we need to be just a little bit more specific industry-wide with how we do that.
How do you expect the growth of the league to be over the next several years? Do you expect it to get more competitive, maybe more teams? What do the players feel like?
Oh, I don't think anything's going to stop this league, to be completely honest. I think we will be huge competitors with the MLS. I do see a lot more teams coming in. I think more international players will want to come play here, and I think it's going to be even harder to play here domestically.
Right.
What about, like, do you think we're going to have, like, competitions, not like the Olympics or whatever, World Cup, where, like, you can play more internationally and make it not just like a U.S. soccer sport?
Absolutely. I think we already have a CONCACAF tournament happening right now. My team plays tonight. Good luck, Gotham FC. Okay. You guys are going to be fantastic. And we have the Club World Cup that's happening. So it's definitely, we are integrating with other leagues and making that global community for women's soccer.
All right, Mitch, that's great. Really appreciate getting a few minutes of your time. Mitch Purse, forward for the NJNY Gotham Football Club and also the United States Women's National Soccer Team. She played her collegiate soccer at Harvard. Talking about the growth of this, the Women's Professional League here in the U.S. is certainly, as Midge was suggesting, kind of hitting an inflection point, and that's consistent with what we've seen from women's sports just over the last 3 or 4 years. And again, I kind of just go back to the WNBA, which they're playing their season right now. And Caitlin Clark and Angel Reese, they're just kind of really taking over the zeitgeist. And so women's sports, big time here. And that's certainly a focus at this conference here.
Yes, sirree.
Today, talking about the business of sports.
What's also a focus, the Verizon CEO will be coming up in just moments. This.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from headquarters from the Power Players Conference right here in the hub of Bloomberg, where we talk about the intersection between sports, media, business, plus entertainment. There's also a major deal, Paul, that's on the docket as well. Verizon set to buy Frontier for about $9.6 billion. A big broadband push. Verizon stock is down by about 0.5%. Caroline Hyde, Ned Ludlow will be talking to the CEO in literally just moments.
Yeah, this is a big transaction in the telecom space here. It's all about spectrum and deploying that spectrum here. So Verizon, already a big player, buying another big player in Frontier.
Yeah. It looks like it'll be a 37% premium to the $28.04 a share closing price on a Tuesday. That was before the news of the pending deal came. So let's go right now to Caroline Hyde and Ed Ludlow speaking to the CEO of Verizon, Hans Vestberg, on the deal to buy Frontier.
TV and radio audiences. Verizon agreeing to buy rival telecom operator Frontier Communications for about $9.6 billion in cash, giving an enterprise value of $20 billion. This, as the New York phone giant looks to expand its high-speed internet business. Let's bring in Verizon CEO Hans Vestberg. We welcome you, sir. And look, it wasn't long ago that you actually owned some of these assets. Why go back into wireline? Why are we seeing this convergence again?
Thank you for having me, first of all. I think this is very straight into our core strategy. We are sort of in mobility and broadband, serve basically all types of customers in this market, consumer, SMBs, large enterprise and governments. This is just extending the offerings and optionality for the customers we have. So this is a really good decision by us to do it and economical right. And on top of that, as you mentioned, yes, we own these assets before, but they were a totally different type of assets. There was basically a copper-based business. Nowadays, Frontier is more than 50% of the revenue is fiber, and way more than 50% of the EBITDA is coming from fiber. So a large transformation have been done, and it fits in straight to our strategy of Verizon.
Hans, good morning. It's Ed in San Francisco. Frontier's trading at $35 a share-ish, below the $38.50 per share offer. What does that tell you about the market's reaction to the offer and what you think might happen next?
I don't tell me so much. It's so early, and it's 2 hours of trading. I think, first of all, we feel really good about this deal also from closing it and seeing that this is a possible transaction from many angles, because given that we believe it's going to take 18 months and all the regulatory bodies, of course, will be a thorough job. But this is improvements for customers. We're going to give more choice. And not only that, we're going to bring our mobility broadband to these customers. At the same time, we also have the offerings that we have on our broadband today, which is everything from streaming services, other services that we have on insurance, etc. So we're going to bring a lot of new opportunities for the customer base of Frontier. So I'm really positive on this acquisition.
Can you tell us a little bit about the future as well? The short term is the convergence trade, is wireless, wireline, content. But then there's AI. Then we're talking about the Internet of Things, as we've been talking about for years, Hans. Where does that come into play?
It comes definitely into play in these assets. I mean, as I said, we expect this to take take 18 months. We already right now have a sort of an AI prepared network with a lot of compute and storage at the edge of the network. We decided already some 6 years ago to fiberize all our transport, so we are really prepared of it. The Frontier asset is just coming in as an extension of that, and we can meet even more customers to have a processing storage at the edge of the network with the fiberized transport. So this is really also another advantage we're getting with even more assets in the ground, and of course serving consumers with home broadband together with our mobile and home offering is of course a strength in the overall acquisition where we're doing.
Hans, we have a question from an audience member on Bloomberg Technology who notes the 2015 sale of wireline assets. But I think the question that he and many others have is what's changed around the economics in this deal? You said the economics work, but give me specifics on what's different, particularly for fiber in 2024.
So if you look at the deal right now, at closing, we believe that's going to be accretive of growth, revenue growth, and EBITDA on day one. So that's really good economics. And then it's going to take some 12 months, and EPS and cash flow will be accretive as well. And the reason it takes 12 months is there are some integration costs coming up in the beginning. So definitely a very economical, sound business for us. But I said the assets we sold previously was, of course, in a totally different standard. The Frontier team has put in billions and billions of dollars to fiberize the network, to be the next generation. And many of the metrics that they have, you know, churn, penetration, etc., are fairly similar to Fios. And Fios is, of course, the best fiber network in the States. So there's a lot of similarities on that, and that we can offer to our customers.
Hans, some analysts were a little bit surprised by the timing and the fact that you're going all in on convergence now, a bold step, some call it, because of your leverage and your commitment to reducing your debt. Why do this now? Are you worried about leverage?
No, I think, first of all, we have a very strong balance sheet. And as we said this morning, at closing, this will be maybe 0.2, 0.3 notch on our leverage, which is very, very low. We still are committed to our capital allocation. Number one, invest in the business. And that's what we're doing today. Number two, committed to the dividend. And you might have seen yesterday we came out with our dividend, which was for the 18th consecutive year we increased our dividend. And then is to pay down our debt. We have been paying down our debt since we bought the C-band. We still have some 18 months here that we're going to continue to pay down the debt. So we're going to be in a really good position balance-wise when this deal is coming to fruition.
Hans, what opportunity is there for you in data center interconnect, DCI, in the context of AI? Look at what like Lumen's done with Microsoft, for example.
I think that the difference here is that we have so many assets in the ground when it comes to fiber and central offices. Many of these central offices, of course, have compute, storage, power, etc. And many of the AI solutions, when there is a real product, they actually need to be way closer to the users, the corporations, etc. And that means that because the transport cost and many other things, it will be hosted at the edge of the network. That's how we built the Verizon Intelligent Edge Network in 2018 when we started with the journey, which we now is just adding Frontier to it. So I see a great opportunity for us on the B2B side with this footprint to serve customers that want to host AI close to them, secure, lower transport costs, etc.
You're just announcing one deal, and you know we always love to push forward. Hans, are you going to continue to be acquisitive when it comes to convergence?
I think, first of all, we are really happy with the assets we have, and now we're adding Frontier. I don't think we need much more. We're going to be the biggest on wireless. We're going to be clearly the ones having the largest broadband offering with fixed wireless access and fiber in the market. We have the largest distribution and the customers. So we're going to be in a really good position to see that we execute for our customers, but also for our shareholders. So I'm really happy with the assets we're going to have and we have today. When it comes to convergence, I think what is important in convergence, we will have the scale of economy for both. We will have the ownerships for the wireless network and the fiber networks and fixed wireless access. If customers want to make the convergence, we will have the economics for doing it. I don't believe it's going to be sort of you discount one product for customer taking both. That's not really. It's two great products, and we all know mobility and broadband is essential for today's society. I mean, everyone needs it. If it's a corporation, a private person, or a corporation, you need these services. They are even more important today than were 5 years ago. And Verizon is number one in basically every segment of that, and this is just fortifying it. So yeah, we're going to see convergence, but it's not like we're going to discount products. They're great two products that we're going to offer to our customers if they want to join. We have improvements on churn, of course, if customers both have mobility and broadband with us. And so we're going to see how this plays out in the market, but clearly we're going to be best positioned in the market when it comes to convergence.
Verizon CEO Hans Vestberg, thank you very much.
All right, that was Ed Ludlow, Caroline Hyde from Bloomberg Television interviewing Verizon CEO Hans Vestberg. And did you notice where Hans is? Basking Ridge, New Jersey. Why? Because that's where the telephone and the cellular technologies were created in Bell Labs and Bell Core in New Jersey. Take that, Silicon Valley.
But then they're different now. Like, it's going to be a different... Okay, all right.
That's kind of where it all came about. Let's switch gears from telecom. Let's switch gears from sports. Let's talk commercial real estate, because and anybody who listens to this show knows that Alex and I are really interested in commercial real estate and how it's going to play out here as we walk around cities around the country and see, half-empty buildings. Everybody's working from home here. David Steinbach joins us here. He's the CIO of Hines. Abigail Doolittle, markets reporter. She joins us as well here. We're on set here in our Bloomberg headquarters to talk commercial real estate. David, talk to us about where we are with commercial real estate. Where do you guys play? Is it office? Is it commercial? Where is it?
Yeah, so we're a global real estate investment management firm. We're in 30 countries, about 380 cities around the world, and really active both development as well as acquisition, and doing things across the product types. So living and retail, including industrial, but office as well, which is something that I know is, as you said, is top of mind for many.
Well, speaking of office, most folks out there that we talk to in the commercial real estate space, it is a asset class that they're saying some of the buildings over here on 3rd Avenue could be worth less than 10 cents on the dollar. Nobody's been willing to buy yet, but I believe that this is, at least on the credit side, you're interested.
Yeah, I mean, we definitely are. I mean, we are looking at it through a lens that's very specific on what works and what doesn't. And there's certainly a lot of things that haven't worked and things that have gone back to banks, and all those things are in the headlines and what people are thinking about when they think about office. I think you really have to peel back the layers of the onion to understand what's going on in the sector, though. And when we look down at office, you see a sector where there is a disconnect between capital and fundamentals. And the capital markets and fundamentals just are not syncing. So the best of the best projects, when you look back the last 20 years, they were only about 6% of the total inventory, but garnered about 25% of activity. And that's just because tenants want great space for their employees. They want great places for them to work. And you have a natural degradation of office, that just doesn't work over time or needs a huge capital infusion. And so it's important to be very specific of what works and what doesn't. And so that's the lens that we're looking at it through.
So what works and what doesn't?
Yeah, well, look, I mean, yeah, and I think the deeper question is what is going to work the next 10, 15 years? Because when you make an investment in real estate, obviously you have to have a longer term lens into into how things are going to be, because the business plans are typically 7 to 10 years, and so it's not like equities or fixed income where you trade in and out on a daily basis. And so when we look at that future lens in terms of where the sector's headed, without question, you can see some trends. Employers are needing to activate their employees, the office always housed the means of production. And as we have moved into a knowledge economy, the means of production are people, and people sit at the center. And a human-centric office is absolutely what works. I think the other really interesting thing to think about in the sector is just in my career in real estate, I've seen things shift from art to science, and data has driven that. And as things move from art to science, it creates liquidity. It creates transparency, and that transparency creates liquidity, and that liquidity creates returns. And so you can see this happen in different elements of office, like vacancy rates or other things that make office work. And I think in this next wave, productivity is going to be one of those things that today we see as an art, but data will turn it into a science. And so getting ahead of that and really having an operator lens when you look at the sector is going to be really important.
So talk to us. I'm a Wall Street guy, so I want to I always think about how these things get financed. Talk to us about the financing market these days. Are the banks there? If not, where do you get capital?
Yeah. So, look, I mean, in this last cycle, regional banks were very active in the sector, and I do think they are going to be more on the sidelines in this next chapter. I think some of the major banks are going to start getting more online than they have been. They've definitely been on more on the sidelines as well. Debt originations are down significantly, 50% by some counts. Private credit is stepping in to fill a lot of that void, and I think that will be a trend that we're going to continue to see. CMBS is also starting to reemerge, and so I think both those elements are going to be needed. I think the other thing, I think the other thing that needs to happen is what I think will happen next week with the Fed, and I think seeing where interest rates that we have topped out, and there's a psychological element to that I think the market also needs.
Well, sticking with the finance side, I believe that depending on whose numbers you look at, $1 trillion to $1.5 trillion worth of CMBS expected to be due by the end of 2025. Some of the conversations we've been having have suggested that it's going to get pushed out, extend and pretend, but at some point that all of that is going to come due. Yet you have a pretty bullish view. You are saying now is the time to get in and invest in commercial real estate. How do you reconcile those two facts? How do you think it's going to play out?
Yeah, well, look, I mean, when you look at the private sector in real estate, you have to realize there's a big disconnect between the private markets and the public markets. Public markets are always ahead, and they always price things almost perfectly with a future lens on. Private markets are always behind that curve. And so while the public markets have had a great rally, right, the last few quarters, the private markets have not. And it's been 30 months now of from the private market perspective, rising interest rate environment, 30 months. Again, I think the psychology of that's getting ready to shift next week. And I think once we hit to that point where rates actually go down, that will change a lot. And so to me, that is the signaling of a bottom. And I think that's an important metric to think about. The market will digest that. And I think that there's a lot of money on the sidelines, and that money is waiting to get activated and waiting for the signals. Again, I think the Fed will give a big one next week. And I don't even think it's so much about how many basis points. It's more about the fact that rates are now headed down.
30 seconds left. You said you're globally. Where globally do you see the best opportunities?
Well, look, I mean, last year we were basically a third U.S., third Europe, third APAC, very balanced. This year, I think the U.S. will surge to be most of a lot of the activity that we do. I think Europe also has seen a lot of headwinds, and I think the supply chains, the war in Ukraine, there's a lot of things happening there that have made it slow go. But I think that's shifting as well. But top pick, I think, for this year, next 12 months will be the U.S., just given where it is specifically in its market cycle.
Really good stuff. Thank you so much, both of you. David Steinbeck, he's CIO over at Hines, and Abigail Doolittle, Bloomberg Markets reporter, who also has a very keen eye on the commercial real estate market. That's interesting. It's basically like where your cuts are, like like who's going to cut how far versus how the economy is going to play out, and then you're going to have to go back and circle into the commercial real estate market.
Yeah, I think that's interesting. And again, I guess what I've learned about this whole commercial real estate business is it's more than office. You know, I have to keep it.
I know. I do the same thing.
Yeah,
it's like
so,
retail. It's also
Yep.
like, data centers. It's the whole thing. But yes, I agree with you. All you see is the empty office buildings where the Gap used to be a Victoria's Secret. And then that's,
Exactly. And I extrapolate that out to the whole world.
Exactly. We're New York-centric here and Jersey-centric, as Paul would say. Coming up, we are getting back into the business of sports. We have two amazing guests for you. David Rubenstein.
One of my heroes, Wall Street
co-founder,
legend.
Co-chairman of the Carlyle Group. He's also owner of the Baltimore Orioles and Cal Ripken
Jr. Yep.
Cal Ripken Jr.
Hall of Famer.
Even I know this name.
We're talking Baltimore Orioles. Big
yeah,
time.
we are. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a decidedly mixed market with the Dow, the S&P. They are both trading lower. NASDAQ holding on to gains. The S&P did wipe out earlier gains as traders weigh a batch of mixed economic data ahead of a highly anticipated jobs report tomorrow morning. S&P right now down 20, a drop of 0.4%. The Dow down 271, decline now of 0.7%, while NASDAQ is up 27, a gain of 0.2%. 10-year 3.75%, the 2-year 3.76%. Gold now higher by $10 the ounce to $25.05, up 0.4%. And West Texas Intermediate crude oil back above $70 a barrel, $70.18 right now, up by 1.4%. JetBlue Airways shares up 7.6%. JetBlue raised its sales forecast for the current quarter after the carrier said it benefited from rebooking passengers from rival airlines whose flights were disrupted by a tech outage back in July. Again, recapping, stocks are mixed. S&P down 18, down 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we are live here at the Bloomberg Power Players Conference at the Bloomberg Global Headquarters, 731 Lexington Avenue, 58th Street. Man, we got a lot of smart people running around here. A lot of interesting conversation about the world of global sport. This one you don't want to miss. David Rubenstein joins us here. He is a co-founder and co-chairman of the Carlyle Group and owner of the Baltimore Orioles, as well as Cal Ripken Jr. talking about those O's. Baseball Hall of Famer, founder and partner of Ripken Baseball. Gentlemen, thanks so much for joining us here. We got a lot of sports people running around. We've been talking about women's basketball, women's soccer. Let's talk a little bit of Major League Baseball. You guys are up a game in the win column on my Yankees. It's going to be a great last few weeks of the year. David, I want to start with you here. You own the Orioles here. What are you doing? Why are you buying a sports franchise?
Well, in this case, I grew up in Baltimore, and I wanted to give back to Baltimore a bit, and I thought the team could maybe use rejuvenation in some way, and it's part of rebirth of Baltimore. Baltimore is trying to rebuild itself in many ways from some of the struggles it's had. And I thought a new ownership group would probably be helpful, so I did it for that reason. And obviously, I hope to make money as well for myself and my investors, but it's more of a philanthropic thing on my part than anything else.
And Alex, he's got a few partners there, including Mr. Bloomberg, who owns this radio program.
Ah, okay.
How about that?
How about that?
How about
Circular
that?
forces.
Exactly. All comes back together. Cal, talk to us about the Orioles. Boy, man, I'm a Yankees fan, so I'm looking at them every day. Man, they look good. Tell us about this team.
It's an exciting young team to watch, talent all over the place. We've had little problems with injuries in our pitching staff, but when you have a deeper minor league system, sometimes when somebody gets hurt, it's an opportunity for someone else. So they're playing really well. And it's interesting when many owners come in to buy a team, the thing they have to fix is what's happening on the field. In our particular case, that's the best part about the investment is that Mike Elias has done a really good job of creating an environment, a culture that knows how to win, knows how to play, and he's put talent in the system. So the good part is you just take your hands off of and say, just keep going. And hopefully the luck factor with David will, in the very first year, we'll take that all the way to the World Series.
Can I ask a really dumb question?
Yes.
Why is investing in sports like a good business? And I say that because at some point we're going to reach the top, right? Like there's so much money coming in. How do you know that?
Well, over the last 10 or 15 years, it's been very difficult for somebody to buy a major league professional sport operation and lose money. People have made staggering sums. Now, of course, that tends to attract more money. And as you suggest, at some point, there's always a peak. But right now, the interest in sports is so dynamic that the live television, despite your view and my view that live television should focus on interview shows, actually, it focuses on live sports. And live sports is what's keeping television alive, really. So if you take a look at the NFL, for example, I think of the 45 or the 50 most watched television shows last year, 45 of them were NFL games. And now baseball sees a lot of people, has a lot of people watching as well. So there's a view that as the population increases and as other things seem to be less attractive, sports is still very, very attractive. And so the TV contracts are going up. And as a result, for example, the NBA just negotiated $77 billion worth of contracts. It's expected in 2 years that the NFL will top that number. So that's what is driving it. And also it's a global phenomenon. Yeah, people now are buying sports teams not only in their own country, but everywhere in the world. And so it's really not just a U.S. phenomenon.
So can I have a simple, all you have to do is to look at the health of sports, is to look at the salaries of the players.
Yeah.
And I guess I've become one of those players saying, man, I wish I played in this era.
It always goes up. I mean, I'm like everybody else. It's got to top out somewhere, yet it just keeps going higher. Cal, how has the game on the field changed? The kids today that you watch at Camden Yards, still, by the way, I would argue one of the best parks in Major League Baseball, 25 years on. But how's the game changed today versus when you played?
Well, I mean, the analytics have taken over, and all the data and all the information. And I was an analytical player, and I took the data from, but there's no way that I was getting all the sort of data that you can get now. And the trick is, and this is the fun part about learning, the game hasn't changed much because the diamond's the same, the bases are the same, the mound's the same. The game is played the same way. But with all this influx of new data, teams feel that they have an advantage when they extract some of the data and then use that to help them play in the game. But the secret is, how do you give the data to a player to make him a better player? And that's the part that I'm having fun with, is learning what the data affects the philosophy of how you play the game. And that's changed. And positioning on the field, different old philosophies have kind of gone out the window because they've been proven not to be effective. So it's interesting to watch the game from that perspective, but it is all about the data, the numbers. They track everything that moves on that field.
It's amazing, and that's AI, that's big data coming into sports. And Alex, I'm sure you know this, but I mean, Cal has he has a little record out there. He played a lot of games in a row. He never took a day off. Okay, like that is something that just. It'll never be broken now.
So
given the way it's
I wish
changed.
I was wearing probes or something that could figure out how I could do that, because I'm asked all the time, how in the world you play all those games in a row, and I don't know.
Well, I guess my question would be, with the analytics, that's never going to happen again. Not even going to get close.
Well, I think they're predicting now, at least in a medical sort of way, when that you might be inclined to have an injury.
Right.
And so if they start to think that you might have an injury, then they put you on the list a little early, the injury list a little early, and they're looking at the long term as opposed to the short term. But
I don't know if that's a good thing or a bad thing.
There's the one thing that's hard to measure is what's inside your heart. I mean, your guts and how you go about playing the game, how you compete. That's not measurable right now. And I think that's what drove me is, when you're an everyday player, the definition of an everyday player when I played was every day. I had the body type in which to do it. I healed really well, and I could play through pain. And when you find out that you can play through being less than 100%, because I would argue that even if you play 140 games, you're still playing at less than 100%. Maybe the only time you're 100% is the first day of spring training.
Right.
And then you end up moving towards the year. So that's the hard part, where that's not measurable.
Yep.
And I like to see players that push through and force themselves to play every game to see how they do it.
You don't see that too much anymore. Hey, David, and aside from the Orioles, you've got a day job here, co-founder and co-chairman of the Carlyle Group. Perfect time to ask you this question. I know you bought the Orioles as an individual, as part of a partnership.
Right.
Now private equity, the NFL has allowed private equity to come in as part ownership. What do you think about that?
Well, Carlyle is one of the groups that's permitted, so I guess I am happy to support it.
Yes.
I think that it was inevitable because the prices of NFL teams have gone up so much that it's very difficult to find somebody by himself or herself who can buy a team any longer. The last team that was sold, the Washington Commanders, went for $6 billion. It's a large amount of money. Very few people can buy that by themselves. So you need to have a consortium of people to do these, and private equity is a big pot of capital sitting there. But the deals are ones where you have to be 10%, no involvement in the day-to-day management, and you have to hold for at least 6 years. So NFL is experimenting. We'll see how it goes.
So, Cal, you have had minor league investments, but this is the first time that both of you have had major league investments. How did this come about? Like, how did the partnership come about? How's it going? Walk us through it.
Well, the owner of the team for the last 30 years was the Angelos family. I had talked to them over last summer about a possible sale, and it came to be. But I wanted to have people in the consortium that were more connected to Baltimore and baseball than maybe I was, because I had grown up in Baltimore, but I haven't lived there for a while. So I talked to a number of people in Baltimore, and some of the people who were also connected with the Orioles. And obviously, the first call I made was to Cal Ripken. He said he would like to invest and also help us in other ways, which he's doing. So I think it's worked out quite well, and win-win for Baltimore and for our
And Cal, that was like a
team.
no-brainer for you? Picked up the call, you're like, yep.
Absolutely no-brainer. I felt like I've been an Oriole through and through my whole life. I mean, I grew up in and around the Baltimore area. My dad was in with the Orioles. The first 14 years of my life, he was a minor league manager. And then you have a dream to be a player. You get drafted by the team you want to get drafted by. You play your whole career with that team. So I know that I went off for a little while, and you buy minor league teams, you learn about business in other ways. You put your head down. You don't pay much attention to what's happening at the Orioles. But when David called, it was an opportunity to get back in, to look at it from the inside, looking out. And I'm really surprised that I'm way into it now. I used to think the whole world revolved around baseball, and then you get out and you realize it doesn't. But then now it seems like the world revolves around baseball again.
Of course. And to put it in context for those who don't know the record, Lou Gehrig played in 2,130 consecutive games. People thought that was the unbreakable record. Cal Ripken did 2,632 games over 17 years, not missing one day. And all of us who work day to day for a living in non-athletic things, can you imagine going to work 17 years in a row without missing a day?
Exactly.
Yeah.
Cal, what do you think the Orioles need to work on over the next couple of years here? Again, I'm looking at the record. The record is great. What do you think they need to work on? Is it minor league? Is it?
No. We have a minor league that's stocked with talent, and you can only, I mean, if you develop 3 shortstops in the minor leagues, you can only play one of them. So many times the talent that you have in the minor leagues is used to trade to get the pieces that you need at the big league level, and the Orioles are in good position for that. They have young players that are going to be superstars, that are already superstars, and maybe the biggest challenge in the future is how do you keep them?
Yeah, exactly. I mean, no salary cap here, so it's tough to keep the star players, right?
Yes. Unlike football or basketball, there's no salary cap in professional baseball, so you can get contracts that are as high as $700 million. And so it's hard for smaller cities to compete in that domain somewhat.
All right, we'll have to see how that plays out. Really appreciate you two gentlemen stopping by. David Rubenstein, he's a co-founder and co-chairman of the Carlyle Group. He's now the owner of the Baltimore Orioles. And Cal Ripken Jr., the Cal Ripken Jr., Baseball Hall of Famer, founder and partner of Ripken Baseball. Appreciate you two gentlemen taking a couple minutes of your time to stop by here at our Bloomberg Sports Power Conference. Boy, we get talking baseball, soccer, women's soccer, all over. We got this guy, Grant Hill, coming up. Yeah, he's not bad.
Yeah?
He's actually my second favorite Duke player of all time after Bobby Hurley. But he was the greatest college point guard of all time.
And we're also going to talk about NASCAR.
Yes.
I know this is going to be a surprise. I know very little about NASCAR and how it differs in Formula One, so I'm interested.
I took Speedway Motorsports public back in 1993. We tried to take NASCAR public.
Oh.
How cool would that have been? We got shot down.
I'm assuming it would have been really cool.
Would have been very lucrative. But
Okay.
they're still private, but it's one of the greatest sports privately owned entities out there, NASCAR.
So looking forward to that in just the next few moments. Looking at the market again, you get the S&P rolling over a little bit, off by about 0.6%, 33.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We are just about at session lows right now with the S&P tumbling 29 points, down 0.5%. This update brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Stocks wiped out earlier gains. Traders weighing a batch of mixed economic data ahead of the jobs report tomorrow morning. S&P, as I mentioned, close to session lows, down 28 right now at 54.91, a drop there of 0.5%. The Dow now down 348 points, lower by 0.9%. Nasdaq lower, little change, down 7, a drop there of just under 0.1%. The 10-year 3.74%, the 2-year 3.75%. Spot gold up 0.6%, 25.09 the ounce, while West Texas Intermediate crude up 0.3%, 69.41 a barrel. There's news on America's labor market ahead of tomorrow's monthly employment report. And with that story, here's Bloomberg's Vinny Del Giudice.
Payroll processor ADP reports American businesses added the fewest jobs in 3 years, 99,000 last month. Wage growth for workers who changed jobs as well as those stayed in their current jobs rose at the slowest pace since 2021. U.S. job cuts remain low, though, based on a separate report from the Labor Department. Weekly jobless claims fell to 227,000. Vinny Del Giudice, Bloomberg Radio.
Verizon Communications has agreed to buy rival telecommunications operator Frontier Communications parent for about $9.59 billion as the New York-based phone giant looks to expand its high-speed internet business. Shares of both companies are lower on this transaction. Verizon now down 0.4%. Frontier Communications lower by 9.5%. Recapping, red on the screen right now. Stocks lower. S&P 500 index down now by 30 points, a drop of 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are broadcasting live from the Bloomberg Power Players Conference here at the Bloomberg Global Headquarters in Midtown Manhattan. Let's switch gears to NASCAR, the business of NASCAR. I have a lot of experience with NASCAR. We took some of those track owners public back in the early 90s, and I got to really understand the business, the sport, and the heritage of NASCAR racing. It's just extraordinary education there. Steve Phelps joins us. He's the president of NASCAR. Steve, thanks so much for joining us here. You know, I got to know NASCAR in the early 90s when I think it was really on an ascendancy in terms of television ratings and then attendance, and it was just crazy, and it rode that way for a while. Then it kind of crested. Where are we now with NASCAR in the global sports scene here?
Sure. Well, I think you're exactly right, Paul. So had this, I would say until 2009, the growth of the sport just continued. You know, the recession hit, and I think sponsorship started to go away because not necessarily the sport, just because of where things were with the economy. And then we had a slow, steady decline, if we're going to be completely honest, until 2018. But since 2019, attendance is up, ratings are up. We did almost a $1.1 billion per year media deal last year for 7 years, so almost $8 billion. And so I'm very bullish on where the sport is today, but importantly, where it's going.
Where do you think it's going to go? Like, how does it broaden appeal? How do you get someone like me to watch it?
Sure. I think, you know, and there's the trick, right? So
and someone like me, I don't know, I don't do sports at all. I like the Olympics, I like the U.S. Open.
So I think, you know, we're trying to appeal to both, obviously, our existing audience and serve that audience and then bring a new audience in. We're doing that through a number of different things. So, for example, we did a Netflix show earlier in the year, and that audience for us has been more female. It has been younger. And I think if you look overall in NASCAR in the last 3 years, our growth has come from women, people of color, and younger people. And so it's working, but we've got to continue to do that. the key for me is what content opportunities we have that will capture you, Alex, right? And what are the storylines we have that will capture you? And I think that's important because, I think people think of it in a way that is not right, which is you either going to serve your existing fans or you're going to go after new fans. I don't think that's true. It's an and, it's not an or. These fans, the existing fans, they want great racing, they want great storylines, they want their drivers to win, they want to see exciting racing. These people want the same thing. It's how do you capture them, right? And so I don't think the two things are all that different. It's just where are we investing our money? So, for example, we just built a $60 million productions facility right outside of Charlotte next to our R&D facility. And it's really two components to it. It's live event production. So how are we going to put our own events on for our 5 media partners going forward in 25? And then how do we create creative content and really compelling content, either to be distributed through our own channels of distribution or someone else's. So, and we've got, the 3 new media partners as part of it. So Fox and NBC came back, who are existing partners, but we added Amazon, Warner Brothers Discovery, and the CW. And the CW is for our second series, which is called the Xfinity Series. So 5 media partners, 5 opportunities for us to have, kind of a megaphone of where things are going.
It used to be, Alex, Ford cars, Chevy cars in the race. If you win on Sunday, you sell on Monday. That's how important it was. Talk to us about the economics of just the teams out there. How many teams are there? Do they make money?
Sure.
How does that work?
So I would look at it in three buckets, right? So we have 3 national series. The one that most people think about is our Cup Series, which is our top series. So we're coming to a close, I think, pretty quickly on something called charter extensions. So I would think of it as franchise light.
Okay.
So it's not franchise, but it creates enterprise value for our race teams. And so we are in the final throes of getting those extended. Right now, race teams, if you probably are collectively losing money. So in the charter agreement that we have based on our media deals and some other things that we're doing, we're going to provide the race teams with more revenue. So 2 pieces of revenue, guaranteed revenue, and then what they race for. And so to me, starting in 2025, we should have cash flow positive race teams, which is what we want. And I've heard lots of fans say, well, I don't really care about that. My whole point is
you
should
do when they go bankrupt, yeah.
That's exactly, well, not only that, but it creates more compelling racing, right? And that's what we want. We need competitive racing. So we have, of our 26 races we've had this year, 15 different winners, 9 different organizations of the 15 charter organizations that we have. So and the racing's terrific. It's the best style of racing, I believe, on the planet. And I think our race fans are telling us that. So, again, ratings are up despite significant rain issues we've had all year long.
Rain, okay, yeah.
So, Daytona 500, we were down 27% because we raced on Monday.
Yep.
Coke 600 rain event down 15%. We had a race in the streets of Chicago. Rain again, down 15%. So, our 3 largest rated events of the year, all down double digit. And yet we're still positive, right, of ratings. So it's working.
Just real quickly, any new markets? We've got about 30 seconds left.
Sure. Yeah. So I think we are going to race next year for the first time outside of our borders in the Cup Series in Mexico City. Okay. So we have some other discussions that are going on. So we're excited about the broadening of our sport.
Yep, absolutely. I like Charlotte Motor Speedway, like Richmond, and I like Bristol, the smallest track. But it's just people down there are nuts for racing. It's kind of like Bristol, Tennessee, Bristol, Virginia, it's really cool. Anyway, Steve Phillips joins us, president of NASCAR, here at the Bloomberg Sports Conference here in New York City, talking to us about the business of NASCAR racing. So we've hit it quite a lot here.
We hit a lot. We're not done.
We're not done?
Now you get Grant Hill.
Now I get Grant Hill. Yeah,
yes.
My second favorite Duke player of all time.
Managing director.
He's good.
USA Basketball. Co-owner, Atlanta Hawks. Behind-the-scene looks on how it goes. And also, like, they're huge personalities in basketball in a very particular way, and sort of how that all works and how to manage that and the evolution of that.
Yeah, absolutely. I mean, seeing that, again, we talk about the franchise values. David Rubenstein was talking about it for football, a similar type thing for basketball. The valuations continue to go up. We thought Steve Ballmer was crazy buying the Clippers, years ago. No,
It's a deal.
it's a deal. Exactly.
We'll discuss that next. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, we're live here in the 6th floor of the Bloomberg headquarters. We're here for the Bloomberg Power Players here at our headquarters. Let's talk a little hoops here. Team USA basketball. I'm going to introduce my second favorite Duke player of all time, Grant Hill. Just phenomenal. Of course, Bobby Hurley, his point guard back in the day, is my number one choice from Jersey City. Grant, thanks so much for joining us here. Team USA. I mean, you guys are hitting it. I mean, talk to us about the status of Team USA. I mean, obviously Coach K stepped it back. A new regime kind of came in. You're there. Talk to us about Team USA. Both men and women are just wow.
Well, first of all, Bobby Hurley was my favorite Duke player of all time because he passed the ball to me, you know. And so, no, Bobby was great. No, it's an exciting time, and obviously I succeeded Jerry Colangelo, who, along with Coach K, had an incredible run together starting in 2006, and I came in during this sort of Olympic quad. We had our World Cup last summer. We didn't fare as well in the World Cup. The women won the gold medal in their World Cup. But the Olympics were absolutely incredible. And both teams were pushed. They were tested. There was just excellence on the court all over the world. We saw Serbia in our semifinal games. They were so worthy and deserving of winning, came up short.
Yeah, I saw that one.
You saw that one?
Yeah, I did.
Yeah.
See? Okay.
But it was just phenomenal. I mean, the fact that we got tested, we got pushed, we had to show some fight and some toughness collectively to win that game, but also win the gold medal against France. The women's team got pushed, and a very close, tough matchup they had in the gold medal game with France as well. So I think it was just a win-win, not just for USA basketball and our continued excellence, but it was a win-win for basketball universally. Like, I think all across the globe, if you're a fan of the game, the Olympic basketball scene was spectacular.
And even if you don't know the game or watch the game normally, like, I was totally into it.
Yeah.
It was amazing. It was really great. Talk to me about investing. And where do you see opportunities? I know that you and your wife are also investors in the Orlando Pro women's soccer team, and we were talking about that over the last couple hours as well, as to where the opportunity set is, sort of where women's soccer is going to go.
Look, so I have two daughters who are jocks, who are athletes, and so
Shocker.
yes, and I think sort of through them, really getting exposed to women's sports and really wanting them to see women professional athletes. So whether it was the WNBA or the NWSL, we live in Orlando, we were fans and consumers at first, and we got so caught into it and just loving it and having a passion for these teams. We also saw the potential and the upside for growth. And so the opportunity to invest in the NWSL, the Orlando Pride, we're in first place right now. Yay. We haven't not lost a game. We've had a few ties and all wins. But I just feel the momentum is really growing. And now you have superior leadership. Jessica Berman is a fantastic commissioner, has great vision, can execute that vision, has surrounded herself with a solid team. But also we have professional ownership now. We have owners now who own other sports, who've been in this, who understand it, see the long-term trajectory of the business. And so I wouldn't say we're at an inflection point right now, but I think we have long-term positioned ourselves nicely for great success. And I think of all the sports leagues, I really believe this. I think the NWSL has the greatest upside. And so really excited. I was excited to see Jessica and Midge Purse, one of the stars in the league.
We talked to her too.
And we're thrilled to be involved.
Where do you see basketball as a global sport? We saw it on at Paris. I mean, the Olympics all over, great competitiveness. How does the NBA, how do you think the NBA taps into that? I mean, there's so many international players playing in the NBA now, but what do you think they should be doing here?
Well, the game has become a global sport. You think of the 92 Dream Team and sort of what they did. They inspired a world, multiple generations of basketball players. Now the NBA is 30% international.
Wow.
And, I can go all over the world and people recognize me and they identify me with the NBA brand.
Yep.
The NBA is a global marketing and public relations firm. The players, they may come in, they may leave, they may, replenishes itself, but the ability to market and promote is what they've mastered and done a great job of that in the last 32 years since the Dream Team. I think, though, where we can continue to improve, obviously domestically with our development. I think the international basketball community has kind of caught us or maybe even surpassed us in some ways with how they develop young talent. I also see expansion, not just here in possibly Las Vegas or Seattle, but I talk about going over to Europe, talk about partnering with the Euro League. I'm an investor in NBA Africa.
Okay.
And the opportunity there and the potential as a lot of the nations on that continent are still developing, but they consume the game. And so the league is doing a number of efforts, a number of initiatives, and just sees the continued sort of growth opportunities that they're global media markets. And the game is in a good place, and I think has even greater potential as we move forward.
10 seconds. How good is this Cooper Flagg kid coming into Duke?
He's really good. I brought him in on the select team to prepare us for the Olympic team, and he played very well. Had a really good day. you know, he might have been one of the top 5 players. I might embellish a bit, but he might have been one of the top 5 players on the court that one day. And so big expectations for my Blue Devils this year with Cooper Flag.
Exactly right. All right, Grant, thanks so much for joining us. Grant Hill is a managing director of USA Basketball. He's a co-owner of the Atlanta Hawks Live from the Bloomberg Power Players. He's here at our Bloomberg Global headquarters along with a lot of other sports folks. So it's business, it's technology, it's sport, it's entertainment. It's all intersecting.
I'm so impressed with your ability to have this muscle here. That was it. That wraps it up for us. Balance of Power up next.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
The presidential campaigns stay trained on the issue that will decide the election. Yeah, it's still the economy. Welcome to the fastest show in politics as Donald Trump speaks today about his proposals before the Economic Club of New York, just a day after Vice President Harris rolled out some new tax proposals. We will hear directly from Donald Trump this hour live here on Bloomberg, of course, on YouTube as well. All this as Hunter Biden heads back to court in his federal tax evasion case. We may have news on a potential deal brewing here. June Grasso will have more, and we'll decide more as well with our panel later on. But let's set the baseline. Before we hear from Donald Trump, we go to Wall Street with the help of Charlie Pellet in New York. How's it look, Charlie?
A lot of red on the screen, Joe Matthew. Happy Thursday. Not so happy for the Bulls. Do want to begin with a developing story. Headline right off the Bloomberg Professional Service. President Trump will propose a 15% corporate tax rate for companies that do make products in the United States. That headline from the Wall Street Journal. And again, President Trump scheduled to speak shortly, and we'll have those remarks for you on Bloomberg. Equities have lost traction. S&P dropping for a third straight day despite a rally in the world's biggest tech companies. Case in point, NVIDIA up now by 0.3%. Stocks did wipe out earlier gains. Traders weighing a batch of mixed economic data ahead of the jobs report tomorrow morning. So here's where we stand. Bottom line, lows of the day. S&P down 33, drop now of 0.6%. The Dow down 376, down 0.9. We've got NASDAQ down by 0.1%. 10-year 3.74%. The 2-year 3.75%. Gold up $12 the ounce, up 0.5%. West Texas Intermediate crude up 0.3%, 69.43 a barrel. Reaction to this morning's employment data from Jay Bryson, chief economist at Wells Fargo Bank, who was interviewed this morning on Bloomberg Surveillance.
Well, what we're seeing is we're just not getting as much hiring as we had before, and I think that's consistent with the ADP number we got this morning. But we're also not seeing businesses laying people off, and we're consistent with the initial jobless claims numbers.
Jay Bryson of Wells Fargo Bank. Verizon Communications is buying rival telecommunications operator Frontier Communications parent for about $9.6 billion. Verizon down 0.6%, Frontier down 9.3%. And the stock price of Donald Trump's once high-flying media company sinking just as the lockup period from its blank check deal is about to end, potentially flooding a saturated market with even more shares. Again, recapping, stocks lower, S&P down 30, down by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that Joe Matthew is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you for the markets and the breaker. This is part of the news that we've been waiting for, and you're going to hear the former president speak to this live coming up this hour here on Bloomberg. I'm talking about Donald Trump, of course. The lines have been drawn when it comes to corporate taxes. Pretty interesting here. 15%, as we just heard from Charlie Pellet. We'll hear from Donald Trump, knowing that Kamala Harris has been making news on this front as well. We talked about it yesterday as Kamala Harris also calls for a less dramatic increase in the top capital gains tax rate. We'll hear much more again from Donald Trump. He's going to do some early remarks, we understand. Then they will go into Q&A. That's going to take place with Robert Steele, chair of the Economic Club of New York. We want to bring that conversation to you here, as you would expect, on Bloomberg. So welcome to the Thursday edition. Yeah, I keep screwing up the days. You've been doing that too? We got a couple left here in this shortened trading week. And we'll keep tabs on the markets with Charlie Pellet as we also follow the bead on Hunter Biden. Yeah, this is the day back to court, and we do have, it looks like, a bit of a developing story behind this story. I'll start with the news alert from the Associated Press. Hunter Biden intends to change his not guilty plea in his federal tax case. This is the tax evasion case that is beginning today, or was set to at least, with jury selection. That's from his defense attorney, more from CNN. Reporting that Hunter Biden is attempting to resolve his tax evasion case in California with a plea in which he maintains his innocence, but will accept punishment. Lawyers just came out with this in court, and we're glad to have June Grasso, of course, the host of Bloomberg Law, with the clutch analysis on this. June, is this going to work?
Well, it's called an Alford plea, where a defendant says he's innocent, basically, but allows the charges against him to go forward or to plead guilty to those charges. So it's an Alford plea. It's sort of a mix, but it needs permission from usually some higher ups in the Justice Department. So I understand that Hunter Biden's lawyer, Abby Lowell, presented this today, and now the judge is going to decide what to do about it. I mean, this is a case that is, I say, a loser for Hunter Biden. Anything he could do to settle this before going to trial would help, because the judge also sort of kneecapped his defense by ruling that a lot of evidence that he wanted to bring in, evidence of his addictions, et cetera, would not come in. But the prosecution is going to bring in all the evidence that we heard, if you remember, in the drug trial, all that seedy kind of evidence. So best for him to make a plea deal here.
He faces up to 17 years if found guilty on the 9 tax charges, June. In California, he already faces up to 25 years in prison after being convicted in June on the federal gun charge in Delaware. What happens at this point procedurally? Does the jury pool, the potential jury pool, sit in a room and wait for this to be worked out?
Yes. I believe, I don't think the judge will let the jury pool go until they're certain that a deal is in place. So the jury pool will sit there. I doubt that the judge would go forward with any kind of jury selection while this is pending. So the best, you have to see what's going on in the back and what kind of authority the prosecutors have. And we haven't heard anything about, how many years he's going to get with this, or whether he's going to get time in prison or not. As I said, it's a pretty much open and shut case as far as what he filed and what he didn't file and what the kind of money he was making at the time. So I think, we'll learn probably within an hour or so what actually is going on there and whether the plea deal has been accepted by the prosecutors and the judge has approved it. Remember, the last time he had a plea deal in Delaware, it fell apart.
Yeah, I was going to bring this up. Well, so speak to that for a moment. What's going to be different this time? Is it a different legal team?
Well, first
and
of
could
all,
that happen again?
It's a different. It's not the tax charges and the gun charges all together.
Yeah.
It's the gun charges. He's already lost on that. It's just the tax charges. So this would be kind of a simple kind of plea deal just to these tax charges, and there shouldn't be any problem about it. In that other case, the judge found that there were all kinds of problems. There hadn't been, they hadn't gone through the process correctly, and, surprising everyone. I remember, I think I was talking to you that day. He came in expecting to go out a free man, and then it found, oh, no, I'm going to have to be tried on both these cases in separate courts. So that I don't expect that to happen, because it's streamlined at this point, and it seems pretty, straightforward.
That was a wild turn, June. Can you imagine how much we've already forgotten that's happened this year?
Well, do you
it's
see
been
how
one of those years. But
this case all of a sudden is not as high profile as it once was when Joe Biden was running for president. Now
how true.
Oh, that's happening today?
Well, we're going to have to talk about that with our panel later on, too, because the political stakes are a heck of a lot lower than they were. Yeah. You're right about the last time we talked about this with regard to the so-called Biden crime family. But I have to ask you about Donald Trump today, June. Pretty interesting here. Judge Chutkan in Washington, D.C., ended a hearing after about 90 minutes of arguing, and quite a line to come from this. As the judge, this is the election interference trial, the Jack Smith trial that's been thrown into question following the presidential immunity ruling by the Supreme Court. Judge Chutkan says it would be, quote, an exercise in futility to set a trial date. So, June, this gets delayed again.
Well, you know what's happening at this point, and I have to say this was a very contentious hearing. I mean, usually a scheduling hearing, we don't even think about it or cover it. You just find out, well, what is scheduled. But it was very contentious between Judge Chutkan and Trump's attorneys. Trump's attorneys saying, well, this is a presidential issue at stake, and she said all that's at stake is a 4-count indictment that's in front of me. And she said she is not going to have any consideration for the election, that it's going to go forward normal. She's not going to even take into account what the defense said, which was they didn't want certain sensitive issues to come out before the election. So there's so many issues to be decided, primarily the immunity issue. So in the hearing, the prosecution said they are all assuming that even after she makes a decision about the prosecutor's revised indictment and what parts of it, whether it comports with the Supreme Court's presidential immunity decision, they assume that it's going to be appealed, definitely to the D.C. Court of Appeals, and perhaps the Supreme Court would even take it. So they're factoring that in, the appellate process. Yeah. And what the prosecutor said is, I would just like if we could just have one appeal before trial instead of having multiple appeals. So she's trying to streamline it. The prosecutor was asking, could they come back with a brief on the immunity decision? And in this brief, they would put forth grand jury testimony. They would put in their FBI interviews, a lot of different evidence so the judge could make a decision about this. And of course, the defense is just looking to put things off, put them off and off and off. Right. And it's not going to happen before the election. We all know that. But still, the judge wants to move it along.
That's the story that our audience should hear, though. Absolutely. We'll check back after November once again on this one. June Grasso, thank you so much, June. We've got 2 breaking stories from our legal department, and there's no one we want to see on that more than June Grasso, the host of Bloomberg Law. We'll have a lot more later today on the program here on Bloomberg Radio. Donald Trump is just getting to the podium right now as we keep eyes on the Economic Club of New York. As I mentioned, the club's chair, Robert Steele, delivering opening remarks for the former president. Donald Trump is just coming to the podium now, as you can see on YouTube. Let's listen live on Bloomberg.
You can speak for an hour and a half. So 30 minutes, he didn't like the way I looked, I guess. But we do have a lot to say, and I want to thank you, Bob. I also want to thank friends and respected business leaders for welcoming me back to the storied New York Economic Club, storied indeed. A very special thanks to Barbara Van Allen. Barbara, thank you very much. And former director of the National Economic Council, Larry Kudlow. What a job he's done. Former chair of the Council of Economic Advisors, Kevin Hassett. Ambassador Robert Lighthizer, terrific person. Former Secretary Wilbur Ross. Former Treasury Secretary Steve Mnuchin. Former SEC Chairman Jay Clayton. Ambassador Woody Johnson. Senior Advisor Stephen Miller. My friends and respected business leaders all, John Paulson, Jamie Dimon, Steve Whitcock, Steve Schwarzman, Scott Bassett, Jeff Sprecher, Richard Kurtz, former head of the World Bank, David Malpass, and the 2 co-chairs of my presidential transition team that are being inundated with phone calls and requests, Linda McMahon and Howard Lutnick. Thank you. As we gather today, we have an economic disaster on our hands. We have an economy in crisis, a failing nation, a nation in serious decline, under the radical policies of my former opponent, Joe Biden, and my new opponent, Kamala Harris. 1.3 million workers have become unemployed in the past 12 months. I don't know if anybody knows that. The typical American family has lost over $28,000 due to rampant and record-setting inflation. Credit card debt has reached the highest in history, with more than 1 in 3 Americans reporting they have maxed out their credit cards. They've maxed out. Families now need to earn an estimated $110,000 a year to afford a typical home, meaning 65% of households are locked out of buying just an ordinary house. Gasoline prices, grocery prices, electricity prices, mortgage rates, and virtually everything else are up 30 to 100% since I left office. 8.4 million Americans are now working second jobs, the highest in more than 30 years. The real wages of African American workers are down by over 6%, a short period of time. The real incomes from Hispanic men are down 6.6%, or $3,600 per year. And on top of that, African Americans and Hispanic American jobs are under massive threat from the invasion taking place at our border. They're taking the jobs of Hispanic Americans, African Americans, and nobody talks about it. But I won't let it happen. Yet after presiding over the border, the worst in history for any country, there's never been a border like this. 21 million people, we project. This total economic catastrophe, the border czar, Kamala Harris, has now been slotted in by the Democrats to be reelected. She wants 4 more years to enforce a radical left agenda that poses a fundamental threat to the prosperity of every American family and America itself. And we're talking about America itself. She wants to defund the police, have totally open borders, ban fracking in Pennsylvania and everywhere else, take away your private health insurance, and perhaps most pertinent to the very brilliant people in this room, raise your business and corporate taxes, and unbelievably, she will seek a tax on unrealized capital gains. Most people don't even know what that means. What does it mean? She has been after all of this for years, and as everyone knows, she's a Marxist who destroyed almost single-handedly San Francisco, and when she was the AG, California itself, not the same place. People are leaving. They're fleeing like they are in New York. She'll seek out and she will try and get those things if she's elected, and she may very well succeed in getting them. She recently said her values have not changed, and these have really been her values for her entire career. Her values haven't changed. That's what she wants. So she told the truth. We're not going to let this happen. Communism is the past. Freedom is the future. And it is time to send Comrade Kamala Harris back home to California, where crime is rampant and fleeing is the #1 occupation. I'm here today to lay out my plan to rescue our country from this nightmare and to bring back to its citizens the American dream, bigger, better, and stronger than ever before. 8 years ago, I came before you as a candidate for president and shared my vision to end the stagnation and return to rapid growth. That's what we did. As president, I am very proud to say that we accomplished something that nobody thought that was even possible. Before the pandemic, real median household income rose by $7,684. And even after the pandemic, annual incomes were up $6,400. The average American household saw a $197,000 increase in real net worth in 48 months. For the bottom 50% of households, average wealth more than doubled, increasing by 121%. Lowest income people benefited the most. After 12 years of decline, we added nearly 7 million new homeowners. Never happened before. And in 3 years, we created 7 million new jobs, 260% more than projected when I took office. When I took office, they said you couldn't hit those projections. And we were 260% higher than what we said we could do. From the day I won to the day I left, the S&P 500 increased by 80%, and we did it all with virtually no inflation. We had virtually no inflation. Think of that. Who could believe that? I delivered the largest tax cuts and reform in American history by far, slashing rates for working families and cutting the business tax from the highest in the world. We had the highest in the world, 35%, and actually, when you add local and state numbers that were getting close to 50, but much, much higher, nobody's ever seen. We brought it all the way down to 21%, which everybody said was impossible to do. And I heard it from everyone. They said, you'll never be able to do that. And I got it down to 21%. I cut a record number of job-killing regulations. In 4 years, we cut more regulation than any president in the history of our country, by far. I'm proud to be the only president in modern history to achieve a net regulatory reduction during my term, and it was a substantial reduction, and for every regulation we added, we cut more than 5.5 regulations. We unleashed American energy, and within 3 years, we had increased domestic oil production by 47%, and we were just getting started. The price of gasoline was $1.87 a gallon. Doesn't that sound good right now? We negotiated and renegotiated more than 50 trade agreements with other countries that were taking advantage of us, as they all do, to protect the American worker and to open foreign markets, and we did a great job. I ended NAFTA, the worst trade deal ever made in the history of our country, and replaced it with the USMCA, perhaps the best trade deal ever made in history. That's Mexico and Canada. I stood up to China like no one else before me. No one came even close. And I saved the U.S. auto industry from obliteration with a 27.5% tariff on all Chinese cars that remains in place to this day. They want to take it off, but they can't, because number one, it's too much money, and number two, we would be invaded by Chinese cars on top of the other invasions that are taking place. Without it, our auto industry would be dead. And now I am going further. We will bring our automaking industry to the record levels of 37 years ago, and we'll be able to do it very quickly through tariffs and other smart use of certain things that we have that other countries don't. For 4 straight years, I fought for American workers like I would fight for my own family. I took care of our economy like I would take care of my own company. In every decision I asked, will I create jobs here, or will I be sending jobs overseas? Will it make America richer and stronger, or will it make our country weaker and poorer? I always put America first, every single time. And when our country was hit by the China virus, we saved the economy. We rescued tens of millions of jobs. And after COVID, I handed Kamala and Joe the fastest and strongest recovery ever recorded, nothing even close. With 1.4% inflation, the 30-year mortgage rate was at 2.4%, and the highest stock market in history. This is despite the pandemic. To date, I handed them back the highest stock market to date, after having just suffered with the rest of the world a pandemic, the likes of which nobody had ever seen before. We did an incredible job, and remember, far more people died of COVID under Biden-Harris than under President Trump. Many, many more people. We delivered an economic miracle, which Kamala and Joe turned into an economic disaster. just like they turned the border and indeed the whole world into a catastrophic surrender. Starting on day one, Kamala launched a war on American energy and orchestrated a nation-wrecking border invasion with illegal aliens pouring in from countries all over the world. They came in from countries that nobody ever heard the name of that country. Those countries, from their prisons and jails, there is a difference, from mental institutions and insane asylums, as well as record numbers of terrorists, human traffickers, and sex traffickers. Numbers that we've never seen before taking place over the last 3.5 years. Then Kamala cast the deciding votes on trillions of dollars in wasteful spending, which together with their terrible energy policies gave us the worst inflation perhaps in the history of our country. Nearly 2/3 of the jobs created under the Harris-Biden administration were bounce-back jobs. Bounce back. They were bounce-back jobs that I handed them from before the pandemic. This happens with pandemics. You have bounce-back jobs. The pandemic comes and it goes, and those people go back to their jobs. And just last week, Joe Biden admitted that on social media. I don't know if he knew what he admitted, but that's what it said. I wonder who drew it. Perhaps that person is no longer employed by the Democrats. But right now, it's even worse than that. Under Kamala Harris's policies, 3 million workers are now missing from the job force compared to 2020. 3 million workers, that's a lot. Over 500,000 fewer people have full-time jobs today than just 1 year ago, and 100% of the net job creation in the past year has gone to illegal migrants. Think of that. 100% of the jobs created under this administration has gone to illegal migrants that came into our country. Joe Biden and Kamala Harris formed the worst presidency and vice presidency by far in the history of our country. This election will decide whether we reward Kamala Harris with re-election and 4 more years of crime, economic calamity, and international humiliation, or whether we change that direction and once again build the greatest economy in the history of the world, which we had during the Trump administration. Kamala Harris is the first major party nominee in American history who fundamentally rejects freedom and embraces Marxism, communism, and fascism. You're learning about this. You'll find out nobody knew who she was. Just a few months ago, they didn't know who she was. She is promising communist price controls, wealth confiscation, energy annihilation, reparations, the largest tax increase ever imposed, and mass amnesty and citizenship for tens of millions of migrants who will consume trillions of dollars in federal benefits and destroy Social Security and Medicare. They will be destroyed. They're already putting them into your Social Security and Medicare rolls. I am promising low taxes, low regulations, low energy costs, low interest rates, secure borders, low crime, and surging incomes for citizens of every race, religion, color, and creed. My plan will rapidly defeat inflation, quickly bring down prices, and reignite explosive economic growth. Kamala Harris will take more money out of American pockets. My plan will leave the typical family with many thousands of dollars more than they have right now. First, I will end Kamala Harris's anti-energy crusade and implement a policy of energy abundance, energy independence, and even energy dominance. We have more liquid gold under our feet than any other country, including Russia and Saudi Arabia. We'll be using it. My plan will cut energy prices in half or more than that, within 12 months of taking office. It will be an economic revival of our country like no one has ever seen before. Energy was what caused our problem initially. Energy is going to bring us back. That means we're going down and getting gasoline below $2 a gallon, bring down the price of everything from electricity rates to groceries, airfares, and housing costs. That's why OPEC and the Arab nations, and we're very honored to have some of my friends here with us today from that part of the world, but they're working very hard despite being here, that I not be your president. They don't like me. Meanwhile, Kamala Harris can't bring down the price of anything because her energy policies are driving up the cost of everything. Everything is up, way up. Starting on day one, Harris and Biden opened up the Russian pipeline called Nord Stream 2, which nobody have ever heard of until I got involved and said, what about Nord Stream 2? And nobody knew what I was talking about. Largest pipeline in the world, Russian pipeline. But I had it closed. It was shut down. Putin was not happy. We shut it down. They came along, and the Keystone XL pipeline was shut down by them. So they shut down the Keystone, and they immediately gave Russia the right to start rebuilding the Nord Stream 2, the biggest pipeline you've ever seen. We re-entered the horribly unfair to the United States through them when they came back. Paris Climate Accord, so unfair to us. We pay trillions of dollars. Other countries pay nothing. As soon as he came back, he went back into it. I got us out of it and reduced the area of the federal lands available for drilling by 80%. I did that. If I was president, oil production today would be 4 times higher than it is right now. Would have been 4 times higher. Right now, we'd be doing 4 times as much. And remember, we had ANWR, perhaps the largest drilling site in the world in Alaska, which everybody wanted to get approved, but they weren't able to do it. Ronald Reagan fought so hard to get ANWR. He couldn't do it. And it was easier in those days than it is today with all of the environmental concerns. But they came in their first few days in office, they terminated ANWR, amazingly. Biggest drilling site, we think, in the world, bigger than Saudi Arabia, bigger than Texas. We got it, and they terminated it. Under the EPA's so-called power plant rule, more than 50 power plants have been shut down since she took office, and virtually all coal-fired power plants will be shuttered in the next couple of years, setting the stage for a catastrophic energy shortfall, which we already have, that will make inflation far worse than it has ever been. They want to close down our power plants, and we don't have power already to address this dire energy crisis that Kamala and Joe have created. I will immediately issue a national emergency declaration to achieve massive increase in domestic energy supply, which you're going to need. Electricity is desperately needed for AI. AI, controversial, but we got to be the top of it. And we would need, hard to believe, twice the electricity that we currently have right now for everything in order to be dominant. And China is already building massive electricity producing plants. We haven't even thought about it. We will think about it, and I'll get it done on an emergency basis. So we'll be the leader in AI and every other form of technology. With these sweeping authorities, we will blast through every bureaucratic hurdle to issue rapid approvals for new drilling, new pipelines, new refineries, new power plants, new electric plants, and reactors of all types. Prices will fall immediately in anticipation of this tremendous supply that we can create rather quickly, and we'll be the leader instead of the laggard. Second, to further defeat inflation, my plan will terminate the Green New Deal, which I call the Green New Scam, greatest scam in history probably, a $10 trillion scam that we waste, we throw like throwing money right out the window. It actually sets us back as opposed to moves us forward. And rescind all unspent funds under the misnamed Inflation Reduction Act, which the Democrats agreed after it was approved that it wasn't for that purpose, it was for other purposes like giveaways. Kamala spent $7.5 billion to build 8 charging stations. Think of a charging station like a fuel pump with electricity coming out of it. 8 charging stations in the Midwest for electric vehicles cost billions and billions of dollars, 7.5.
Live sounds Donald Trump, the former president of the United States, speaking before the Economic Club of New York. We wanted to let that breathe for a while to see if you might get to the headline that the Wall Street Journal brought to us a little while ago, and that brings us to the corporate tax rate. Donald Trump reportedly now floating 15% corporate tax rate for those companies that continue to operate in the U.S. We heard a lot there, though, some of it on the teleprompter, much of it off the prompter. As the former president tries to fill in the blanks on some of his economic policy proposals, he spent more time talking about Kamala Harris before the crowd today. Said she wants to defund the police, have totally open borders, ban fracking in Pennsylvania and everywhere else. All 3 of those appear to be factually incorrect. As she's made clear, she wants to fund the police, as Joe Biden likes to say, and as has been made clear, does not want open borders based on the proposals that she has put forth. She has also changed her position on fracking in Pennsylvania and everywhere else for that matter. Former president went on to say that Kamala Harris wanted to raise your business and corporate taxes, and unbelievably, he said, seek a tax on unrealized capital gains. That's an item that we've actually not heard from Kamala Harris that has come from the Biden administration, but was not included in her conversation yesterday, proposing a slightly lower capital gains tax rate for the highest earners, slightly lower than what Joe Biden proposed. There was some sunlight there. That's what made news, the battle of the tax plans. Trump went on to say a lot more, though, that Kamala Harris is promising communist price controls, wealth confiscation, energy annihilation, reparations, the largest tax increase ever imposed, and mass amnesty and citizenship for tens of millions of migrants who will destroy Social Security and Medicare, and we have no evidence to support those claims. So here I am, Mr. Fact Checker again. We're going to get back to the Economic Club of New York because it's the Q&A that we really want to hear to try to draw out Donald Trump on some of the proposals that we've been discussing. As I told you a little bit earlier, the club's chair, Robert Steele, is going to be holding forth in what they're billing as a bit of a fireside chat here. With me in Washington is Mike Dorning, Bloomberg Politics reporter and editor, and great to see you. Mike,
great
as
to
we
be
try
here.
to kind of assemble these 2 models, we're getting this slow drip from both campaigns to flesh out their economic policy proposals. Did we learn much new today other than that corporate tax rate?
Well, the main thing was the Wall Street Journal headline suggesting that he would offer a lower tax rate. But that just, both what Kamala Harris did yesterday and what he may do today reinforce, unlike most of what Trump was saying today, an actual difference between the 2 candidates. When it comes to corporate taxes, Kamala Harris wants to raise them. Not as much as Biden wants to raise them, but she wants to raise them back closer to where they were before Trump put in his corporate tax cuts. Trump wants them even lower than he previously lowered them. He wants corporate tax rates in general to be a little bit lower even than after the Trump corporate tax cut, and he wants an even lower corporate tax rate for companies that manufacture goods in the U.S. So there you see a clear distinction in the economic outlook between the 2 candidates.
Finally finding some sunlight here with specifics. That's what we're interested in on Bloomberg. Kamala Harris yesterday talking about capital gains taxes. 28% on people earning $1 million or more compared to about 40% that Joe Biden was calling for. Does that help to solve some of the worry that Wall Street has about a potential Kamala Harris administration? This one hits close to home.
I think that it may, to some degree, make her Wall Street supporters and her tech world supporters more comfortable with her from a business standpoint. Most of what she's been leaning into, though, are trying to help small businesses, which fits in better with the general Democratic critique of the problems with our economy. The Democrats want more competition in the economy, so she's focusing more on lifting up small businesses, which obviously, create more competition in the economy. But she is trying to scale back some of the aspirations that Biden has to increase capital gains taxes and
unrealized gains is a different matter, right? We haven't heard from her on that. Donald Trump today said she is pursuing that, but we don't know that.
Yeah, but a lot of these changes with Harris, it wasn't like she was actually going to ever be able to do what Biden has wanted to do and couldn't even do with, like, Democrats having a trifecta of
so maybe
control
this
of
is
the
a more
House.
realistic approach, if not a more conservative or moderate
basically
one.
she's moderating her stance to no longer have something that isn't going to happen anyway. So it's closer to what you might actually be able to get. I kind of doubt that she would even be able to get what she wants to get.
Yeah, well, you bring up, or you refer to something important. We're talking about all this stuff like whoever gets elected is going to happen. You need Congress to make tax law.
Yeah.
And these approaches might be impossible for both Donald Trump and Kamala Harris if they're elected, depending on the balance of power on Capitol Hill.
I would say that Trump has a better chance than Kamala Harris does of getting more of his program through.
What if he's got a Democratic Senate?
If he has a Democratic Senate, that's not likely. But I don't see a Democratic Senate as very likely if Trump wins. It's not even necessarily that likely even if Harris wins. But Trump, if he wins, has a better chance of a kind of a trifecta, number one. And number two, the Republican lawmakers are mostly afraid of crossing him. So he has more ability to get the Republican members of Congress in line to do what he wants than Kamala Harris has ability to get sort of the most conservative or least liberal, depending on how you look at it, members of her party in line.
Really interesting as we spend time with Mike Dorning. With eyes on Donald Trump, if you're with us on YouTube, you can see he's speaking at the Economic Club of New York. This will resolve to a Q&A session that we want to bring you live here on Balance of Power. Can we bring Rick into this conversation? I'd love to, if we can. Rick Davis, of course, Bloomberg Politics contributor, a longtime Republican strategist and partner at Stone Court Capital. Great to have Rick on board, as always. As we wait for the Q&A, Rick, it's good to see you. I wonder your thoughts on the battle of the taxes here. That's what this really has turned into this week. Who's winning it?
Yeah, it's really pretty interesting to me that both sides are trying to claim the low ground on taxes. Who can out tax cut the other. And yet at the same time, they're all offering these massive government spending programs within their own platforms. And how are they going to pay for all this stuff? I mean, nobody. I was listening into the Trump speech. I didn't hear anything about the deficits, and I've been waiting to hear from Kamala Harris about government spending because they both basically are taking the approach that they can write checks that bust the budget and don't seem to care about that. They don't seem to care about the integrity of the Social Security system, Medicare, Medicaid. The federal deficit. I mean, these are not insignificant issues. And by the way, not insignificant issues to American voters. And yet they're not even in the discussion in the first week of September in the middle of a presidential campaign.
Less than a week out from the big debate. Rick, he just said it out loud. Companies must make products in America to get the tax rate of, 15%. So there it is. Donald Trump also making news on this idea that Elon Musk floated in his interview, if we're calling it that, on X. Donald Trump says he will create a government efficiency task force. Pretty interesting idea here. Mike, to bring someone like Elon Musk, I don't know if he would be involved, to essentially audit the spending of tax dollars. Isn't that kind of what Congress already does?
Well, in theory, that's what Congress is supposed to be doing. Yeah. But there's been, it reminds me of Al Gore reinventing government. It's periodically you can have bring people in or someone inside government to do a review of things that might lead to changes. It might not lead to changes, but it's not an unreasonable idea. It's just a question of what would that actually accomplish. Sometimes you can reorient the government. Sometimes you can't. In theory, though, we elect people to do that, the president and Congress, and this is kind of like going to McKinsey or something if you're in a corporation.
What do you think of this, Rick? Are we just throwing everything at the wall at this point, or are these real proposals?
Look, I agree. I mean, Mike's point is we've had commissions that tried to solve the deficit problem, tried to cut the growth of government, tried to fix Social Security and Medicare. And usually their reports, collect dust on the desk of Congress and the administration. So it's not a bad concept to want to reduce the size and scope of government. There's no question that it's bloated over time. And Elon Musk might as well be the co-chairman of this campaign at this stage. I mean, I remember starting this campaign wondering, what will he do? And now he's all in. The chips are in the middle of the table. And that could be a good thing or a bad thing. I mean, I don't think it's going to help reach out to union voters if you're Donald Trump, regardless of whether they're, sort of the leaders of the unions or the rank and file, because we know the first recommendation that's predictable from an Elon Musk commission would be get rid of unions in the federal government. A lot of my friends would applaud that, but how you implement that? These are statutory programs. You have to take them to Congress if he wants to cut them. So it's a really good thing to talk about, because I don't think Republican, Democrat, or Independent or Vegetarian don't disagree that the government's too big and ineffective. So I think they're playing into the right concept. I'm just not sure that Elon Musk, as the leader of the band, is going to really play the music people want to hear.
Okay. Well, we heard from the group Taxpayers for Common Sense on this, Rick and Mike. They actually delivered an open letter, this being 2024, in podcast form, an open letter to Elon Musk. They've been at this for 30 years, of course. This is on the Budget Watchdog All-Federal podcast. It's time to light the fires and kick the tires on a fiscal commission that will protect American taxpayers, they say, but keeping Elon Musk, Donald Trump, and Congress on the correct trajectory toward fiscal success is truly rocket science. Mike, are they onto something here?
I mean, it's hard to do. For instance, one of the, you can look for waste here and there in government, and there's probably plenty of it. But the big questions that really have to do with our fiscal trajectory are things like Social Security, Medicare, and tax rates. And people know what the trade-offs are there, and the consensus politically is don't do anything that can help the fiscal trajectory, because it's either painful to raise taxes or it's painful to cut Social Security or Medicare benefits. And so let's just not do either and, see what happens in the future. That's basically what the American consensus is.
It's interesting. He's actually accusing today in this speech Kamala Harris of busting Social Security and Medicare by allowing illegal immigrants to come and exploit the benefits. But neither campaign's going to touch either of these entitlements, right?
Neither campaign's going to touch the entitlements.
It's back in the lockbox.
The Congress isn't going to want to do that if neither Trump nor Democrat is in favor of that. I would also say that, on the immigrants question, arguably if you have younger immigrants coming in, and they are mostly younger immigrants, that actually does help the imbalance between retiring people and working people.
Rick, talk to us about style here. We've spent a bit of time on substance to the extent that we understand proposals being thrown out there from both campaigns. Donald Trump speaking to the Economic Club of New York. This is not a rally in middle America where they chant lock her up, but he is still referring to Comrade Kamala, calling her a communist and a Marxist, running through a number of accusations that we tried to fact check on the way out of the speech here. I remember when he spoke to the Business Roundtable, some of the comments we heard from CEOs. Is this the right room for this approach? How's he doing with tone and tenor? If this were Joe Biden, that's what everybody'd be asking.
Yeah, he isn't speaking to the room. He's speaking to the media, and the reality is he could care less what those guys in the room think. They're not really his types. His base and where he's going to get votes is in Middle America, rural, suburban areas, and it's not represented in New York's economic club. So he's taken the opportunity not to pander to the crowd, and this is what he does well. He's not situational. He talks over everybody's head. I'm sure there are a lot of people who are scratching their head right now in the room who are very sophisticated, don't need to be educated on some of these issues, and feel like they're being pandered to. But that's what you have to expect. I mean, you couldn't fact check this speech. The half of it that I heard probably had 20 lies in it, and like, so who's going to do that? And so, like, you just have to take him for what he is and apply whatever necessary filters you have. But there are going to be a lot of folks in that crowd scratching their head and going for an early martini this afternoon after witnessing this. But I must admit, it is a little bit of a deja vu in that, in 2008, when we ran the McCain campaign, we did a very similar thing around the same time. And a week later, we had a global financial crisis. And this was the week that John McCain basically said, after hearing from these guys, assembled in that room, a very similar cast of characters, actually, that, we're headed to a disaster. And he suspended his campaign, came back to Washington because he thought fixing the economic problems of our country were more important than running for president. Well, we've gone a long way since then.
How true. And I can only imagine Rick Davis's first thought when Senator McCain told him that's what the plan was. Hey, let's add the voice of a Democrat to our great conversation here with Rick Davis and Mike Dorning. Laura Fink is with us, Democratic strategist, founder, CEO of Rebel Communications. Laura, great to have you with us here on Bloomberg. We've been talking about some of the policy proposals that we've heard here, as this really seems to center around a battle of the taxes. There's going to be a rewriting of the tax code one way or the other next year. Is Kamala Harris bringing enough here, talking about, for instance, a lower than expected capital gains tax rate for the wealthiest Americans, to really drive this debate that Donald Trump has had his hands around pretty well so far?
Well, I think you see her gaining in terms of polling on the economic issues the more people get to know her. And I think this is just one more example of that. When you're talking about the corporate tax rate, and she introduces something akin to what was in place and what was backed by Ronald Reagan, that's a pretty reasonable stance with respect to evening out the tax code and ensuring that investors are paying their fair share, that Warren Buffett's secretary isn't paying more than the rate of the folks making $1 million plus in terms of their investments. And I think it's reasonable in the sense that I don't think it's going to decrease investment. You're not going to have the venture capitalists from Silicon Valley taking their toys and going home. They're going to be on the hunt for the next unicorn. So this is something that's reasonable. It's something that you're seeing praised about overall her economic policy being praised by the likes of Goldman Sachs and Moody's and the Penn Wharton economic analysis. Those are not liberal organizations. So I think you see a real balanced approach from the Harris campaign.
I hear you. Goldman Sachs, not liberal. I'm not sure what you mean. This is important. Let's talk about that Goldman Sachs note. Rick, your thoughts on this. The tax policies touted in the election could have a big impact, will, one way or the other, on earnings, corporate earnings. We think about the trajectory, the future of the S&P 500. This is right down the middle here, as they estimate profits could shift in the ballpark range of 5 to 10%, depending on who is elected and which policies are enacted here. Donald Trump's promise to cut the federal tax rate here to 15% from its 21 would raise S&P 500 earnings by 4%. Kamala Harris's proposal to lift the rate to 28% would cut earnings by about 5%. Does anything else matter to the people in that room, Rick?
I think that there are a few things that matter to people in that room, but this is obviously something that's going to have a material impact on how they look at these candidacies. If you believe that it's just about earnings and that's how you're going to make your political decisions, then you're going to have that analysis to go. And by the way, I think it's a really healthy thing in the political environment to have organizations like this doing scoring like this, because I must admit, in the past, we haven't really had clarity around these policies and how they would impact corporate America or taxpayers or consumers. And so I think, this amount of information is very helpful. But I would be surprised, just using this as a big focus group, here in New York during this economic speech, how many people in the room would actually be motivated to vote on the issue of corporate earnings alone? Because remember, there are a lot of things that go into that corporate earning package, not just taxes. And, whether it's political instability around the world, or unemployment or inflation, I mean, all those things are going to be a basket of decisions that they're going to have to follow.
Yeah, boy, interesting. I suspect a lot of them have terminal subscriptions. Hey, Laura Fink, thank you for being with us. I'm sorry we didn't have more time, but we're going to have both Rick and Laura back in our second hour here on Balance of Power as we welcome our global television audience to the conversation as well. I'm Joe Matthew in Washington with eyes on the former president continuing here, riffing off the teleprompter before the Economic Club of New York. We'll let you know if any news continues to emerge, but the big headline here, and some of you saw it coming, there's been expectations. Corporate tax rate, again, 15%, but the companies to receive that tax benefit will have to be based here and producing products here in the U.S. Kaylee Lyons is on the way in. Hour 2 coming up next on Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
They're drawing lines on taxes. Welcome to the fastest show in politics as the two presidential campaigns offer competing proposals on rewriting the tax code. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us on the Thursday edition of Balance of Power on Bloomberg TV and radio. Kaylee, Donald Trump just now confirming his take on the corporate tax rate many saw coming, 15%. We can fill in another blank here in our dance card.
Yes, although to get that 15%, you have to be a company that actually makes your products in the U.S. This is all part, he says, of trying to restore American manufacturing. He says he'll be using tariffs for that same purpose, to encourage production in the United States. And of course, that's not all we've heard from Donald Trump. While he's speaking at the Economic Club of New York, he's made a number of misstatements about things like the border, for example. But he also announced a new government efficiency task force or commission. And guess who's going to be leading that one, Joe?
Is his name Elon Musk? That was his idea, right? This brings us back to that interview thing that was like on, right? Remember, we listened to this on the train. We didn't know what they were talking about, but it's actually happening. He says if he gets elected. Can he do that without Congress, I guess is my question, because that's supposed to be their job.
Well, that's an excellent one. And on that point, of course, if you're going to be rewriting the tax code and making changes, you need congressional approval to that, too. That goes for not just Donald Trump, but of course, Kamala Harris, as she outlined yesterday, raising the capital gains tax rate on high earners. She wants a higher corporate tax rate. Again, you need both chambers to be going along with the Oval Office on that one.
Paging Ways and Means, Bailey.
Indeed. Well, right now we're not paging Ways and Means. We're actually paging Charlie Pellet because we need a check on the markets from up in New York. Hey, Charlie.
Well, hello there. We are looking at a decidedly mixed market right now. The Dow, the S&P, they're both lower. NASDAQ holding on to a 16-point gain right now, up by about 0.1%. Stocks, however, lost traction. Wall Street's anxiety running rampant less than 24 hours before the highly anticipated U.S. jobs report. Our Michael McKee will have a whole lot more on that topic coming up in just a moment here on Balance of Power. S&P down 23 now, down 0.4%. The Dow down 0.7%. NASDAQ up by 0.1%. 10-year at 3.73% with a 2-year 3.75%. Gold up $15 the ounce, up by about 0.6%. And West Texas Intermediate crude flat right now, 69.20 for a barrel of WTI. The stock price of Donald Trump's once high-flying media company is sinking just as the lockup period from its blank check deal is about to end, potentially flooding a saturated market with even more shares. NVIDIA shares advancing today, up by about 0.8%. A handful of tech stocks scoring gains. After earnings, HPE, Hewlett-Packard Enterprise, down 5.6%. After the close of trading today, we will be hearing from both Broadcom and DocuSign. Shares of both companies are trading lower. The New York State insurance regulator is warning American Transit Insurance Company is at risk of failure. Hardly a household name. However, it insures roughly 60% of New York City's more than 117,000 commercial taxis, livery cabs, black cars, and ride-share vehicles. Recapping, stocks lower, S&P right now down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That, Joe and Kylie, is a Bloomberg Business Flash.
All right, Charlie Pellet up in New York. Thank you so much. New York, of course, where Donald Trump is spending his day today, as he is still speaking before the Economic Club of New York, outlining some new economic policies, which Joe and I have mentioned, but also threatening what could happen to the economy under a potential Harris administration, including what he just described as facing fiscal Armageddon. A lot of this is coming down, of course, to the fiscal policies these two campaigns have put out there. But we've spoken with a lot of economists, budget watchers on this program and others here on Bloomberg, Joe, and we do know that if it's all about fiscal responsibility, $10.5 trillion worth of tax cuts over the next 10 years is going to be very hard to pay for.
That's for sure, and it's not always enough to just say that you're going to grow out of it. Now, it's interesting when you think about the notes that we got from Goldman Sachs over the past 24, 48 hours here, the different ways you can slice this. There was one economic forecast from Goldman predicting that a Trump presidency would damage gross domestic product due to the tariff and immigration plans to an extent that would not happen in the Harris campaign. Yet we also have competing research, if we can call it that, with an eye on the markets here and S&P 500 earnings. Donald Trump's promise to cut the federal corporate tax rate, as he just said, to 15% from 21 would raise earnings by about 4%. Kamala Harris's would cut it by about 5%. Kaylee, I think we need a ruling from the ref on this. He's in New York as well. Michael McKee, Bloomberg economics and policy correspondent. Michael, which one is Wall Street paying attention to?
That's a good question. It's hard to ignore Donald Trump, but his plans are sort of incoherent, and economists would basically tell you they're not going to work. So you would say Kamala Harris, but Kamala Harris has only released some plans. And the problem is at this point that nobody knows what will actually pass. There are a lot of things being thrown around that make for good sound bites and political points, but that's not what's going to happen. And a prime example of that is something they both agree on, which is no tax on tips. It's a bad economic idea. It would lead to distortions in the way the economy is taxed, and it's an unfair idea because minimum wage workers in the back of the kitchen don't get any tax breaks. So that's not going to happen. But so how do you evaluate plans that are not going to happen? 15% is not going to happen as a corporate tax rate. The Ways and Means Committee and members of Congress have already made that clear. So how do you evaluate these plans other than, do they make any sense at all? Could they be considered?
Well, and Mike, yes, none of us can predict the future, including you, me, Kamala Harris, and Donald Trump. But can't we use history in the past as a guide here? Because we did see enacted into law tax cuts during his first administration with the 2017 package that he would now like to make permanent. So when he makes the argument that tax cuts like the ones he would like to pursue again in a second term will be paid for because of the growth they generate, is that what we saw the first time around?
That is not what we saw, and historically, that is not what we've ever seen. Tax cuts do not pay for themselves. That's a well-established economic fact. Growth is never big enough, high enough to pay for itself from additional tax cuts. In the first year after Trump's tax cuts took effect, we actually saw tax receipts in the country go down some. So it's income tax receipts. And we didn't see any real increase in investment. Some stuff was brought forward, but the real benefit went to consumers who had a little bit more money to spend, and that juiced growth a little bit. But overall, tax cuts don't have the impact that all politicians like to give them. They are a drag on the economy.
Well, what are the research notes saying this morning? What are the analysts thinking about this approach to capital gains that we heard from Kamala Harris yesterday? Higher numbers than they want to see, but not as high as Joe Biden. It seems to be this attempt to moderate a slightly liberal approach here. Mike, how's it washing over the street?
Well, I think people like the idea that she came down from the Biden position, but of course it would be up from where we are now. It becomes a little bit of a religious discussion in the sense of what's fair. Is it fair that wealthy people who make their money off of investments can pay a lower tax rate than the guy who has to go to work and lay bricks for a living? And so that's the real dilemma for Congress to decide is, do we want to tax these people on a sort of an equal basis? If so, you're going to have to raise the capital gains tax. But where you raise it is a combination of a lot of things, including how much money do you have to raise because you've cut taxes elsewhere. So where she is it's hard. It's better, according to the people on Wall Street who would like to see a little bit less taxation, but it doesn't really tell you where you're going to end up. And the other thing that she did propose yesterday, though, gets a lot of credit, and that is the small business tax credit for businesses. It's not a reduction in taxes, it's a credit, so you actually can get money back if you start a small business and meet the conditions. And that is seen as a very good way to maybe boost growth at the low end of the economy.
Well, Mike, in addition to tax policy, before we let you go, we heard Donald Trump talking about tariffs once again, saying that he'll use them to encourage production in the U.S. Tariffs, of course, unlike tax policy, may be something Donald Trump, if he uses certain presidential powers when it comes to economic crises, for example, he could enact all on his own. And especially considering we're analyzing jobs data today, awaiting the big non-farm payrolls report tomorrow as a guide to tell us when the Fed will cut rates, or rather by how much, how soon, how quickly. Are these kind of policies he's outlining actually going to mean that the Fed's cutting cycle might not last very long?
Well, that's one way to look at it, is that his policies will be inflationary. That is the conclusion of almost all the Wall Street firms that have looked at it, because it's Americans and businesses in America who pay the tariff cost and not the foreigners. So it would add to inflation. How fast? Hard to say, and so hard to know exactly what the Fed's timing would be on it. But he can impose some punitive tariffs, as he did on China, as Joe Biden did on China, in situations where there is provable unfair trade. He can't impose the 10 to 20% universal tariff without congressional action, and that's probably not going to happen. But the bottom line is even if you impose all these tariffs, you can't raise much money, and whether Americans pay it or foreigners pay it, it would be only a small fraction of what is lost by the income taxes. So it doesn't really make any sense. The U.S. government's budget was much, much smaller when, as he quoted William McKinley today, saying that tariffs would work. Under McKinley's presidency, tariffs raised most of the money, but that's why we went to the income tax shortly after McKinley was gone, because it didn't raise enough money.
All right, Bloomberg economics and policy correspondent Michael McKee, thank you so much for helping us analyze what we're hearing from both Donald Trump and Kamala Harris in terms of the policy they'd like to pursue. We appreciate it. Now, I would point out that Donald Trump's prepared remarks have just ended at the Economic Club of New York. He is now expected to begin Q&A with the chair of the Economic Club of New York. And of course, he's going to have to answer questions here, very much like he will have to do next Tuesday on the debate stage with Kamala Harris. In some ways, this may be preparation for pushback he could get on his economic policies on Tuesday.
Yeah, it's been suggested as much. Maybe this is his debate prep right now, live from New York. The club's chair, Robert Steele, is going to be asking the questions here as they find their chairs and get things settled. We're going to bring some of these comments to you from the Economic Club of New York. If you're just joining us, it's great to have you on Bloomberg TV and radio. Of course, Thursday edition, Donald Trump making the headline, corporate tax rate 15%. That is the takeaway from what we've heard so far. And Kaylee, we're going to go back now, put an ear on this conversation with Donald Trump live in New York.
Of Ukraine, where for once we got the support of all our allies. So my specific question is, would you strengthen or modify any of these economic sanctions programs, particularly Russia, including the pipeline you mentioned?
Well, it's a great question. The problem with what we have with sanctions, and I was a user of sanctions, but I'd put them on and take them off as quickly as possible, because ultimately it kills your dollar and it kills everything the dollar represents, and we have to continue to have that be the world currency. I think it's important. I think it would be losing a war. If we lost the dollar as the world currency, I think that would be the equivalent of losing a war. That would make us a third world country, and we can't let it happen. So I use sanctions very powerfully against countries that deserve it, and then I take them off. Because, look, you're losing Iran, you're losing Russia. China is out there trying to get their currency to be the dominant currency, as you know better than anybody. All of these things are happening. You're losing so many countries because there's so much conflict with all of these countries that you're going to lose that, and we can't lose that. So I want to use sanctions as little as possible. One of the things that we have with tariffs is that I'll say to them, you don't honor the dollar as your world currency. Is that right? You're not going to do it? No, we're not. I said, that's okay. I'm going to put tariffs all over your product. And they're going to say, sir, we'd love to honor the dollar as the world currency. You know, tariffs, in addition to monetary and the money that we'll take in, which will be bigger than you've ever seen in this country before, gives you tremendous political power for something like that. As an example, I stopped wars with the threat of tariffs. I stopped wars with two countries that mattered a lot, A lot of people would have been killed. And I threatened tariffs coming into the United States if they don't make peace. And we made we didn't have conflicts like you have right now. We had very intelligent people. But the biggest threat you have is you lose that currency, and we have lost something that you'll never get back. And we can keep it if we're smart, but they use it too much, and then they just forget about it. And these countries like Russia, it's going out now and doing its own thing, and they're going out bragging about how they don't need us anymore, et cetera, et cetera. The sad part about Russia is that Ukraine would have never happened if I was president, so we wouldn't really have to be talking about sanctions, but it did happen. And one of the things I'm going to do, a little bit relevant to your question, is if we win, I believe I can settle that war while I'm president-elect. Before I ever get into office, I can get that war settled and get that war stopped, because it's a horrible, horrible war. And far more people are killed in Ukraine, far more people than you're realizing. They'll knock down this massive building, amazing, the size of these buildings, they'll knock it down, they'll say nobody was injured. No, a lot of people were killed. The real numbers are far greater than what people are looking at. So I think it's a very important thing. Sanctions have to be used very judiciously, and you can win. We have things much more powerful, actually, than sanctions. We have trade, but we cannot lose our dollar standard. Very important. Thank you very much.
Great. Sander?
Thank you, Mr. President, for all the details on your economic policy. As you alluded to, tariffs are the other side of sanctions. And given that China is our major trading partner with our largest imbalance and possibly our chief national security threat to the United States, how can we better institutionalize trade policy and national security policy to be coordinated?
So I had a great relationship with President Xi of China, really very close relationship. Now, look, he likes China, I like us, but I don't want to sound foolish. He was my dear, dear friend. He's a tough guy. He's a fierce person. I say very smart. When you say he's smart, the fake news goes crazy. He said President Xi is smart. And I say, he controls 1.4 billion people with an iron fist. He's smart. But we had a very good relationship with China until COVID. And when that came in, it was a whole different ballgame as far as I was concerned. We made a great China trade deal, maybe better than the USMCA, and I'd never talk about it because what happened with COVID for the whole world, $60 trillion and, deaths, 70 million, 60, nobody even knows how many deaths. And it all came out of Wuhan. So it changed my relationship. But I think I'll have a great relationship with China. I had one before. And they respected us, but they respected us because they no longer thought we were fools. They used to think we were fools because we built China. They would take over $500 billion a year and use it for their military and other things, and we got nothing out of that. We got some cheap product. You can buy 19 pencils instead of 2. Who the hell cares? You can buy 16 dolls for your daughter instead of 2 nice dolls. And we got very little out of that relationship. They got a tremendous military power, and they still have it today. So, but I believe we will have a very good relationship with China and with a lot of other countries that we're not getting along with too well today. And things are going to straighten out. We're going to get them straightened out very quickly. Very important that we get along with the rest of the world. We have things today called nuclear weapons. I rebuilt our whole military, including our nuclear capability. And so I got very familiar with it. And, I say this often because I had an uncle who was the longest serving, I believe the longest serving, I was told that by MIT. But he was there 39, I guess, or 41 years, longest serving professor in the history of MIT. And nuclear was something he knew a lot about. And we used to talk about it. I'd say, Uncle John, there's no way. He was telling me about this incredible power that was being unleashed potentially. And I say, Uncle John, you could never. And you know what? He was very modest because I've seen the destructive capability. And this world is going to have to get along because if that's ever unleashed, we already have too many countries that have at least remnants of it, some of it. but probably 5 countries if you think. And Kim Jong-un, when I went to the White House after winning in 2016, I sat with President Obama, which is a ritual. And you sit and you talk. And I said, what's the biggest problem? He said, North Korea is the biggest problem. I don't think it's solvable. I said, have you tried calling him or talking to him? And actually the answer was yes, and he wasn't responded to. But I did, and we were very safe. It started off a little rocky, if you remember. Little Rocket Man, I called him, and he called me things too. He's got a red button on his desk. I said, I have a bigger red button, and my red button works. I said, and then it started getting a little nicer, and then one day I got a call that they'd like to meet, and it was a great thing. We had a great meeting. We had 2 meetings, actually 2 great meetings, summits, and we had no problem with them. Now they have a problem because they're not liking this administration. They don't respect this administration at all. So we have to get along. We have to get along. We can't have World War III. You're going to end up in World War III. Just like you should have never had Russia go in. It would have never happened if a competent person led us. It would have never happened. He led them into it. And I'm not blaming Biden. But you know what? What he was saying was exactly the wrong thing. I said, we're going to have an invasion because of a lot of the rhetoric. It was stupid rhetoric. But it would have never happened, not only for that reason. Oil was down low. You know, oil was almost at $100 a barrel. So Putin is one of the only people. I mean, nothing's easy in life. But Putin at $100 a barrel, war works. At $40 a barrel, it didn't work at all. So we're going to get back to a intelligently run place, a place where other countries aren't using the word nuclear. That word was never talked about because I knew the power of it. And I talked to Putin about it. I talked to President Xi about it. I think we were going to you remember the talk where we were going to reduce nuclear capability substantially. All 3 of us, we're going to start it. We're going to reduce very substantially. And then we had the election, and after the election, they didn't talk about that or anything else, frankly. But we have to be very, very
Donald
careful.
Trump, speaking to the Economic Club of New York, once again wanted to put an ear on some of the Q&A that they are now underway with, running well over schedule and getting to be a bit off topic. So we wanted to just reassess where we are at the moment. I'm Joe Matthew alongside Kayleigh Lyons in Washington. We thank you for being with us today on Balance of Power. Kayleigh, just to get back to the question that the former president was asked there, we took a lot of turns into various topics. This was, given China is our major trading partner and chief national security threat, how can we coordinate tariffs framed as the other side of sanctions? Mm-hmm. He did speak to that momentarily. He said they have to be used very judiciously, which is interesting because this is, of course, the candidate calling for across-the-board tariffs on China. Yeah, and of course the answer has veered into other areas, including talking about nuclear power and the COVID-19 pandemic, in which he overstated the number of deaths from COVID. He said 70 million. Actually, the number is just over 7 million. That may have just been a misstatement. Yeah, sure. But we should note that. And it does kind of bring us back to this notion that we are now out of Donald Trump's prepared remarks and his reading off the teleprompter. This is him answering off the cuff, as we will see him do on Tuesday night on a debate stage in Philadelphia with Kamala Harris at the other podium. This is why some were framing this as debate prep, although I will say in his prepared remarks, as we call them that, Kayleigh, he was off the prompter for a lot of that speech earlier, which is why it went long and far off topic at some point. But this has kind of become the new approach, right? It's exactly what we saw even in Milwaukee in his acceptance speech on that Thursday night. So let's play this to our political panel now as Donald Trump continues this Q&A session at the Economic Club of New York. Joining us, Rick Davis, partner at Stone Court Capital and Bloomberg Politics contributor, together today with Laura Fink, Democratic strategist and founder and CEO of Rebel Communications. Thank you both so much for being here. Rick, first to you, if we are looking at this in some ways as emblematic of a debate, Donald Trump was asked a question that then he has to answer. He will be cut off, we understand. When his time is up, his mic will be muted. He is answering in a rather long-winded way the questions from those gathered at the Economic Club of New York. Can he do this same thing on Tuesday night, or will it backfire?
Well, first of all, I think we can predict that he will do this on Tuesday night because he does it every night. And so why change now? He doesn't want to actually do anything different for the debate. He eschews debate prep, which means trying to figure out how to do it debate style, and he will have a limit, right? Unlike the speech that went well over, they will cut his microphone off. And so that's going to be the question for him. He was asked a very specific question just now about, how to use sanctions against China, who's become a very aggressive player in the Southeast. And he went on and on and on about what a great guy Xi is and what a great relationship he's got. Didn't answer the question at all. And so I think that's what we can expect. And so the question really to me isn't what he's going to do, because we see it all the time. It's how is Kamala Harris going to react to that? I mean, is she going to fact check him? Is she going to attack him for not being responsive? Is she going to post him up for being, too kind to Xi? I mean, there's so many different ways of playing it from her angle, knowing that this is likely what she's going to see.
Well, Laura Fink, we'd love your take on this, because Kamala Harris's campaign was reportedly working overtime to undo one of the rules agreed upon in the first debate, which brings us back to the microphones here. They wanted unmuted microphones for 90 minutes so she could draw out Donald Trump, try to get him in a moment where she could call him out for interrupting, try to get him to say things that he might regret. How does this change the approach and the strategy as Kamala Harris now hunkers down in Pittsburgh to begin her prep?
Well, Kamala Harris has to play her game, and that's what she's been doing throughout the last 30 days, as we see her ascendant in virtually all, by any measure, of a campaign at this point. And so she really needs to continue to do that on the stage. Now, remember, a contrast is going to take place, because sure, we're used to seeing the Trump show, but the Trump show is changing. The word salads are increasing, the extremism is increasing, and the sort of aging patina of Trump is going to be on full display when the contrast is someone who is a former prosecutor who is in full command of what she says and how she says it. And I think Trump has to beware of that contrast, because it's going to become very clear to folks. So I think she's got to post up, as my colleague has suggested, on a number of things to take him to task on some of the issues that are central to what Americans' concerns are. And she has to, at the same time, exhibit the warmth that she's been showing on the campaign trail, so that Americans that don't know her as well can get to know her through this medium.
All right, Laura Fink and Rick Davis, our political panel today. Sit tight. We'll have more with them in just a moment. Now, this Q&A is still ongoing. John Paulson just asked Donald Trump about how revenue from his policies, like no tax on tips, might decrease, and what he estimates the impact of the fiscal deficit could be from those policies. He said, essentially, growth will be a way to offset that, and tariffs, to summarize his words. Of course, we heard from Michael McKee at the beginning of the hour here that there is no historical precedent for that actually working to fully offset the tax cuts.
And to grow out of it is asking a lot, and assuming a lot of Congress as well, when we consider rewriting the tax code here and some of the other initiatives that he has been talking about. I believe it was Maya McGinnis's group, the Committee for a Responsible Federal Budget, estimated between $100 and $200 billion in deficit spending on the no taxes on tips plan.
Yeah, the figures here are very important. And of course, that's what we try to bring you on Bloomberg Television and Radio and Balance of Power, and on our podcasts, including the Big Take DC podcast, where we look at the statistics that matter of all kinds. And to that effect, it doesn't just include money that the federal government is spending or raising in terms of taxes, but also what Donald Trump is working with when it comes to his campaign coffers. Right now, he does have a deficit with Kamala Harris's campaign, and that's where we find Saleha Mosin this week. She's diving into this issue on the Big Take DC. So obviously there is a cash gap, and we understand, based on the latest data, Saleha, that the Trump campaign actually spent $32 million more than it raised in the month of August.
Yep, his campaign and his team are having to dig in deep. Now, part of that had to do with the fact that it's a new Democratic nominee, a new rival, and Kamala Harris came and she had a lot of momentum, and so Trump and his team didn't add blitz to target specific voters. I think last month it was a lot of folks in North Carolina to try to counter that momentum. On the podcast, I actually spoke to someone who he looks deeply into the impact of political advertising. Have a listen to what he told us on the Big Take DC.
At this point, the campaigns are going to be spending all of this money to try to win that 2 or 3 or 4% of the electorate that might swing a little bit back and forth. That sounds like not a big percentage, But if the Harris campaign said, oh gosh, like I'm not going to spend all that money for 3%, then they'd lose. So it becomes the difference between winning the White House and losing the White House, whether you win those 3 or 4%. Then it makes sense why you might spend $300 million.
Hundreds of millions of dollars, a few votes that matter. That's where we're at. 60 odd days to go.
Well, to what extent is this a money fight versus an earned media battle? Donald Trump has a way of getting free coverage. So does Kamala Harris. And I wonder which one is more impactful to the undecideds who aren't easily swayed by things like commercials.
Joe, that's a fantastic question. And the thing is that we have very little to go on in history to point us in the right direction to make any kind of a real guess, because Trump blew that whole picture up. He learned in 2016 to use earned media in a way that no other candidate really had. And even now, the Trump team is running a very lean operation. They don't need a lot of money because they know they can count on earned media. And look, Kamala Harris comes in with a lot of momentum. Even with all of that momentum, the election right now is in dead heat.
Well, it's very true. But of course, that momentum also has led to a volunteer surge for Kamala Harris and the Democrats. They've been able to sign up tens of thousands of people to do things like knock on doors. Money is one thing. It can buy you ads. It can buy you staff. But how else should we be thinking about the personnel factor of this equation?
Yeah, you know, one of the things that we talk about, Laura Davis and I talk about on the podcast, is that when you have volunteers going out to knock on doors, hand out pamphlets, persuade their colleagues, neighbors, friends, and other people who live near them or wherever they're traveling to, when they talk versus someone who's being paid, $20, $30 an hour, a volunteer is going to have the kind of enthusiasm that might persuade more people. Now, you do have to think about how the money comes through. Those volunteers need to be trained, given materials, and then sent out to improve the ground game. But there's definitely this factor of enthusiasm that comes from volunteers talking directly to voters.
It's great to have you back. We thought you'd never be back from the field. Saleha Mohsin, of course. Again, Big Take DC podcast. You know the drill. Apple, Spotify, same place you find the Balance of Power podcast. Saleha, thank you so much. As we bring our panel back on this, reassembling the panel with Rick Davis, of course, partner at Stone Court Capital, Republican strategist, joined today by Democratic strategist Laura Fink, founder, CEO, Rebel Communications. Laura, what's your thought on the money fight here versus earned media? Can you put a value on one versus the other?
Well, I'm on Bloomberg, so I think we can put a value on almost anything here, but I will say this.
I like the way you think.
The earned media is important, but it is sort of a Band-Aid excuse for not having as much money. But as your previous commenter said, money cannot win an election, but having more of it is a significant advantage. And I think having it early was also an advantage. So while Donald Trump was sending all of his small dollar contributions to his legal battles and his lawyers, the Democrats were building infrastructure on the ground. That's led to more than 300 field offices in the redder parts of states often, so that they're working to peel votes from those rural areas, from those less traditional Democratic areas, to try to run up that number. So I think in terms of how it invests in infrastructure, once you've maxed out on your TV and your radio ads, it contributes significantly. But that energy and that sense of potential inevitability is also a force that's hard to quantify and hard to capture. And is certainly on Kamala Harris's side. That said, the numbers are dead even. It is going to be a dogfight and a dead heat right up until Election Day. So we can Monday morning quarterback afterward to see, but having less money, never an advantage.
Well, so as we consider the money here, and yes, we still have 60-some days to Election Day, but as we've been reminding you on this program this week, starting tomorrow, absentee ballots are getting mailed out in the battleground state of North Carolina. Early voting is about to begin. And Rick, as we've also discussed, a lot of the ad reservations on the airwaves have already been made, including $370 million in ad buys from the Harris campaign between Labor Day and Election Day. Is it too late for additional money made by the Donald Trump campaign to actually make a difference? Is there closing the money gap at this point?
Yeah, I think closing the money gap, I mean, we really don't know what the gap is. We haven't seen Kamala Harris's numbers for August. She obviously had this significant $540 million haul between her announcement and the convention, but we haven't seen what's happened since then. And so is she having another significant upbeat in her fundraising and then expanding the cash on hand advantage that she has. It's yet to be seen. I would say the only thing I differ is money may not be an automatic win if you have more than your opponent. But if you don't have enough money, it will lose you the campaign. And I really think we're on a borderline conversation right now with Donald Trump. He's really only playing on par with the Harris campaign on the airwaves in Pennsylvania and North Carolina, and just now coming up in Georgia and feathering down in North Carolina. So is he even able to compete in the 7 states? And is he making choices? We know that there's anecdotal evidence that he's pulled out of New Hampshire and Virginia and Minnesota, places that only a month ago he claimed he could put in play. So if he doesn't have enough money to match or compete with paid media, this is where repetition and message matters, right? If you hear over and over and over again, something about Kamala Harris and her tax plan, but you're not hearing about Donald Trump's, you're more likely to believe Kamala Harris's by election day. And that's the problem with earned media. You can't replace the repetition. It's not repetitive. And so I really think there's a disadvantage for the Trump campaign if they aren't able to keep step with the money.
All right, Rick Davis and Laura Fink, our political panel today. Thank you both so much for joining us, and we'll have more straight ahead on Balance of Power on Bloomberg TV and radio.
Waters. I'm Charlie Pellet. 1:40 the time right now on Wall Street. We begin with a number of developing stories. Vista Equity and Blackstone said to be in talks to buy software maker Smartsheet. That report from Reuters. Right now we've got shares of Smartsheet up by 5.3%. And another developing story at this hour, the FBI has reportedly raided the homes of 2 top aides to New York City Mayor Eric Adams. According to the New York Times, those homes belong to 2 deputy mayors, including one that is shared by the city's schools chancellor. Joe Matthew and Kaylee Lyons will have more on this developing story coming up shortly on Balance of Power. Stocks are trading mixed. We've got the NASDAQ Composite Index back in the green. A couple of minutes ago it was trading lower. Right now, NASDAQ up 21, up by 0.1%, but the S&P extending its slide into a 3rd consecutive day, down now by 21 points, a drop of 0.4%. The Dow lower by 273, down 0.7%. 10-year 3.72%, with the 2-year 3.74%. Gold up $17 the ounce to $25.13, up 0.7%. And West Texas Intermediate crude down 0.4%, $68.94 a barrel. After earnings, Hewlett-Packard Enterprise now down by 5.3%. And among the names reporting today after the close of trading, we will be hearing from both Broadcom and also DocuSign. Again, recapping, stocks are trading mixed. S&P 500 index right now down 21, a drop there of 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash. Balance of Power continues now with Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you as always, with his eyes on the markets and breaking news, which we are just learning about now, with multiple reports from the New York Times, from Politico, and beyond. Federal agents searching the homes of New York City deputy mayors and schools chief. Kaylee, this is interesting, as the Times suggests these searches are not related to the federal corruption inquiry focused on the mayor, his campaign fundraising, which is something we asked him about at the Democratic Convention in Chicago.
Yeah, asked him specifically about the subpoena from a grand jury he was served with back in July. He did not comment. He's not commenting on the ongoing investigation, really, though he did tell us that New Yorkers should feel confident that he is still able to do his job as mayor despite these ongoing questions. Now, Politico is reporting that this investigation does revolve, at least in part, around the campaign fundraising question in 2021 and whether there was collusion with foreign interests. And we should note that these 2 raids today of these 2 other aides add to at least 3 other Adams aides that have been searched since November.
Wow, yeah. The search of the school's chancellor's home took place the day before the first day of school in New York City. This is a story that we're going to be paying attention to as we learn more. We'll bring it to you here on Bloomberg TV and radio. This broke just a moment ago. And speaking of the return to school, for those of us on 92.9 FM today in Boston, good luck with the kids. We're all getting our own day here, Kaylee, as we make our way back.
So there are still schools that go back after Labor Day. They've changed that in
Revolutionary
area. Yeah, that's how I grew up anyway. Now, of course, in addition to the news around Eric Adams, we've had a lot of other news this hour, some of it coming from Donald Trump and the Economic Club of New York, policies he would pursue when it comes to the economic relationship with China. And we know that China is in focus for the Biden administration as well. We got news this hour from the Commerce Department about new export controls on critical technologies. Of course, we've seen a lot of that when it comes to things like semiconductors. But these rules specifically target quantum computers and components as well as advanced chip making tools. And it's quantum power we're going to be talking about next, Joe.
Yeah, you said it. This is interesting. As we've spent so much time talking about semiconductors, you've seen the impact on NVIDIA each time the White House rolls out a policy proposal like this. Add quantum computing to the pile here. And as you said, Kaylee, an important conversation we have for our listeners and viewers.
Indeed, on Bloomberg TV and radio, live from the studio here in Washington, 2 guests are joining us. The first being Peter Chapman, IonQ CEO, which is a quantum computing company, together with Democratic Congressman Glenn Ivey of Maryland. He represents the 4th District. And of course, Congressman, you are here along with Peter, given Peter's work in Maryland and at UMD specifically. Welcome to you both. Thank you so much for your time. Peter, I'd love to just begin with you, because I think for a lot of people, they hear quantum computing, they read a headline like the Biden administration targeting China's development in that area, and they think, okay, what do I need to know about it? Why is this viewed as critical technology that would require export controls? What do we need to know?
So quantum computing, there's 2 aspects to it. One is a national security concern. A large enough quantum computer could break encryption. And so we use encryption for digital data, for our communications infrastructure. And if you can break that, that means that you can hack into people's emails, you can listen to digital conversations, and you can we store all of our records in digital files, and that's how we use them as truth. And so now all of a sudden you could go through and change who owns properties, who owns stocks, all those kinds of things. So that's one aspect. The other one is that it's expected for the next 50 years that the economy will be powered by quantum. And so there's a global space race to see who's going to be the leader for the next 50 years using this technology.
So here we have, in a literal sense, a public-private partnership at the table here today. Congressman, your take here is we hear from the Biden administration. I don't know if you saw this coming, but it seems that we're in a world with technologies like this and artificial intelligence where you both need each other right now.
Oh, absolutely. I think, I think the government needs the private sector more than the other way around. But I think we want to make sure that we're supportive of their efforts and make sure, in part, that we stay out of the way, but also in part that we provide the type of capital and support that they need.
Stay out of the way or provide guardrails as well?
Well, I mean, it's a fine line, especially since most of us in the government, and I'll include myself in that category, don't know much about what they're actually doing. So when you get deep into the weeds, there's a reason I went to law school and didn't stay on the PhD track. This is one of those. Okay. But, I think it's important for us to make sure that we're facilitating their growth and their development and research, because we are in competition with China and other countries to make sure that we can stay ahead of the curve on this front and also maximize the capabilities. As you heard, the military applications, the cybersecurity issues, and just the other research possibilities are all powerful reasons to do that.
Well, and part of that competition with China does reflect itself in things like exports controls, but arguably it also does in, say, legislation like the CHIPS Act, where the U.S. is trying to make more of this stuff on U.S. shores rather than having it be centered in places like China. Do you have a relationship with that kind of legislation? Do we need a quantum computing act realistically, or are these things actually intersected?
Some intersection, but we definitely need more investment by the U.S. government to go to quantum industries. If you look at China, they've allocated $15 billion. They've built a small city in China, which is just for quantum. Right. The 5-year plan for China states that they will leapfrog the U.S. and the West by using quantum technologies. We haven't allocated that kind of money because it really is a public-private partnership. So the way we compete in the West is not just through government, but also through industry. And so we need to strengthen that relationship to be able to compete against countries like China.
I'd like to hear from you more, Peter, on cybersecurity, because what you said is important here, recalling the CrowdStrike event, the intense competition with Palo Alto, the questions that we have, and kind of, like you mentioned, Congressman, falling into the arms of these companies with technologies that we don't always understand. If quantum computing can crack cyber defenses, can it also enhance cybersecurity if used properly?
Yes, it's both the problem and also the solution. So we're working on, and others are working on quantum networks. And these quantum networks then can't be hacked by quantum computers. So it's both the problem and also
that's the future of security.
Indeed it is.
Like, kind of reminds me, a diamond is the only thing that can cut another diamond kind of situation. I'm just trying to think of a way to analyze this in my head. So as we talk about the idea that this may have important implications for national security, cybersecurity, you obviously think a public-private partnership is very important. Is this also bipartisan? We know that competition with China is maybe one of the few things that you and your colleagues can agree on Capitol Hill.
Every now and then there are one of those that pop up. This, I think, is one of those. I think the challenge, though, is really going to come down to the allocation of funds. And my Republican colleagues, as you may have heard, are trying to move these sort of funding issues in a different direction overall. But I think even here, we can find bipartisan support.
The ability for the U.S. to be competitive in quantum computing could be completely related to the spending fight that's about to go down when you return to the Hill in a few days?
I'll say it this way. I mean, as you just heard, you've got nations that are actually trying to poach U.S. companies and get them to move there. that are in this field. And at the same time, you've got a gigantic investment by China in the computing field, the quantum computing field. So if we want to stay competitive and stay ahead of the curve, which allows us to deal with some of the other factors you were talking about, like export controls. If we're behind, we don't have to worry about export controls. We're trying to catch up. Yeah. We're still in the lead, and we can maintain that, but it's going to take, I think, a joint effort. We've left out academia as well. There's the third corner of the Iron Triangle, but if all of us work together in a coordinated way like we should, I think we can maintain our supremacy.
This is about education, though, it sounds like. You guys are on a roadshow to tell people what we're talking about. We can't get through a day without hearing about AI. Is quantum computing a blind spot in Washington?
I mean, I think AI is such a broad umbrella. There are blind spots under that rubric, too, because sometimes people are talking about different things. But at the end of the day, I think Congress needs to focus, and we need to do it by committee, because, you know, not everything's going to fall under every category. Deep fakes, for example, that's one committee, but doesn't necessarily go to these kinds of issues and challenges. The military applications, we haven't even talked about drones yet, but I think, you know, we need to make sure we're moving forward on all of those fronts in a way that allows the scientists to take the lead and with support from the government and academia.
Peter, you want to talk about drones? Yeah.
Well, it's just these new quantum networks. So we're working on quantum computing and also quantum networking. Within quantum, there's another area, which is quantum sensing, new ways to be able to image into the ground, oil exploration and those things. We're doing 2 out of the 3. Quantum networks, one of the places to be able to build a quantum network to a drone. And then the neat thing about that is you can't hack the communication to the drone. So if you were in Ukraine, there's no way to block the communication between the drone and the ground. And so it's maybe a really powerful way to be able to control things on the battlefield.
Fascinating. Peter Chapman, great conversation with us here, a unique conversation that we've been looking forward to, CEO IonQ. Thanks for sharing your expertise. We'd love to talk to you again. You're sitting on clearly some extremely powerful technology and a great conversation with Congressman Glenn Ivey. We're not done with you yet, because we've got a couple of questions about what Kayleigh mentioned, the funding battle. And I know that we could be talking about another potential shutdown, but that doesn't happen in an election year, does it?
You know, I just heard one of my colleagues I listen to the counter programming every now and then. Today I was doing that on the way in. And he's actually talking about, this is one of the leaders of the Freedom Caucus who's actually talking about a shutdown. And he said potentially could be a week, could be all the way to November 5th.
Is this because of the SAVE Act? Is that where the fallout happens?
Connected it to the SAVE Act. But, you know, they've been talking about that kind of stuff since before then. But, you know, at the end of the day, I think, obviously, that's beyond irresponsible and damaging to the U.S. economy at a time when things seem to be moving in a better direction than they had been. And I just think the government ought to be able to take care of a basic function like staying open and paying its debts.
Well, of course, your work doesn't stop there. We just have a minute left, Congressman, but you, of course, are on the task force that's looking into the attempted assassination of Donald Trump. He suggested in an interview with Dr. Phil just that last week that he thinks Joe Biden and Kamala Harris might be partly to blame for that happening to him. Have you unearthed any evidence of that in the investigation?
No, but more importantly, the FBI hasn't either, and the Secret Service hasn't either, and I'm not aware of anything concrete by anybody, even the people on the fringes, other than Donald Trump, who've even suggested something like that. So it's a pathetic comment, frankly, and it's unfortunate because it feeds into these kinds of conspiracy theories that I think continue to undermine American democracy at a time when we just heard the other day that Russia and some of our adversaries are trying to take advantage of that and use that against us.
Are you confident that the Secret Service will keep both of these candidates safe for the rest of the campaign?
I am, but I think there's obviously room for improvement. We need to keep really working and focusing on making sure that all of the improvements get made as quickly as possible. But we also have an accountability issue here, too. Something went horribly wrong on July 13th, and the people that allowed that to happen need to be held accountable.
Yeah, of course, we've seen the resignation of Kim Cheadle, but the question is whether or not more heads could roll and what actually happens within the Secret Service in the aftermath of this. Congressman great to see you here in our Washington, D.C. studio. We should do this
Always a pleasure.
more often.
My
Congressman Glenn Ivey, the Democrat from Maryland, appreciate your time. And that's going to do it for us, this first edition of Balance of Power. But of course, Joe and I are going to be back later on at 5 p.m. Eastern. We have much more analysis to do on the economic proposals put forward by Donald Trump today at the Economic Club of New York and Kamala Harris yesterday in New Hampshire.
We're going to go put our heads together in the newsroom. We'll be back with more analysis and a deep dive on what Donald Trump proposed today, coming up, as Kaylee mentioned, 5 p.m. Eastern, where we meet you every afternoon. I'm Joe Matthew alongside Kaylee Lyons. This is Bloomberg TV and Radio.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everyone. Live on Bloomberg TV, radio, YouTube, and streaming on Bloomberg Originals. It's Bloomberg Business Week. I'm Tim Stenevec. Carol Masser is out today. Here in her place is a Bloomberg News cross-asset reporter Emily Graffeo sitting in her chair. Emily, happy Thursday. How are you?
I'm
I'm doing well. We have a big day today.
We do have a big
jobs
day. Also, I'm glad you came back because you were here yesterday. We had a great time. You're here today. You are here tomorrow as well. We got a big show coming up. Stocks losing some traction that they had earlier in the session. Wall Street's anxiety, as you mentioned, Emily, running rampant ahead of tomorrow's highly anticipated U.S. jobs report. We're going to have much more on the markets and on the implications of tomorrow's report in just a minute.
And on that, Mike McKee will join us with everything we need to know ahead of that payrolls number.
Okay, that's the macro. On the micro, a big deal in telecom. Verizon buying Frontier for about $9.59 billion. The deal details just ahead.
And politics and money front and center as the candidates make their case in the final sprint ahead of the November election. We've got the details on a star-studded New York fundraiser.
All that and more over the next hour on Bloomberg Business Week. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Thank you very much indeed. Lots going on, Tim and Emily, and that's why you got to keep it locked into Bloomberg Radio and Television. We've got you covered. Right now, we've got stocks trading lower, S&P lower by 4 points, 55.15 where we stand now. A decline of just about 0.1%. Dow Jones Industrial Average also in the red, down now by 153 points, down by about 0.4%. Nasdaq higher by 0.5%, up right now by 88 points. 10-year 3.72% with a 2-year that's yielding 3.74%. Spot gold up $19 the ounce, 25.15, up by 0.8%. Another retreat for crude oil right now, down 0.4%. West Texas Intermediate crude 68.94 for a barrel of WTI. S&P, by the way, down for a third straight day. Deal news, Verizon buying rival telecommunications operator Frontier Communications parent for about $9.59 billion. We'll have a whole lot more on that story coming up for you in just a moment on Bloomberg Business Week. Verizon down 0.4%, but shares of Frontier, which uses the ticker Fiber, FYBR, down now by 9.1%. Earnings after the bell today include Broadcom and DocuSign. Recapping stocks trading mixed. S&P down now by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, we are all on pins and needles, I think it's fair to say, awaiting that payrolls report tomorrow. And for good reason, because Fed Chair Jay Powell has put the labor market at the heart of the central bank's decision on when and how quickly to ease. Market expectations for a bigger move increased on Wednesday after weak data on July job openings, and early Thursday after ADP's gauge of private sector job growth in August rose less than expected. For more, we bring in Michael McKee, international economics and policy correspondent for Bloomberg News. He's here in the Bloomberg Business Week studio. Mike, all payrolls reports are important, but this one seems like it's taken on an especially important weight, given what you were there in Jackson Hole just 2 weeks ago. Given what we heard from Jay Powell in Jackson Hole, is it fair to say this one's kind of being watched even more closely than usual?
Most important one since the last one. I mean,
I guess that's what they say. The most important one in more than a month.
There's a confluence of events that kind of raise the interest level in this one. One is that we had Jackson Hole and Jay Powell talking about the fact that the labor market is now an equal risk with inflation, and some of the other members of the Fed saying maybe even more of a risk. It is September, and in September, stocks tend to go down. So people in the markets are already hair trigger primed to overreact to data. The economy, we know, is slowing. The Beige Book came out and said there's not much hiring going on. And then we have a Fed meeting next week. And so there's a lot of expectation for what this report will lead the Fed to do, whether it will be decisive for them.
So right now we have markets mostly anticipating that there'll be a 25 basis point cut next week. But there are some traders anticipating a little bit more. How does the report tomorrow kind of move the needle there?
Well, there's a couple of ways. One, if job creation is very slow, the Fed might want to do 50 because they're using job creation and the labor market as a proxy for how the economy is doing. And it's not so much that if we get 100,000 or even 114,000 like we did last month, that the Fed thinks that level is too low. It's probably about right. But the rate at which it went down from the 170s to that level would worry them, that it was weakening too quickly. The other aspect is if the unemployment rate goes up. That's a little tricky because it could go up a little bit and get rounded up higher because you take it out to 3 decimals. It could be because there are more people who are not employed, or it could be because there are more people who are in the labor force. And the composition of the unemployment rate is going to matter. But if it does go up, that also makes the case for an additional stimulus from the Fed.
No surveys are perfect, but we've heard increasingly in the past few months that there's this aspect of immigration that may not be getting captured when it comes to the labor data that we're getting. Explain what's going on here.
Well, basically, we've seen an influx of undocumented immigrants into the country. The numbers are probably in the low 2-3 millions, not higher as some people would have it. But studies have found that immigrants like that, they're more anxious to work. They have no other income. So they are willing to take a lot of jobs that other people might not want to take. They are not eligible for unemployment insurance. So it may be that companies, and it would be companies who hire in the lower end of the socioeconomic scale, like restaurants or things like that, are hiring people and not reporting them to the government. So what happens is we get a lot of job creation because they're listed on payrolls, but then when they go back and do these revisions based on unemployment tax records, they don't show up. So that's one possible problem with it. The other problem is that the federal government, the Bureau of Labor Statistics, estimates births and deaths, new companies coming and going, and they can be wildly off at turning points in the economy. And so that may be one reason we've also seen this. But it does raise a question of how many people are actually out there looking for work.
What are you thinking about when you think about the revisions? Because it feels like for the last couple of jobs reports, we also have the market not only watching the current payrolls number, but also the prior revisions. Any expectations for tomorrow?
Well, we probably will see some revisions tomorrow. We tend to see that every month, one way or another. Mm-hmm. The forecast is for a net, or last time we saw a net of 29,000 jobs taken away, which is kind of low for some of the months that we've seen. But the Bureau of Labor Statistics gets more accurate data month after month because not all the companies report in time for the initial report. That's why it's revised twice. When the economy is expanding and clearly expanding, then usually the revisions are higher. When the economy is slowing, the revisions will be lower. So the month-to-month revisions are something that's kind of expected unless we get a real shock. Mm-hmm. It's the revisions that would come out of that 818,000 unemployment insurance thing that go back to March of this year that people would raise concerns about. But that'll be revised again, too, before we even get it put into the data.
All right, 8:30 tomorrow morning, Wall Street time. That's when we do expect those numbers.
I have to be here?
You have to be here probably around 5 a.m.,
8:30?
I would imagine.
Yeah, I do.
Yeah, okay. Michael McKee, Bloomberg News International Economics and Policy Correspondent, always giving us a great view of the macro. Okay, so lots happening today, too, when it comes to the micro. Some deal news. Verizon agreeing to buy rival telecom operator Frontier Communications parent for about $9.59 billion as Verizon looks to expand its high-speed internet business. Here's Verizon CEO Hans Vestberg earlier today speaking on Bloomberg TV.
This is very straight into our core strategy. We are sort of in mobility and broadband, serve basically all types of customers in this market, consumer, SMBs, large enterprise and governments. This is just extending the offerings and optionality for the customers we have. So this is a really good decision by us to do it.
For more on the implications of the deal and why and how it came together, we turn to Chris Palmieri, Bloomberg News Entertainment editor, as well as Michelle Davis, Bloomberg News senior M&A reporter. Michelle here in the studio with us. Chris is out there in Los Angeles. Chris, we just heard in that clip from Hans Vestberg that this is part of the company's core strategy. Is the bet here that we're just going to keep using more and more data as a result of the explosive growth of AI, the excitement around AI? Is that what this is about?
Absolutely, that and working from home, which I happen to be now, and on a fiber network from AT&T. So yeah, so that's part of it. Just and video, of course, the streaming evolution of TV, and all of that is massive data feeds to the home and higher speeds, and that's what fiber does.
Michelle, tell us a little bit about how this deal came together, the history of both Verizon and Frontier in the telecom space, and did Verizon get a good deal?
Yeah, so we're in a bit of a new era right now where all the cellular providers, AT&T, Verizon, T-Mobile, they, as Chris was saying, are trying to get into the high-speed internet game. And the last time we saw this big shift was when they were moving from landline to cellular. And so right now, the idea is, let's bundle cellular, let's bundle high-speed internet and try to compete with the cable companies. In terms of the history, Frontier's claim to fame is their broadband access. Verizon has been, the top wireless provider that we all know. But they hadn't really had a big presence in fiber. With this deal, if it closes, they will be vaulted to the top ahead of AT&T, who is right now the #1 fiber offerer among the wireless providers. But, even they hardly compete with the cable companies in terms of high-speed internet access.
Michelle, when we think about the history of this space, this is a history that has been just dominated by M&A. That's how, and actually, breaking up of large companies over the last century. If we think about telecom, regulatory hurdles for Verizon here, is that something that regulatory risk, is that something investors have to be worried about?
So if you look at Frontier's stock today, it is trading down and below the offer price. Some of that, some of the decline is because yesterday people didn't know what Verizon was going to pay. So that's, they got ahead of themselves. And a little bit of that decline has to do with this, concern about regulatory scrutiny. No one that I've talked to thinks that they're going to have any issues, but in this environment, regulators have just been taking a harder look at things. They're taking longer to review things. Obviously, if there's a change in administration, which there probably will be, and we just don't know how it will go, that could change how long, regulators take to review things.
Chris, I'm wondering how many details we have about where Verizon is going to actually deploy this high-speed internet, because we know that millions of Americans actually don't have access to high-speed broadband. Is this something where Verizon is kind of serving those underserved regions, or are they competing with the incumbent cable providers in areas that already have internet?
A little of both, but definitely they're looking at rural areas. AT&T is as well. There's a lot of fiber build out in places that historically didn't get it, and that's part of this. I think Verizon said they'll be in 35 states with this acquisition. So yes, a very broad offering geographically.
Chris, what does this mean for customers of Frontier? They have a couple million broadband customers already. Do they just automatically become Fios customers?
Yeah, that's certainly the plan. The CEO said he didn't expect, this to result in like any kind of price war or something like that with anybody else. But that always seems to be the case in telecom. This in a way is a reflection of the challenges these companies have had with mobile being sort of everybody has a phone or two at this point, and where else can you grow? And so they're returning really to this business that they had offered back in the dial-up internet days.
Well, Chris, to that point, I thought that the future was all about wireless, even when it came to broadband delivery, because it is very expensive to lay fiber, and these companies are working on delivering broadband wirelessly to the home with these receivers that people set up on their own. They don't even have to call people out there to come and hook stuff up to the telephone wires. What's going on with that strategy right now?
I think this deal is really a recognition that that's only part of the solution, that if you really want to get the super high speeds, you need this fiber optic line, even in some cases directly to the home if possible. And that the wireless, well, as you said, people are investing in and they're showing some good growth in that way of accessing. It's probably not going to be the single, main way people access.
Yeah, Michelle, come on in on that, because the CapEx when it comes to laying fiber is incredibly expensive. And also you've got to get the neighborhoods on board.
Yeah, so Verizon has a lot of work ahead of it in making this a real thing. But if you think about fiber, Fios, I don't know if you guys have used Fios.
I have Fios, yeah.
It is just, lightning speed. It's faster, way more reliable than what you can get with wireless. So, it's clear that it's not quite interchangeable, but it is going to take them time to get to a place where this is the default.
I was going to ask a similar question, but maybe what is the kind of history, what do we know already about companies that have merged in the telecom space? Have they been able to kind of successfully compete against those cable companies that you had mentioned earlier when, they acquire these fiber companies?
So T-Mobile has been doing a bunch of joint venture deals to try to broaden its fiber broadband access. They recently did a deal with KKR where they agreed to both invest in Metronet. And AT&T, has been the leader in this space. But the whole industry, when you think about telecom, cable, media, as we earlier were talking about, it was built on M&A using debt. A lot of these companies have gone bankrupt and come back around again, including Frontier.
That was a relatively recent bankruptcy.
Relatively recently, but they find ways to reinvent themselves and get more debt and buy and separate, and here we are.
Chris, there's also a media story when it comes to this, because Verizon is also with Fios. They do offer traditional over-the-top cable box service, I guess is what we'd call it. We wouldn't really call it over the top, but they do offer cable box service, traditional linear TV. How do you think about that in the context of where they're doing M&A right now?
It's part of the thing, and one of the things Verizon's been active at is including other streaming services as part of their broadband business. As everyone knows, the traditional cable bundle is collapsing, and so this is really the next evolution of delivery of TV. And Hans Vestberg said in our Bloomberg TV interview that having this multiple product offering to consumers helps reduce the churn. They're less likely to cancel if they have a Verizon mobile phone, internet offering, TV.
Michelle, what's next? What are you watching for in terms of timeline?
The big question is AT&T or T-Mobile, are they going to do something to get back ahead after this?
Chris Palmieri, we're lucky to have both of you today, and you're both writing a lot of stories, but I want to shift gears a little bit and talk about a story that you published just about an hour ago about the future of what happens with National Amusements and Paramount. The name Ellison is at the top of the story, but it's not David Ellison, it's actually Larry Ellison. Explain what exactly is going on here.
Well, this was always positioned, this takeover of Paramount, as David Ellison, Larry's son, and but everyone always assumed that the money was coming from Dad. He's the founder of Oracle Corp, of course, and worth over $150 billion. But we hadn't quite seen it in writing, and in this situation where you have to tell the regulators, in this case the Federal Communications Commission, who's going to own these, that CBS TV network and all those local stations, and their filing says, well, it's actually going to be Larry Ellison who controls it all.
So what does that mean for the company, but also for what David's going to do at the company, and who's actually going to be the one making the decisions here?
Well, David, as the filing said, will be chairman and CEO of Paramount, and his spokespeople have said he will have operational control. But you don't have to look far in the media landscape to find incidences where fathers have fired their sons. You think about the Murdochs and all the changes they had over their media empire. The Dolan family as well in cable TV had some dust-ups. Even when the Redstones, there was a period of time when Shari Redstone was out with her father and that. So I don't want to presume anything, everything may work out fine between the Ellisons. But, as long as Larry is the controlling person, there is always that option.
Yeah, maybe no offshoot of succession at this point yet. Chris, is the deal happening? Is this thing finally going to be put to bed?
Yeah, they've got a signed deal. At this point, Paramount really can't consider other offers. There's still issues regarding like this one, regulatory and that, but it certainly seems like it's going to close next year.
Okay, certainly around the world when it comes to telecom and media, with Chris Palmieri out there in Los Angeles. He's Bloomberg News entertainment editor. Also, Michelle Davis, Bloomberg News senior M&A reporter. Michelle joining us here in the studio. Chris joining us from Los Angeles. A big thank you to both of you. Check out all of their reporting on the Bloomberg terminal and, of course, at Bloomberg.com. Taking a look at how the markets are doing right now, the S&P 500 down 0.1%. Well, the NASDAQ higher by 0.4%. The NASDAQ composite, that is. The NASDAQ 100 is right now higher by 0.2%. Emily, we're still getting company earnings. We're going to have some company earnings after the bell today. We had HPE yesterday, C3AI yesterday. Jobs report is certainly front and center for investors, but also thinking about seasonality when it comes to what happens to the stock market in September, traditionally soft month.
I'm really curious to ask some of our next few guests about what is really driving this market downturn, at least in the S&P 500. Is it that seasonality, or are there like weaker economic fears kind of permeating through equities?
Well, I think one thing that also we're thinking about is politics and the way that any sort of data would look to the campaigns that are kind of on full speed ahead until that November 5th election. So if you get a weak jobs number, how does the Trump campaign use that to bolster its campaign? If we see continued strength in the jobs market, does Vice President Kamala Harris, Democratic nominee Kamala Harris, does she use that to her advantage to talk about the policies of the current administration working?
And don't forget, next week, Fed meeting.
Oh,
right? That's next week.
No, I think it's the week after.
Oh, gosh.
Yeah.
Well, it's coming up.
I think you're getting a little bit ahead of us, which is fine because it certainly does seem that time is just a flat circle. Well, speaking of politics, Donald Trump pledged to cut the corporate tax rate, slash regulations, and audit the federal government, embracing an idea proposed by billionaire backer Elon Musk. This as he pitched his agenda to Wall Street and corporate leaders today at the Economic Club of New York. John Paulson, the man famous for a big bet against subprime mortgages at his now closed hedge fund, was one of the people at the event. He's a supporter and confidant of Donald Trump. Let's go down to Bloomberg TV Shonali Bassick, who's sitting down with John Paulson.
Tim, I am sitting down with John Paulson of Paulson & Co., and of course an informal economic advisor to former President Trump and a large donor to the Trump campaign as well. And John, thank you for joining, because you are actually one of the people to ask a question to the former president at this Economic Club of New York event, and you asked about the deficit.
Yes.
He proposed not only making his 2017 tax cuts permanent, he also proposed lowering those corporate taxes to 15%. In this scenario, how concerned are you about the U.S. deficit?
I'm not that concerned, because the reduction in corporate taxes was just for a segment of the corporate population, and it concerned those that are involved in U.S. manufacturing. Overall, currently we have about a $2 trillion deficit under the current administration. So President Trump feels confident that could be reduced several ways. One is through the revenue earned from tariffs, which could be substantial. Two is by cutting wasteful spending. The most important item he alluded to was the Green New Deal, which over time adds up to somewhere around $1 trillion in spending. And the third is not providing federal benefits to illegal immigrants. So net, these revenue generation and savings will offset any minor adjustments to the tax code.
But the way that it worked out in the past, right? You have the Committee for a Responsible Federal Budget, you have the Tax Foundation, the Congressional Budget Office, all saying that the Trump tax cuts would actually cost more than $10.5 trillion over a decade, which means that all of the tax cuts proposed really don't add up to really filling in the hole from the tariffs that he recommends.
Yeah, I haven't seen those particular studies. I really don't know what they're referring to.
So at the end of the day as well, how do you think that he could really gather the American populace, the American worker that has become so important in this election cycle, with a recommendation of cutting taxes on corporations rather than helping out the American worker?
Yeah, I don't think he said he would cut taxes generally against corporations. He's not raising taxes. What he wants to do is make his previous tax policy permanent and leave the basic corporate tax rate at 21%. The tax cuts that he proposed target the Americans that would need it most. One is well known now, no tax on tips, which would be a great benefit to service workers and allow them to keep more of their income. Second was not taxing Social Security benefits. So many people rely on Social Security benefits for most of their income. So that could be a very significant help in the after-tax earnings of recipients.
Let's take a step back and also ask just a broader question here. You have obviously been a very large supporter of the former president in this cycle. What underpins your faith in him?
Well, first of all, his policies, which under his administration were very successful. While people or these studies referred to are concerned about potential inflation or deficits, under his 4 years, the average annual inflation was only 1.9%. Interest rates were very low, and oil prices were very low, and real wages for the average worker increased. Under the Biden administration, which is supposed to be for the average worker, real wages declined because inflation was so high. Interest rates are much higher, and oil prices are much higher. So when you look at the benefits 4 years under Trump or 4 years under Biden, the average American has done much better under Trump.
I do have a question about the energy policy as well, because he did say today that oil production will increase. He said fourfold if he takes office again. But the U.S. is already producing more oil than ever, and the surplus oil could end up being sold overseas. And it's very unlikely that companies will drill more at this point in time. Why spend so much money on this policy?
I don't think Trump would be spending money. He said that he would release federal lands for more drilling, that he would reduce regulations and reduce the current moratorium on permitting new LNG facilities. So that would be a boon to U.S. production and a boon for U.S. exports. So exporting energy is very positive for our economy.
I would love for you to also hone in here on some of the commentary that was made this week. You may have seen that Goldman Sachs analysts had said that economic output could take a hit under a future Trump administration. They said, and I'm quoting their report, that the hit to growth from tariffs and tighter immigration policy would outweigh the positive fiscal impulse. What do you say to them?
I think the immigration policy is a negative for our economy. If you look at New York City, we have hundreds of thousands of immigrants, which are costing the economy valuable resources that existing taxpayers are paying for. So we have to provide health care benefits, housing benefits, food benefits, and these workers aren't allowed to work. So I don't think the illegal immigration has been a benefit to American workers. It increased the supply of cheap labor, which held down wage growth for American citizens.
The wage growth has been part of the inflationary story, has it not?
Wage growth has been grown less than inflation. That's why real wages have declined.
I also want to talk about interest rates, because at the end of the day, there has been a lot of concern on Wall Street about what a Trump administration would mean when it comes to the Federal Reserve. There was, of course, that Wall Street Journal report a number of months ago that questioned whether the Federal Reserve would remain independent. And then we also had the former president commenting in an interview with Bloomberg as well, saying that the president can certainly be talking about interest rates because he has good instincts. That doesn't mean he's calling the shot, but it does mean he should have a right to talk about it like anyone else. Do you share that concern that he could potentially damage the reputation of the Federal Reserve as an independent organization?
No, I don't share that concern. I think it is important for the president and the White House and the Treasury Secretary to comment on economic policy, including interest rate policy. But ultimately, the decision is up to the Fed. But it's important for the Fed to hear other viewpoints and to make sure the Fed policy is in sync with overall fiscal policy.
To that end, what do you believe should happen with interest rate policy through the end of this year?
Well, when you look at inflation now is somewhere around 3%. Interest rates are 5%. So real interest rates are too high. So the Fed, I think, waited too long to bring interest rates down. So I think the likely course of action is going forward is the Fed will start to cut interest rates.
What should they be by the end of 2025?
It's difficult to predict, but my best guesstimate would be around 3%, perhaps 2.5%.
And what would that mean in terms of ripple effects across the economy?
Well, it's generally beneficial. The major cost when you get a mortgage is the interest rate. So if the cost of mortgages come down, the cost of buying a home would also come down, and that makes housing affordability go up. And, that would spur new housing development.
So another thing that the former president had tried to do in office the last time around was privatize Fannie Freddie. Is that something you think he would be able to accomplish or is talking about accomplishing in a potential next term?
I think it makes sense. The intention of the conservatorship was to temporarily put Fannie and Freddie in conservatorship while they built up their capital. Initially, all the earnings of Fannie and Freddie were swept out by the government, but after Steve Mnuchin left office, he no longer allowed that policy, and the GSEs have been rebuilding capital. So they're now in a position where they're fairly well capitalized, which would make privatization logical.
I do have to ask you the one thing that he mentioned you very directly about also in the course of his speech today, which was that there's an idea about an American sovereign wealth fund. How realistic is that idea, and how much have you built out that idea with the former president?
Well, we haven't flushed it out, but clearly savings within a country are a measure of a country's strength. So you have countries like Norway, the Middle East, the Asian countries, have very large sovereign wealth funds. And I think that's a good model to follow. So you have to start somewhere. So I think the idea of a sovereign wealth fund for American savings is a good one.
Who else is involved in a kind of conversation like that?
We haven't discussed it in detail at this point.
And how big could it be at the onset?
Well, you look at the Norwegian fund is over $1 trillion, well over $1 trillion. Saudi Arabia has very large funds. Abu Dhabi has large funds. So it'd be great to see America join this party, and instead of having debt, had savings.
Of $1 trillion sovereign wealth fund.
Well, it will be, over time, larger than any existing funds.
John, we thank you so much for your time today. I know it's a very busy day off the heels, really, of that former President Trump's speech today at the Economic Club of New York. We thank you.
Thank you very much.
Back to you.
Hey, thanks so much, Sonali Basak, sitting down with John Polson here at Bloomberg headquarters. Well, speaking of politics, two high-profile celebrities are hosting a dinner to boost Vice President Kamala Harris's war chest in her bid for president. Actor Matt Damon and Broadway musical creator Lin-Manuel Miranda are going to appear at a September 18th dinner in New York. Tickets going for $25,000 per person. This is according to an invitation obtained by Bloomberg News. It does come as Trump's campaign on Wednesday released data that showed it spent $32 million more than it raised in August, ending the month with $295 million in the bank. Skylar Woodhouse is Bloomberg News reporter covering the campaign. She joins us from Washington, D.C. Skylar, I'm sort of using this fundraiser as a way to talk about campaign finance, to get an understanding about where these two candidates are and their campaigns are when it comes to how much money they've raised. What do we know?
Well, we know that ever since Harris, catapulted as the nominee, she's been doing very well, kind of bringing in that money from big donors. She's getting a lot of financial support. So, definitely riding that wave. Since becoming the nominee for the party, she's just, I would say, doing very well among donors. She's kind of reignited this support among, celebrities who just listed some of those who are going to be at this fundraiser. So she's definitely kind of re-excited donors and is doing very well financially. As for Trump, I think, his campaign has definitely been one that has had its ups and downs. And so, it's going to be interesting to see how his campaign continues to do, as well as Harris, and to see where this Harris momentum goes, as it's still very early.
Okay, so this fundraiser obviously is going to attract, like you said, celebrities and those donors that are on the higher income bracket, tickets are listed at $25,000.
I think that's fair to say.
Per person. I'm wondering what we know about maybe what the more average American voter, where they're putting their campaign donations. So those smaller size donations, what do we know about what Harris and Trump are bringing in?
Yeah, so those smaller donations can come from like all sorts of different buckets. I mean, they can go from, for Harris, just like ordering, campaign merchandise from their website that contributes to the campaign. So just small things like that, I think for the average person, who might maybe donate, I don't know, $20, $25 every paycheck, something like that. That money, like, even though it might seem like it's pocket change compared to the ticket price of this fundraiser for Harris, but that's still money that, the campaigns rely on. And it's almost like every dollar counts. You can't just rely on those really big contributions. You still have to make sure you're getting those smaller donations as well. And same goes for Trump. I mean, his voter base, he obviously has a lot of friends and, as you might say, in high places, but at the same time, a big part of his voter base is he's tried to connect with those in like rural America, super big dollars, and they're still, maybe contributing to his campaign. So all dollars count for these campaigns, and they're definitely gonna, want to get as much as they can, and no matter how big or small.
What's a more important measure of support when it comes to the electorate ahead of the election? Is it the support from small dollar donations, many of them all over the country, especially in areas where that are battleground states, or is it the huge influxes of cash from billionaires?
Well, I think it's definitely a good sign if a campaign can say, oh, we're receiving a pretty steady flow from those average donors, let's say maybe in like the rural counties in Pennsylvania. So to be able to say, oh, people are paying attention, voters seem to be somewhat interested, that's definitely a good indication. So I do think it's something that campaigns are paying attention to, because if you're not maybe receiving that support from the regular donor or voter, then that could be a sign that maybe voters aren't paying attention. So, that's definitely something I'm sure campaigns are paying attention to, is like, where's the money coming from? Are we just pulling from big donors? Or are we also pulling from regular Americans who are, starting to tune in or pay attention and maybe figuring out who they're voting for?
In this election, how crucial is the celebrity endorsement? This event, Matt Damon, Lin-Manuel Miranda, obviously pulling support for Harris there, but how important is that kind of celebrity endorsement?
Well, I think this is definitely an interesting election. I feel like the word vibe has been thrown around a lot. So, and it's very interesting because celebrity endorsements are, they're not new when it comes to campaigns, whether that's, I don't know, at the local level or even, here we are for the presidential race, but it definitely can be very helpful, I think, for campaigns to get, if you can get, I think all eyes are definitely on like Beyonce, Taylor Swift. If you can, secure one of those endorsements of someone on that scale, you just never know what that person endorsing someone will do to their following. And especially if celebrities can make a difference, especially as we know, some fans are very loyal followers of that celebrity. So it's definitely something that, campaigns are going to try and secure and make sure they get. I think it's hard to say if it makes all the difference in a campaign. I do think it's obviously very helpful and definitely something you would want to lock down, but it's hard to say if that will, decide the election, with this endorsement.
I do imagine maybe we'll start to hear from more celebrities as we get closer and closer to November 5th. Skylar Woodhouse, Bloomberg News reporter covering the campaigns, joining us from Washington, D.C. Coming up in just a minute, we're going to talk about where ultra-high net worth investors are putting their money. Before that, though, a check of the day's trade and top business stories. Here's Charlie Pellet.
Thank you very much, Tim. Here's what's going on. We're looking at a mixed market, decidedly mixed. The Dow slumping 145 points, down by about 0.4%. Right to the numbers, S&P lower by 7, drop there of 0.1%. The Nasdaq Composite Index up 71. For Nasdaq, that is a gain now of just about 0.4%. Stocks are pushing away from session lows. Traders are gearing up for tomorrow morning's jobs report that will likely be key in determining the size of a Fed rate cut in September. Bottom line, S&P little change, down by about 0.1%. 10-year 3.72%, the 2-year 3.74%. Gold up $20 the ounce, now up 0.8%, 25.16 on spot gold. West Texas Intermediate crude flat on the day, lower by 2 cents, 69.18 a barrel. Briefly, JetBlue Airways raising its sales forecast for the current quarter after the carrier said it benefited from rebooking passengers from rival airlines whose flights were disrupted by that technology outage back in July. Right now, we got JetBlue flying higher. JetBlue up by about 8.4%. Again, recapping, S&P lower by 7, down 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. As we just heard from Charlie with that market update, seeing green on the screen for the NASDAQ, though we are off session highs from earlier today. The S&P 500 down 0.1%. As we've been discussing, Wall Street's anxiety running rampant in that countdown to the highly anticipated U.S. jobs report. It's not just the jobs report that has people wondering about what risks do lie ahead. There's geopolitics, there's uncertainty ahead of the election, and for some people, how tech could continue to affect the economy, really big picture stuff and fundamental stuff. Dave Allison works with ultra-high net worth clients at the RIA platform Prosperity Capital Advisors, where he's president and founding partner. They've got about $3.5 billion in assets under management. Dave joins us here in the studio. Dave, good to have you with us. Welcome to Bloomberg Business Week. Give us an idea of your typical client, how much money they have how much money they have deployed with you, and sort of give us the profile.
Yeah, definitely. So we work with clients all over the United States. You know, typical client is somebody that is, 55 to 65, approaching retirement, maybe $1 million to $10 million, and that's at the firm level. I typically spend my time with the families that have $10 million to, maybe $50, $60, $70 million and helping them implement their family wealth strategy.
So let's talk a little bit about those families and asset allocation there, because traditionally we've heard a lot about, at that level, allocating assets to the private markets, but not necessarily in recent years as much discussion of that as there has been in the past. What do you see as sort of the asset allocation breakdown for the ultra high net worth family that's trying to have generational wealth here?
Yeah, I think the asset allocation breakdown is still, pretty heavy in the public markets. I mean, obviously, you can find outsized returns in the private equity space or private market space. Yeah, on occasion. I think there's a lot of hype and buzz coming back post-2021. I think there was this great reset that happened, and now, there's a lot of still speculation around AI companies, and some of the derivatives that'll come from this technology and who's trying to build the next services and platform that'll be supported by AI. So I think we're seeing, a renewed interest in that space. But, the reality of it is public markets are still delivering great returns and there's still huge opportunities. And so, it might be not as much hype as we saw maybe in 2020 or 2021.
When you talk to your clients, how are they currently feeling about both the U.S. economy and also the stock market?
Yeah, well, I think people are still fairly optimistic, although, as you just mentioned in your opening, a lot of uncertainty. And I don't know if that uncertainty is as much the economy or the stock market as it is everything else going on in the world. Political, geopolitical, wars. I think that drives a lot of the uncertainty, which unfortunately starts to transition over to people's money in their portfolio. But, as much uncertainty exists in politics right now and in geopolitical events, I think there's still this big wave of optimism of, what's going to happen with some of these companies that do have enormous upside from a productivity, from the technological innovations that we're starting to see happen. So,
what are some examples of those companies or of those services?
Well, I mean, of course, there's the big ones that we all know about, right? The big ones that have been number one benefactors of the hype around AI and what it could do to their own internal productivity. There's been the benefactors like NVIDIA that, of course, everyone knows about, of the spend from these hyperscalers. But I think what's interesting is to start to look at kind of the next derivatives of who's going to get beneficial productivity growth or revenue through monetization of services. And I think we're still in like the first inning of what that even looks like. So, you know, there's of course, companies in different areas, you know, the big ones that we know about and hear about all day long. But, you know, I still think even in the small business side, small company stocks are still trying to figure out how to harness or utilize some of the AI tools.
So how would that end up looking for these other companies? Is the idea here that the companies become more efficient and don't need as many employees, and perhaps we see an uptick in unemployment as a result? Or do we see something else entirely, where the companies become more productive, but those people are still needed?
Well, I'm certainly hoping for the latter, right? I mean, as an employer, we're a small business. We have about 75 employees.
Do you use AI?
We are just starting initiatives. You know, obviously in the wealth management industry, we have a lot more compliance and regulatory concerns around how we use it, but we're trying to empower our employees to use it. And we're not doing it as a measure of cutting back. We're using it as a measure of how can we grow, how can we impact more clients, how can we be more efficient with our advisors. And so, you know, I hope that most other industries are looking at it more as a tool of an abundance than scarcity. And so I think that's a great reason to be optimistic. I mean, will jobs change? Of course, jobs will change. That happens in every major technological advancement or shift. But I think, you know, companies are going to continue to see ways to grow productivity and hopefully drive earnings and more efficiency.
What does that mean for the breadth in the market and the broadening out of the rally? I was looking at a chart. The equal weighted index, S&P equal weight, has outperformed the market cap weighted index over almost 6 percentage points since July. Do you see that continuing?
Yeah, I hope so. I mean, you know, you wonder, is that somewhat of cause or effect? I mean, the reality of it is what we saw through the first half of this year was the big names, the hyperscalers getting so much attention and so much money thrown at them that the reality of it is kind of all good things have to come to an end at some point. And now we're to the point with those biggest companies, it's like, hey, you're spending all this money, start showing me some of the impact. And we're also seeing a lot of people, quite frankly, just take gains off of those bigger company names. And where's that money going to go? It's going to go to the rest of the market. I think, you know, we're still kind of early on to see how it's going to spread out, where it's going to be dispersed, what industries are going to be able to adapt and use these tools for productivity. But, you know, I do anticipate that while we're still going to see these kind of big name hyperscalers spend a lot of money, gain a lot of momentum, gain a lot of interest, I think you're going to start to see, you know, the rest of the market, you know, not just the S&P 500, like you mentioned, the equal weight index, but, you know, even hopefully looking at other asset classes like small cap, you know, start to benefit from some of these tools, particularly if we start to get into a rate lowering environment where they can start borrowing money to generate their own CapEx spend at a small cap level.
Let's talk about bonds as well. What is the allocation to bonds? Because for the last few years, investors really haven't gotten that much of a positive return if they're in bonds. Do you see that evolving? Have you had to change the kind of typical stock bond portfolio composition with your clients?
Well, what's interesting about bonds is it really depends on the type of investor, right? If you're a younger investor in the accumulation phase, you're not really needing income from your portfolio, and you're, of course, focused on trying to generate the highest expected returns, bonds probably aren't a big part of your asset allocation. I mean, you know, bonds are the seatbelt in a car. They're there for safety. They're there to generate income. Obviously, for our retiree clients, generating consistent cash flow and income is certainly a lot better today than it was 2 or 3 years ago. There's a speculative element of bonds, right? As interest rates fall, the principal value of bonds go up. But I still think people are more bullish on the expected return of equities over bonds. We are still sitting at, of course, for most of our growth-oriented clients, a higher equity allocation than fixed income. And again, fixed income is a great place for that short-term money or when we're trying to generate cash flow. But, you know, I don't see a whole lot of speculation happening on capital returns of fixed income.
Just in the last minute that we have, November election, front and center, certainly, in terms of how we're thinking about coverage up till then. How is it on your radar?
Yeah, well, I mean, the reality of it is we all know the market hates uncertainty, and there's an enormous amount of uncertainty. And what we've been telling every one of our clients, things are going to get bumpy. Things are going to get bumpy in September. Things are going to get bumpy in October. We've seen this in almost every election year for as long as we have data. September and October are not typically great months for the market. And so it goes to, are you trying to time the market, or are you a long-term investor? Because as soon as the election results come in, we tend to see a trendward upwards for overall markets. And so, if you're trying to trade and get ahead in market time, hey, there's probably some opportunities with all the volatility we're going to see. But if you're a long-term investor, stick to the course, have a good portfolio, look at what your bets are in these allocations that you have, if there's opportunity to rebalance or reallocate, and don't pay much focus to the day-to-day that's happening.
Dave Allison at Prosperity Capital Advisors. Thanks so much for joining us here on Bloomberg Business Week. The S&P 500 down 0.1%. The NASDAQ Composite higher by about half a percentage point. Coming up next, speaking of AI, OpenAI hitting a big milestone. We'll tell you all about it on the other side. This is Bloomberg Business Week.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenivek. That's Emily Grafeo in for Carol Masser on this Thursday afternoon. Can't call it a jobs Thursday, but that's certainly what everyone is focused on. Also, what people are focused on is more about what we heard from former President Trump's speech earlier today about economic policy, because that's front and center as we do head into the final stretch of the campaign. It is the most read story on the Bloomberg terminal just in the last hour. The former president and current Republican nominee pledging to cut the corporate tax rate, slash regulations, and audit the federal government. He's embracing an idea proposed by billionaire backer Elon Musk. He pitched his agenda, Emily, to Wall Street and corporate leaders in New York at the Economic Club of New York. What he's trying to do is draw this contrast with his Democratic rival, Kamala Harris.
And that move would be a large reduction from the current 21% rate. That was a key policy win from Trump's own 2017 tax law. He said, quote, "I am promising low taxes, low regulations, low energy costs, low interest rates, secure borders, low crime." And he said that, of course, at the Economic Club of New York today, seeking to draw a contrast with his rival Kamala Harris.
Trump also vowed to establish a task force to review federal expenditures, an idea recommended by Elon Musk, the CEO of SpaceX and Tesla. Elon Musk also very focused on what's going on with artificial intelligence, as are we, because OpenAI now has more than 1 million paid users for the corporate versions of ChatGPT. It's a sign that growing demand from businesses for its chatbot, despite significant competition out there from other LLMs. Rachel Metz is Bloomberg News AI reporter. She joins us from San Francisco. Rachel, how are companies using ChatGPT? What are corporations doing with the product?
They're doing a bunch of different things with it. With ChatGPT specifically, OpenAI actually did a survey recently of a bunch of their different users, and it sounds like there were like a few different categories, including like brainstorming kind of stuff, I think summarizing information kind of stuff. It varies from company to company, and I think, frankly, a lot of companies are probably still trying to figure out what exactly they should do with it and how it can be most effective for them so they can justify spending on it, right?
Okay, so the article that you have out is that they just hit a new milestone. So tell us about these 1 million paid users. Who makes up those users, and how does that compare to everyone else who's using OpenAI's ChatGPT?
So these users are a pretty broad set of people. It includes 3 different chunks or 3 different products, I guess I should say. ChatGPT Enterprise, which is meant for larger companies. Teams, which is meant for more aimed towards smaller companies, like maybe if you're a small startup or you're an individual business user. And then there's also the ChatGPT EDU, which they launched in May. So that could be for universities, for instance. And it's important to note that this number is the number of users, individual users. So it's not actually the number of customers total, because one customer, like let's say a company like Lowe's, which has worked with OpenAI for a while, Lowe's might have, I'm just pretending. Let's say they have 500 paid seats. So that would be 500 individual users, but Lowe's is one customer.
That's a really important clarification and a really important way to think about these numbers. I'm also curious about revenue and how much these customers are paying, how much these different versions of ChatGPT cost. What do we know about how much subscriptions cost?
That's still kind of opaque to me, I have to admit. What we do know is that this overall is but a chunk of their overall revenue. We know, I think they recently said that there are 200 million, I think, weekly ChatGPT users more on the consumer side. We don't know how many of those, they won't break out like free versus paid. That paid would be the ChatGPT Plus users. So we know those people are paying $20 a month, right? But they also have their API business where developers can use OpenAI's tools, ChatGPT, and other AI tools in their own applications. So what this shows us is that this portion of the business is growing really quickly, but there's a lot of questions that I still have about what about the other parts of the business? How are those growing and changing over time?
Hey, because we have you, I'd be remiss if we didn't ask about the breaking news out of Adobe a little earlier today, because it is related to AI, and you are AI reporter for Bloomberg News. The Adobe executive, Dana Rao, who was central to establishing its AI strategy and led it through a failed antitrust battle, is leaving the company. Help give us some context here on to what this personnel move means, just in the last 30 seconds that we have with you.
Sure. I mean, Dana was helping the company through a bunch of different key moves as it got more and more into generative AI. Adobe has worked on various aspects of AI and bringing AI to its customers and experimenting with it over the years. But while Dana was there, they brought a lot of different things to their customers as far as AI for generating images and other products that are related. Now it's kind of a up in the air question mark of who's going to step into that role and if they will do similarly as what Dana was doing.
Rachel Metz, she is a Bloomberg News AI reporter joining us from San Francisco. Check out all of her stories and more on the Bloomberg Terminal and at Bloomberg.com. That is going to do it for our TV hour of Bloomberg Business Week. If you're sticking with us, we got a great program coming up. We got Richard Edelman joining us from Edelman in just a few minutes. If you're sticking around for On TV, The Close is up next.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio in New York, it is a Bloomberg Business Week. I'm Tim Stenivek, usually joined by Carol Massar. She is on a well-deserved vacation. And filling in for her, we got Bloomberg News cross-asset reporter Emily Griffeo. Not just yesterday, not just today, we got you tomorrow as well.
And it's going to be a big day tomorrow with the jobs report. Hotly
8:30,
anticipated.
right?
And then even after our show, we have the S&P 500 rebalance announcement.
So you're all over that.
Yes, I am.
Do we have time? Why is that so important?
Well, it's the S&P 500, and so it's a big deal when a company gets added into the index. And it's also, the S&P is unlike other indexes like the Russell, where they just go by market cap. There's actually a committee that decides which stocks enter, and it's a very secretive committee. So no one really knows what's going to be added until that announcement comes out at 5:15 on Friday.
I remember a couple of years ago reading Eric Balchunas's book. He brought that up in his book. There's a part in one of the chapters that talks about how the S&P 500 actually, if you buy an index fund for the S&P 500, that is in some ways active management because you do have this committee that is the gatekeeper as to whether or not a stock is actually in there. Okay, so we're going to look for some stories from you. Somehow you're going to get those stories done while you're on air, or maybe before you're on air with us. Hey, speaking of being on air, we got a great program coming up. As I mentioned, Richard Edelman is from the CEO of Edelman. He's going to be here in just a few minutes talking about the Trust at Work report. We're also going to be joined by Crawford Del Pret, who's over at IDC, with an outlook on the semiconductor industry after the beating that it's taken this past week. Looking forward to that interview. And how about rounding out the program with a little Bloomberg Pursuits, talking about what's going on with Beetlejuice. Have you seen that?
I haven't.
Not yet.
Not yet.
Okay, not yet.
I'm excited to watch it, though.
All right. All that and more coming up over the next 2 hours. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Right, thank you very much, Tim and Emily, as we move into the final hour of trading on this Thursday, Jobless Claims Thursday. Developing story, though, first. Prosecutors urging a judge to reject Hunter Biden's proposed plea to avoid a trial on federal tax charges. That's according to the Associated Press. Stay with Bloomberg. We'll have more coming up as we get more details. The Dow, the S&P, both in the red right now. NASDAQ higher. S&P lower by 11, down 0.2%. S&P right now 55.08. We've got the Dow down 182, drop there of 0.4%. And NASDAQ, the composite index, up 54, up 0.3%. NASDAQ 100 index holding on to a gain of 0.1%. 10-year yield 3.72% with a 2-year 3.74%. Gold, spot gold up 0.8%, 25.15 the ounce. And West Texas Intermediate crude up 0.1%, 69.30 for a barrel of WTI, holding below $70 a barrel. Wall Street, of course, looking ahead to tomorrow morning's jobs report for signals about what it means to the Fed and its path of rate cuts. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
You know, there's a debate over where the unemployment rate is going to go. Even at RBC, our data science team thinks it's going to go to 4.3. Our economists think it's going to go to 4.2. So, you know, there's a real debate on you know, kind of how much it's going to go up, right? And I think that the bulls really want it to go up enough to keep those Fed cuts on the table, but probably just want consensus to be met at this point.
RBC's Lori Calvasina. Verizon Communications makes it official. It is buying rival telecommunications operator Frontier Communications parent for about $9.59 billion as the New York phone giant looks to expand its high-speed internet business. Both companies are trading lower. Verizon down 0.7%, but Frontier tumbling now by 9%. Again, recapping, stocks are trading mixed. S&P right now down 12, a drop of 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie. Certainly do appreciate it. Well, we just got the index update from Charlie Pellet, the business news, the market moving stories, the S&P down 0.2% right now. I'm curious what Abigail Doolittle has her eye on. She's chief markets correspondent for Bloomberg News. I want to talk about some companies.
Yeah, lots of interesting movers.
Lots of interesting movers. Before we get there, I heard, well, in my intro, we were talking about, we have Crawford Del Pret coming on later today from IDC. He's going to talk about semiconductors. The stocks, down 8% this week?
Yes, at least it was earlier. Let's see what it's doing right now. So the stocks is down 30%. So yeah, it's down about 8% on the week. And it's interesting because, of course, NVIDIA is a big chunk of that. The thing that's just before I break down individual stocks that are down, what stands out to me about that is the stocks in the Russell 2000 are often leading tells in terms of both moves to the upside and to the downside. Now, you have the Russell 2000 for a couple of years, about 10% plus, 10% or more below its all-time high. So as all these other indexes have been making all-time highs, the growthier, more domestically based stocks, they have not been doing that. So the fact that we now have this stocks down so much on the week in contrast to the moves for the other indexes, and I'm going to do what I love to do on the show, which is live charting. So the stocks today hitting back down onto that 200-day moving average. It already crossed below it earlier in the month of August, when we had that sell-off. When you see an index hit down, if it does not bounce sharply off of the 200-day moving average, it, to me, based on my experience, one thing is the first dip down onto a moving average, you buy it. The second you sell it, because it's those buyers kind of rethinking it, and it just doesn't point to strength. Overall, there is actually a pretty bearish configuration there, which matches up with NVIDIA, because NVIDIA, its chart now, NVIDIA on the day is higher. Over the last 6 days, though, it is down about 15%, the worst stretch going back to September of 2022. NVIDIA's chart seems to me, not only is it very likely to go back below 100, it seems like it will go to a minimum of 70. It could actually go to 40. Now, while that seems outlandish, given the fact that it had been a $140 stock and right now is above 100, it was at 40 about a year ago. So that's just how far and fast it went. And a lot of times, I've said it so many times, NVIDIA's move I don't really consider to be parabolic, because there's a lot of nice consolidation in there. But for a parabolic uptrend, and while it may not look that way, and actually I'm going to pull it up in a form where it may look that way, that tends to reverse itself. There's just, you know, if you think about if you were going to build a building or stairs, you know, so you know, you do it over time. You do it in a way so that you move up, you move down, you move up, you move down, as opposed to straight up. So NVIDIA, I'm just taking a look at a chart in a different way to see whether or not it was parabolic. So from this one view, it actually is not, but I'm guessing, yeah. So what it was parabolic earlier it was parabolic twice this year on a non-log chart. I mean, this chart actually just looks awful. I mean, it looks really,
you got to tweet
terrible.
It out.
It actually confirms, I mean, not only was it a $40 stock at this time last year, it was a $40 stock earlier this year. So it's just basically the possibility of this entire year, bye-bye. You know,
how much is that going to weigh? Not to cut you off, but how much does that weigh on the S&P 500?
It would be an issue, not only from the standpoint of its weighting to the S&P 500. The last time I look, and I'll pull this up right now to see, it was the third biggest member. At one point, it was the largest weighting when it had the $1 trillion. Actually, I don't know if that's true, but when it had the $1 trillion market cap. But from a weighting standpoint, you guys are going to get a kick out of this. My terminal right now is in Italian, so it's taking me a little bit longer to do everything.
Oh, that's
so
amazing.
it is the third largest. So I don't know. I mean, I know pieces of Italian.
You just clicked the wrong. When you were signing in, you just clicked the wrong.
Well, I know
before.
French, so I'm doing a little bit there.
This is amazing. Real-time charting with Abigail in a foreign language. Yeah,
Translation.
that's amazing.
NVIDIA is the third largest holding, so yes, it will, and it's not that far behind Microsoft or Apple. The bigger thing, though, and this is probably what you're getting at, is from a sentiment standpoint. If all of a sudden the poster child for the AI craze reverses in a massive way, which, let's face it, it's already done that. It is already down about 30% from its peak, but if it gets bigger, that's going to be a problem for stocks overall. That is going to be a sentiment headwind. And frankly, there's a lot of there's a lot of individual charts that look that way. When you put them together, it's not great.
Hey, before we let you go,
Yeah.
Tesla, when you sent your note this morning, it was only up a little over 2%. Now it's
this is a
last check was
curious
up over
one
4%.
to me.
Is this all because of an AI announcement in China?
Well, so there's actually
automated driving.
there's actually this headline on the terminal. This is not in Italian, otherwise I wouldn't be able to read it. But Tesla bear slams FSD China release timeline as "quote unquote" meaningless announcement. Coming from Wall Street, a lot of times I find that the media does try to ascribe moves to stocks just to say what's happening, as opposed to just that there's a big buyer somewhere buying it. You know, for this stock to be up 4.5% on that, it doesn't make sense. There's somebody buying it for some other reason. It may just be that they think that, you know, they're kind of buying this dip. But yeah, that's the move for Tesla out is certainly much more than what I would suggest is the impact of that headline on the numbers at some point. I mean, that'll be a rounding error, you know, in the bottom line.
Tesla up 4.5%.
It's a big move. It's hard. You know, I think that somebody is just buying the recent dip.
Hey, that's a fair explanation. Abigail Doolittle, Chief Markets Correspondent here at Bloomberg News. This is Business Week. When we talk polarization, especially these days, it's often in the context of politics. But there's more to polarization than just political polarization. That includes economic polarization, which is, as you guessed it, people on opposite ends of the economic spectrum. And according to our next guest, economic polarization now showing up in the workplace, and it has real implications when it comes to productivity. Richard Edelman is CEO at the global communications firm Edelman. He joins us from New York. Richard, we check in with you periodically thanks to the updates that you and the team over at Edelman do to the Edelman Trust Barometer. It's a global survey. It looks to understand why people think the way they do. What did you find about economic polarization, especially in the workplace?
So what we found is that, in fact, the so-called associates, the working class people, have a much lower opinion of institutions than the executive class, and that gap has just widened over the last 5 years profoundly. And so now there's a 40-point gap between, again, what the worker thinks and what the executives think about trust in business, government, media, and NGOs. And that is to do with the experience of globalization, the experience of COVID, and then the experience of inflation. And so even though their wages have gone up, people are terribly nervous also about the fear of AI.
Does it also have to do with compensation, though, and the different way that people are paid for their work when they're, I don't want to say at the entry or managerial level, but no question that C-suite pay has absolutely exploded over the last couple of decades. I mean, we have it available on the Bloomberg terminal. You can go look it up for publicly listed companies. It's just mind-boggling how much these executives are paid, I think, to a lot of people. They would say that it's, you know, that's the market rate and that's what, you know, they're bringing that value. But does that distinction at all have any effect on how people think about economic polarization?
It's certainly to do with pay, but it's also to do with the projection of economic future. And when you look at the 45 to 65-year-olds, only 19% of our respondents said that they believe that their families are going to be better off in 5 years. Whereas the younger, 65%, you know, the 18 to 35-year-olds, they believe in the future. And so, again, the 45-year-olds have seen globalization. They have a huge fear of being, in a sense, exiled from work by AI. So upskilling becomes a urgent matter for business so that people are calm about their future. And if there's going to have to be change in your size of workforce, just tell them the truth and, don't let it creep up on you.
How did the survey define and measure economic optimism? Can you perhaps maybe share some of the questions that were asked of the survey participants?
So it's a very simple question, which is, do you feel your family is going to be better off in 5 years? And we see a consistent diminution of expectations in the people in the lower economic echelons. And particularly, again, the people who are 45 years old plus. And it's partly the experience that they've had with globalization, which their younger group hasn't, and the projection of AI, which everyone is nervous about, but the younger feel somehow better equipped to do it.
And what did you guys find about just why economic optimism for those employees is so important? I see in the notes, it drives employees to be more civically minded.
Well, from a practical point of view, if you're a business owner, it's more employee loyalty, more employee advocacy, and they're much more willing to engage in transformation of the business. So, for example, if you're optimistic about your economic future, you're much more willing to accept AI. But it shifts completely to the opposite if you're nervous about your economic future. So all of this is circular. And the virtuous circle that we need to do is calm people down about their future, pay them well enough, then they'll be your advocates and loyal to your business. And they'll also, by 2 to 1, put in the extra effort that, make sure that the company will succeed.
What does it mean to pay someone enough? How do you know what enough is?
I think enough is that people feel as if they are staying ahead of inflation, that they have the chance for a better life, for a house, for retirement, because at the present, all of those are in question. And, this, of course, then becomes political in the end of, which party has a better idea for the future.
Besides just pay, how else are you seeing companies react to this low level of employee economic optimism?
So I think CEOs have thought in the last 3 or 4 years that one of the great plays is to be public advocates on sustainability, diversity, inclusion, geopolitics even. That's reversing. And there's a sort of rebalancing of stakeholders. So Wall Street and customers and regulators matter equally to employees. So CEOs are well advised to continue to speak to their own workforces about these societal issues, but not to become public advocates. Also, companies are responding by what is termed as agency, giving people within the company the chance to feel as if they're making an impact, to give them a voice, to listen to them, to have town halls and other ways of expressing your desire to learn and listen.
Richard, before we let you go, we just have about a minute left, but you're CEO at Edelman.
Yep.
Are you using AI right now? How are you using AI if you are?
So personally, I write my blog post every week. My ChatGPT is my English teacher criticizing my ideas and my grammar, which is very helpful. I also ask the ChatGPT to help me on formulating my company strategy document that I just have to prepare for my board for next week. And I am pushing myself to use it. And I'm also asking my younger employees, how are you using it? We're putting it on 5,000 desktops across Edelman in the next 3 weeks. And we know that we have to be efficient. We know also that we have to be smarter. And that's the key. We don't want to take jobs away. We want to make our work better so that we can get premium pricing for our work.
Hey, it's an interesting way to think about it. Richard Edelman, CEO at the global communications firm Edelman, joining us this afternoon from New York. We just got a little over 40 minutes until the markets close on this Thursday. We're seeing the S&P 500 down 0.4%. Up next, we preview tomorrow's jobs report. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ right now are trading mixed. We have got the S&P down 28, a drop there of 0.5%. Dow lower by 282 points. That is a decline now of 0.7%. While the NASDAQ Composite Index holding on to an 11-point gain, up by about 0.1%. NASDAQ 100 Index, though, in the red, down 0.2%. 10-year at 3.72% with a 2-year that's now yielding 3.74%. Spot gold up $19 the ounce, up 0.8%. 25.15 is where spot gold stands now, and West Texas Intermediate crude up 0.2%. 69.33 for a barrel of WTI. Stocks have been pushing away from session lows as traders gear up for the jobs report tomorrow morning that will likely be key in determining the size of a Fed rate cut in September. Lisa Shallot is Chief Investment Officer for Wealth Management at Morgan Stanley.
We're in the soft landing camp. We're looking for a solid jobs creation number. You know, hopefully we come in right at the consensus, and that means a market that starts to broaden, right, and suggest a Fed that is going to be measured and go somewhat slowly.
Lisa Shallot of Morgan Stanley, and of course the number hits 8:30 a.m. Wall Street time. Complete coverage and analysis here on Bloomberg. Paramount Global, parent of CBS, will be controlled by software billionaire Larry Ellison after a group led by his son David completes its purchase of the Redstone family's interest in the film and TV company. This all according to a regulatory filing. Paramount Global shares down now by 0.3%. After the bell, Broadcom and DocuSign, both stocks trading lower. Right now, Broadcom down 0.1%, DocuSign down 1.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thanks so much for that update, Charlie Pellet. I can't talk about it enough, Emily. We are all focused on that jobs report tomorrow, 8:30 Wall Street time, because Fed Chair Jay Powell has put the labor market at the heart of the central bank's decision on when and how quickly to ease. So how are things going to look tomorrow? Well, if you go to EcoGo on the Bloomberg terminal, you can see that economists surveyed by Bloomberg are expecting 165,000 jobs for the month of August. So we'll see if it comes in at that level, higher or lower than the level. And of course, there's going to be a close eye on revisions.
And the unemployment rate, which they're expecting 4.2%. That would be a drop from the 4.3% prior. But as Mike McKee told us, watch the rounding.
Yes,
because
he's all about the 3 decimal places, right?
They report in a 3 decimal place. So traders might not see that. They might only see the 4.2.
I'm curious what Martha Heller is seeing. She's founder and CEO at Heller Search. It's an executive search firm. It specializes in IT leadership roles. She joins us from Massachusetts. Martha, good to have you back with us. Remind everybody the subsegment of the workforce that you're looking at, because you're not seeing the entire workforce, given that you specialize in IT leadership roles. But remind everyone what you're seeing.
Sure thing. So what we look at is the technology workforce across all industries. So yes, high tech, but we're also looking at retail and insurance and manufacturing. So it's every industry, but that particular technology workforce. So for us, we're of course very interested to see what the numbers tomorrow hold, because they're either a bellwether for growth or they're going to indicate a shrinking of workforce market, which of course we're not excited about. But to me, and what I'm seeing, Tim and Emily, is something bigger than whatever the jobs report shows tomorrow. And that is really in how much AI investments are driving job growth in the next 12 to 18 months. If we're talking about a $600 billion overall investment in AI, which is some of the numbers we're hearing, people need to give a return on that investment. You need engineers and integrators and developers and analysts and data scientists. And keep in mind, every time we open an AI opportunity on our big businesses, we open a security risk. And the fact is, experienced AI security engineer is an oxymoron. It doesn't exist yet. So regardless of what tomorrow's numbers show, I believe overall, from Silicon Valley to middle America, manufacturing, retail, we're going to see an overall uptick in hiring in tech due to the need for people to make that AI dream come true. We'll see how that all happens, but I think in the next 12 to 18 months, we're going to see an uptick in technology hiring across the board.
And what trends are you seeing right now? Because would this be an uptick from, a downturn in hiring? Just talk about maybe the last few years, this demand for more jobs in IT. Has it been steadily growing, or did we see a peak just a few years ago and now we're kind of working back up to that?
We saw a peak during and immediately after COVID, because we needed all those technology people to get all those people working at home. Once we had that, we had a catalyst in terms of digital transformation. Maybe we wouldn't have all been so digital if COVID hadn't come along and sort of forced that on us more quickly. And as a result of that, we've seen tremendous hiring. We now need to fund our digital products as an insurance company. We now need to do more digital access for our people buying groceries. That was all sort of put on turbo based on a sudden health scare that got us into this space. So I see this starting from before COVID and increasing steadily. Yes, we've had a hiccup with this jobs report or that jobs report, but I think honestly, since COVID, we've had a very strong uptick in hiring in IT across these businesses.
When you talk to these IT professionals, where do they want to work? Because I understand that nearly every company and probably almost every industry needs these tech jobs and these IT-focused people, but they might be in unconventional places where maybe a person who works in tech isn't thinking, oh, I want to go do software engineering at a grocery store chain, for example.
It's a fantastic question. And the first thing I would say, and it's so sort of banal to talk about, but they want to be remote. They don't want to come into the office. So that's first thing in terms of where they want to be. I'll also say what they want is to work on complex technology problems. They want to learn the new skills. So they don't want to come upgrade a payroll system. They want to run AI on a payroll process. So indicating to these folks, wherever you find them, that technology is the forefront of what you're doing and they're going to get to do exciting, meaningful work. That is the message to communicate. In terms of where to go, tools are getting easier. AI is making software engineering easier or simpler. So we don't need necessarily the MIT trained computer science PhD in our businesses. We need people who can learn design thinking, they can do good training, they have a passion for the mission of the business. So we can start to really expand where we get our technology people from, particularly when AI makes some of those software engineering jobs repetitive. And now we need people who can look at our businesses and say, I have an idea for where AI can help us. So that's really not any particular education at all. Right? These are people who have passion, they understand processes, they want to create change. They're not necessarily all technologists.
Yeah, it's pretty incredible to see what can actually be done on some of these LLMs already.
That's right.
I've played with them a little bit, but I don't even have the capability to do what some people are able to do on these, Emily. I saw on Twitter/X, somebody posted a video of asking an LLM to create an app for them that had these certain parameters, and the thing completely spit out code. It was amazing.
You have to know how to communicate with it.
You have to be a prompt. Is it a prompt engineer? Is that right, Martha?
That's right. It's a prompt engineer. And even more, when you bring up, Tim, that you played around with this, if you had to invest $100 million in it to produce $300 million in revenue, suddenly that chat GPT or whatever you're using, you might look at and say, how am I going to get the money?
Yeah, that sounds pretty good to me, actually. Do you have some ideas, Martha?
I have a lot of ideas, yes.
Okay. Hey, I'm curious about what you're seeing when it comes to compensation right now. We watch wages really closely. What are you seeing? What's typical compensation for somebody you place?
That's right. So, I mean, the folks we place typically are the technology leaders in these Fortune 500 businesses. So they've fully loaded packages with long-term and short-term. I'm seeing them obviously in the 7 figures. And then it depends. Is it a Fortune 20 company that now you're going to have? I talked to a CTO of a major media conglomerate the other day, and he's making $8 million a year, right? The CIO of a small company is not. But what we're seeing overall is CIOs and CTOs are now becoming officers of their companies. They used to report to the COO, the CFO. Now they're reporting a click up to the CEO. So their compensations are changing. They're now in that EVP or C-level band. And as such, all of their people get a lift. So as technology becomes forefront to everything we're going to do and the way we're going to secure our data and all of that, that becomes so important that compensation is going up. Could I give you a range over? I'd say maybe 20% over the last couple of years.
Oh, wow.
But it's gonna vary from industry to industry, obviously.
That's, compensation and pay. To what extent are these professionals looking for additional benefits? I know you had mentioned that a lot of workers are looking to work from home and be fully remote.
That's right. So that's one thing. And I would say what they're looking for more than anything is meaning in their work. I could plug in this widget over and over again, but how is this widget helping people? How is it having an impact on shareholders? What's the meaning behind my work? I think COVID kind of threw everybody for a loop and said, wait a minute, I did everything I was supposed to do, and then this thing happened, and now my course has been thrown off. So how do I want to spend my time? I want to spend my time having an impact. So more than anything, yes, let them work at home, fine, give them a good culture, let them have mentorship, but they need to know the why of what they're doing. That, to me, is the focal point for attracting good people.
We don't have a ton of time left, but I'm wondering what you're seeing as the biggest risk to this industry right now. Are people fearing layoffs at all?
What the biggest fear that I'm starting to see bubbles of or percolation of is the bubble. How on earth are we going to get all this return on this AI investment? Because remember, it's cool to use ChatGPT, but when you have a $200 billion business and you have to get all your data integrated in a way that AI can even matter, that's a big lift. So what I think we're going to see is something akin to the .com bust of 2000, where in 2 years, all those AI startups, they're not going to, I mean, this, again, this is just a prediction. I think we're going to have a big AI bust. And then over the next 3 to 5 years, just as what happened with digital and e-commerce, companies are going to understand how to use it. We are going to get that return on that investment. And I think out 5 years, we're going to be living differently. I don't know about you folks, but I remember analog. I remember the telephone that I would pick up and dial. And now life is so different. I think life is going to be as different. But we need 5 years to drive adoption of these tools and get our companies in shape and get the profitability from them to make it worth the board's while. So what's the risk? I think the risk right now is an AI bubble. Right behind that is board level security preparedness for AI. Those, I would say, are the two.
Okay, so big changes coming in the next 5 years. We'll be sure to check in with you quite a bit between now and then. Martha Heller, founder and CEO at Heller Search, the executive search firm that specializes in IT leadership roles, joining us from Massachusetts. Taking a look at the indices as we do get about 25 minutes to the close, down 0.2% on the S&P 500. Coming up next on Business Week, we're driving to the close. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower again today. Right now we're looking at a mixed market, but let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are churning right now with the Dow currently down 243 points. Was down 455. S&Ps are lower by 21, but NASDAQ is higher by 0.2%. The U.S. 10-year yield falls to 3.73. Gold is up 19. Oil is in the green, but Bitcoin, that's down by 3%. Among the main 11 S&P sectors, only consumer discretionary and telecom were in the green. Healthcare and industrials were under pressure. And leaders to the upside in the Dow, Merck and Amazon, while Amgen and Coca-Cola led to the downside. In the tech space, OpenAI now has 1 million paying ChatGPT business users. And in the healthcare space, McKesson fell 10% after Q2 profit views fell below estimates. Wrapping things up, Broadcom reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg-type squawk, SQUA, on your Bloomberg terminal. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, TikTok, everyone. Less than 20 minutes to go to the close of trading on this Thursday afternoon, just ahead of that August payrolls report, which we'll get tomorrow, 8:30 a.m. Are you covering it live, Emily?
No.
No, you're
Not anymore.
Not anymore. You were.
I was. I will be watching it. I will be tuning in.
Okay.
But my fingers won't be on a keyboard.
Because you're busy later in the
typing.
day.
Yes.
Okay.
Coming back here.
That's awesome. I love
Exactly.
it. Hey, someone also who is going to be watching this very closely, I know, is Jason Britt, and he's founder and CIO at Reflection Asset Management. He joins us for our drive to the close from Mount Pleasant, South Carolina. Jason, how are you?
I'm well, Tim. How are you?
We're doing well. You guys have about $6 billion under advisement, $200 million in 2 publicly traded funds with not an ESG focus, something that you like to call SEE. Why is ESG no longer the way to describe how you're thinking about this stuff?
Great question, and I get that all the time. I think predominantly ESG as a term has been weaponized by the right, and that there's been a lot of stories and a lot of uncovering research around the quality of that data, where that data is coming from, and frankly, how that data should be used. And from our clients' perspectives, that they're corporate decision-making tools. So we use SEE because it's an investor's perspective first.
Stakeholders, environment, ethos are the way you think about those things. So that's like a screen for you?
It's actually a series of screens. So its purpose is not that different than you've seen ESG be used before. The difference is that rather than being a business decision tool for companies to avoid ESG risks, ours is a process to uncover and label those companies so they can be aligned with investors' values.
What do we know so far about whether, looking at SEE contributes to positive returns? Because I know some complaints with some of those ESG funds, at least in the ETF space, was that they actually looked just like the S&P 500 and so performed, just like the benchmark. And there wasn't much outperformance there.
So that's a great point, Emily. ESG versus SEE is a tool in the toolkit to be used. Neither one of those two things used in isolation will make up for bad portfolio management. You still have to be thoughtful. You're using it as a tool to narrow a list. You still have to be responsive. You still want to pick companies that are going to do well going into a falling rate environment. Just because it does well in ESG or SEE metrics doesn't mean you want to own it in all cycles. You still have to be good at stock selection.
Mm-hmm. So we have the jobs report coming up tomorrow. We have a Fed meeting in 2 weeks, not one. I thought it was next week.
Time flies, though, when you're having fun, so it might feel like 1 week.
What are you watching right now as the biggest risk in markets? Is it further economic weakening? Is it actually data that comes in too hot and prompts the Fed to maybe reverse these plans for a more dovish end of the year?
So that's a great question. I think that I would put them in the following order. What happens tonight with Broadcom will be a tremendous indication of how the market trades tomorrow up until that release. 8:31, I think, is the time that thing drops, and you'll be able to tell right away whether or not it's going to be a 25 basis point or 50 basis point reduction. My view is that a 25 basis point reduction is best case scenario. 50 basis points to me is scary because it'll mean that they're seeing something that the broader economy hasn't necessarily priced in yet, and it'll make me a little more nervous about getting a little bit closer to the potential for recession.
So Jason,
25 basis points. Sorry, Tim, go ahead.
I was going to say, what's the number that you see to know that it's going to be 25 basis points?
I think if we come in at or around where the non-farm payroll number is expected, we should be fine. It's going to be a really big surprise one way or the other, or specifically, to the downside, that's going to cause them to do that 50 basis point drop.
Right. Right now, we are, at least the Bloomberg economists are expecting an addition of 165, which would be an uptick from the 114 added.
What if we got an upside surprise, Jason?
So that's actually not something the market's pricing into the September cut. I think that if you saw an upside surprise, you might see a change in the beige book language as it relates to, but I still think you're going to get a 25 basis point cut. I think Chairman Powell's remarks and Jackson Hole made it that there's not wiggle room there. Like they're really something really dramatic would have to happen, and I just don't see it in the cards.
I want to zoom out a little bit because we had a very volatile August. We really had, I think, a moment in the beginning of August where people thought that the market had taken a turn and there was no going back. Stocks dropped and they were not going to rebound. And then we had a pretty significant rebound. Now that we're headed into September, I feel like, Tim, we've been asking people, what do you expect? Do you expect the seasonality to take over?
Yeah.
See stocks drop in September? Or are you more optimistic? How are you feeling about the rest of the year in light of the fact that we did have, such a significant market move last month?
So I think we're going to continue to see the markets be very choppy between now and the end of the year, even in a lowering interest rate environment. Right now, everybody's trading on news, right? I mean, you saw it with just NVIDIA and investors overreacting earlier in the week to the DOJ subpoena. They had a great quarter, numbers were good, guidance was good, and all of a sudden the stock fell off, a cliff. My opinion is that we should be really looking at, diversifying out of some of the Magnificent Seven because they've had such tremendous run up, and looking at some of the other sectors. Small cap did have a nice rotation trade there when the yen trade unwound. Consumer discretionary stocks, things that will typically do well in falling interest rates environments. It'd be something I'd look to rotate out of the concentration in the Big Seven and into from a diversification perspective.
Let's talk a little bit about what you said with regard to earnings and Broadcom coming a little later today. Why are you looking so closely at results from that company?
I just think that's the canary in the coal mine, and the marketplace got their number from NVIDIA. They reacted to it. I think you'll see significant reaction here as well.
How does a report one way or another change how you're positioning yourself?
So the reality is we try to convince clients that you shouldn't be trying to time the market. It shouldn't be earnings report to earnings report, despite how difficult it is to resist the temptation to try to trade some of these stocks. I mean, if you did a good job at timing NVIDIA, and just in the last 2 months alone, you could have captured some significant alpha by being in and out, riding the momentum trade. The reality is for most high net worth clients and for most investors, thoughtful, broad-based, diversified portfolios, you're going to naturally be over-allocated to tech because of the size, which was back to Emily's point around most ESG or SEE products would look and feel a lot like the index. Well, those companies tend to score well in most models, and they tend to be big drivers of how the market both performs and also is reacted to. So I think Broadcom is going to do a nice job. I expect, at least the whisper is, that the quarter will be just fine. It's all really going to come down to how management handles the questions and what they're going to do in terms of guidance.
Jason Britton, founder and Chief Investment Officer at Reflection Asset Management, joining us from Mount Pleasant, South Carolina. Thanks so much, Jason. Certainly do appreciate your time, and we'll see you next time. Coming up next, we're counting you down to the close.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. That is Emily Grafeo. She's Bloomberg News cross-asset reporter. She's in for Carol Massar today and tomorrow and yesterday. Well, we'll see tomorrow. Depends on how things go for the rest of the day.
Hour.
Yeah. Hey, have you been watching any of the U.S. Open?
I actually did attend.
Oh, you did?
The first time ever.
Amazing.
Last week, I went with my brother. I really didn't know that much about tennis, but I had so much fun.
Did you have like a grounds pass? How'd you do this?
It
What'd
was
you
the
do?
match in which Djokovic lost.
So you were there
Paul
Friday
Piran.
night?
Yes.
Okay, I was there Friday night. I didn't see you. How were you there Friday? You didn't swing back by our Bloomberg Business Week set.
I did.
What time
think
did you
of
get there?
doing that, but
Were you there
I
after
thought
work?
it was too late. It was after work,
All right,
so
yeah.
I figured you guys had left.
We had left being on the radio,
Yeah.
but we had not left the U.S. Open. I think I stayed late into the night. I don't know
Did you
what
guys
time
get
Carol
like
left.
good seats or something because you're
No,
Tim
I mean,
and Carol?
we have media passes, which is great, but
That's
it's
great.
only, you only can sit where the person who you're with has tickets.
That's right.
So my wife joined us after the show, and she did not have a good seat because it's it's
Like,
the U.S.
"Sorry,
Open.
hon."
No, of course I sat with her. Come on, come on. So you saw the Djokovic match.
Yes.
You going to go back? You going to keep watching?
I don't
Are you
know
going to
if
follow
I'm
it?
going to go back because
Not this
the
year.
tickets. Yeah,
Not this year. I mean, like next year.
Oh yeah, next year. Yes, I'll definitely look.
If you
for
live
good
in New
ticket
York City,
deals.
like this is something you got to do. When we
Mhm.
spoke to Kirsten Corio at the U.S. Open, she's Chief Commercial Officer. She kept talking over and over again about Fan Week, and Fan fan week is free at the U.S. Open. You can see the best players in the world. They're playing one another, warming up, having practice matches. That's something that's so cool about the U.S. Open. Also is that you're just walking around and, you know, these players will walk by you and you're, you know, standing next to I believe over 6'4" Sinner or
that's wild.
Yeah, it's
like,
pretty
why
amazing.
do you have to be tall to play tennis?
You don't have to be tall to play tennis. It's just, you know, being tall is an advantage because of your serve and your reach. So
your power.
The folks who tend to get to the top of the game tend to be tall.
And they tend to maybe be the daughters of billionaires?
Oh, look at that segue. She can come back tomorrow, guys. Yes, the reason we're talking about this is because this is one of the most read stories in the last hour about how New York City is cheering billionaire daughters who are chasing Grand Slam tennis glory. We're talking about Jessica Pegula. She's a gritty tennis professional, bruising her way through the U.S. Open at the age of 30. Emma Navarro is a crafty 23-year-old player in the midst of a breakout tournament. Both just so happen to be the daughters of billionaires, and both have been propelled by the backing of the boisterous and patriotic New York crowd in Flushing.
Jessica's father is Terry Pegula, owner of the Buffalo Bills, and a fracking heavyweight worth about $12.1 billion, according to the Bloomberg Billionaires Index. Emma's father is Ben Navarro, founder of Sherman Financial Group, a credit firm that specializes in subprime consumer debts. So have they played already, or they will be playing against each other?
Well, okay, so Pegula upset Iga Swiatek yesterday, so she's going to have her first career appearance in a Grand Slam semi. Navarro earlier defeated Coco Gauff. She paved the way for her deepest run in a major. We'll see. They have both. They're on opposite sides of the tournament draw, so they could play each other in the finals.
Right. Okay.
But if they do play each other, it won't be until the finals. The success of Pegula and Navarro comes at the cost of youth sports. It's under increased scrutiny in a world where competitive athletics requires frequent travel, pricey equipment, and ideally personalized coaching. Having the backing of a wealthy family can be a distinct advantage.
It can hurt, exactly.
Or, depending on where you grow up, is important.
Exactly, is access to a tennis court.
Yeah, Francis Tiafoe, where he grew up, I believe it was in Maryland. He's got an incredible story. He had access to tennis courts thanks to his dad's job.
Yeah, but then you hear about, like, Djokovic, and that was different. He had a different upbringing.
Or Sinner growing up in the Dolomites. He was a really good skier until he decided to focus on tennis.
That takes a lot of money, too.
Good point. You're listening to and watching Bloomberg Business Week. Coming up next, it's our cross-platform coverage of radio, TV, YouTube, and Bloomberg Originals. The countdown to the close starts now.
See some potential moves in the dollar. We're going to break down all of the market action in just a second. Coming up right here on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you to the Closing Bell, a global simulcast. It starts right now, joined in the television studio by Scarlett Fu, Tim Stenovic in the radio booth alongside Emily Grafeo. Carol Masser has the day off. We welcome our audiences across all of our Bloomberg platforms here on a big Friday Jobs Eve.
Yeah, I think that's a good way to describe it. That's the big thing that matters. We just spoke to Jason Britton.
I don't know. I was working on that too.
I didn't get a lot of sleep last night. I was in Korea all night.
The suspense is there. The suspense is there. Don't worry. Mike McKee told us this is the most important payrolls report.
Oh gosh.
Since the last payrolls report.
It's going to be a snoozer. That means we're going to see...
It's not going to be how can it be a snoozer?
Nothing in bond yields. Okay, well, here. The number is 165K jobs added. So if it comes in line, then, I mean, we typically wouldn't see the market move. So
But you know what? We'll just lurch forward and hyper-fixate on the next big data point, CPI next week, right?
That's what we do.
Yeah, well, there's always something to anticipate.
Well, and then to that point, 22V Research polled in a survey said that 44% of investors think the reaction to Friday's job will be risk on, but you have 27% risk off and 29% mixed. I don't know what that means. That's like a coin
big
flip.
shrug.
Yeah.
Yeah, and when you talk about the actual data itself, I mean, we're talking about economist estimates that are right around that 165,000 level, and I kind of wonder what actually constitutes really a beat or miss. I mean, when you look at it on a 3-month rolling basis, we're pretty much in line with historical averages and pretty much in line with what a lot of economists said they're comfortable with. So it'll be an interesting day tomorrow. That comes out 8:30 a.m. tomorrow out of Washington. Meanwhile, at 4 p.m. here in New York, you get the closing bells with the Dow Jones Industrial Average and the S&P looking like they're going to close out the day in the red. The Dow down about 0.5%, roughly 200 points. The S&P down 0.3%, roughly 17 points. The Nasdaq Composite, though, inching out a gain on the day, roughly about 0.25%. Meanwhile, the Russell 2000, S&P 400 mid-caps, and Dow Transports all significantly lower on the day.
We did see more stocks in the S&P 500 move lower than stocks move higher. 373 decliners in the S&P 500, 126 stocks did move higher in the S&P 500, Scarlett.
All right, no one wants to get out too far ahead of the big jobs report. Let's take a look at the IMAP, which shows which sectors are in the green, which sectors are lagging behind. Let's start with the advancers. Consumer discretionary, and that's really on Tesla and Amazon, gaining 1.4% on the day. Communication services up 0.5%, and tech is basically unchanged at this point. You do see pockets of green there within the tech sector. Well, in terms of decliners, healthcare and industrials and in financials, each losing at least 1% on the day.
All right, well, you mentioned my first gainer there, Scarlett, a nice little preview for what did move higher, starting with shares of Tesla up close to 5%, 4.9%, the highest intraday going all the way back to July. It did say that it plans to launch its full self-driving tech in China and Europe in the first quarter of next year. Separately, Adam Jonas over at Morgan Stanley had a note out that highlighted Tesla's underperformance versus other tech megacaps and suggested keeping near-term expectations regarding the firm's robotaxi, quote, well managed. Remember that robotaxi is set to be unveiled at an event next month. It was supposed to be unveiled back in August, but October 10th is the date that they're targeting now. Let's go to the skies for the next stock that moved higher, JetBlue Airways. The shares jumped after the company boosted its revenue forecast for the third quarter. Look at that, higher by more than 7% today. JetBlue said it actually benefited from rebooking passengers from rival airlines whose flights were disrupted by that tech outage in July. Remember, it was that software update from CrowdStrike that upended multiple industries. Over a few days in July, it forced airlines to cancel thousands of flights. Delta was affected the worst. Some carriers, though, largely sidestepped the problems due to their use of other systems. And finally, one of the most actively traded stocks today was Applied Digital. They do data centers. APLD is the ticker. Shares surged more than 65%. The company entered into definitive agreements for a $160 million private placement financing period from a group of institutional and accredited investors, including NVIDIA. Still down a little more than 20% so far this year, though, Emily.
All right, well, I'm looking at the decliners. First, watching Old Dominion Freight Line, those shares sliding as much as 7.2%, but paring back some of the loss to finish the day around 5%. This is after the company said that less than truckload tons per day, that is the metric that these trucking companies use, it fell in August, or it fell 6.1% from the prior year period. A lot of trading in the put options. Those are bearish options. We saw that volume more than triple the average today, so more investors piling in on the bearish options bet for that trucking company. I'm also looking at Frontier because that stock, if you guys remember, surged 37% yesterday after the news that Verizon was in talks to buy that communications company. Today, paring back that gain, so now the share is falling about 9%, but still up higher after that news. And this came after we saw today, Verizon said Frontier's investors will get $38.50 a share, a 37% premium to the closing price on Tuesday. Finally, I'm looking at ChargePoint Holdings. This is an EV charging solutions company. Those shares down as much as 23% on Thursday, paring back some of that loss, but not much. This was the most intraday drop since November after the company's revenue forecast for the third quarter missed estimates, and the firm announced that it plans to cut 15% of its workforce. Some analysts downgraded the stock, citing an unclear path to revenue growth and an EV recession.
Ooh. Well, that's not very good. I mean, if you don't have the charging stations, then how do you buy an EV? And that can be stressful if you are a car buyer. All right, I'm looking at the bond market here. Yep, the bond bull continues to reign, particularly in the back end. You have the 2-year flat, and you have the 10-year just down by about 2-3 basis points here. Basically a parity for the 210s, but the volatility is definitely picking up within the bond market, all set up for Jobs Friday.
All right, well, we got to go. We're too excited for Jobs Friday to stick around. We don't even have time to hang out with you guys anymore. Emily and I are heading back to radio and YouTube. Alex, you're heading out. Scarlett and Romaine, you're going to continue on TV. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We'll be back tomorrow, same time, same place.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Emily Graffeo. I am Tim Stenevec. Emily in for Carol today and tomorrow. Not next week, though, right?
I don't think so.
You don't know yet. Okay, maybe you will be.
I don't know.
Maybe. Well,
I
Carol's
think I'm here in 2 weeks from now. I'm here during the Fed week.
That's
which is not next week.
That is okay. So that is not when I'm here, though. You're filling in for me then. So.
Oh my gosh, I've never been on with Carol. That'll be exciting.
You guys are going to have a blast. Okay, so let's talk a little bit about a story that was written as a result of an interview that happened during our program a little earlier. It's about how John Paulson, hedge fund billionaire, wants to have the world's largest sovereign wealth fund. He says that the U.S. should build a sovereign wealth fund that surpasses Norway's $1.7 trillion money pool. It's an ambitious, if unlikely, goal for a country that has struggled to rein in trillion-dollar deficits. That's my question. How do you have a sovereign wealth fund if you have a deficit?
Right. Where would you get the money, and what would they invest in? I wonder.
Well, you look at a country like Norway that has, interestingly enough, a sovereign wealth fund as a result from its vast oil riches.
Right, and that's the largest in the world, right? The largest.
I don't know if it's the largest in the world, but it's a huge one, and they invest everywhere.
Right.
And they've tried to use that money, maybe ironically, maybe not ironically, that they made in oil to invest in a lot of renewable solutions.
ESG solutions. Yeah. He also said that the Federal Reserve has waited too long to cut interest rates, which by this point, that's not much of a contrarian view. It feels like everyone is saying that the Fed is behind the curve. He estimates that we would see the Fed funds rate around 3%, perhaps 2.5% by the end of next year. And if you pull up the WIRP function on the Bloomberg terminal, that's a little bit lower than what traders are pricing in. For the end of 2025, traders pricing in about 2.9%.
Okay.
So just about there.
Check out that story and more on the Bloomberg terminal. It is among the most read in the last hour on the Bloomberg terminal. Also among the most read is what's going on with semiconductors, with chips, with the future of AI. For example, Hewlett-Packard Enterprise shares fell today by more than 6%. The computer hardware and storage company reported weaker than expected margins. It offset a tailwind from AI-related demand. With more on what the industry looks like right now and why the SOX has been under pressure this week, we turn to Crawford Del Pret. He's president at IDC, International Data Corp. He joins us from Massachusetts. Crawford, good to have you with us. How are you?
Hey, great to talk to you, Tim. How you been?
Hey, we're doing pretty well here. Trying to understand the message to take away from Hewlett-Packard Enterprise earnings that we got late yesterday. What was your takeaway?
Yeah, I had a conversation with Antonio yesterday afternoon, and they're very bullish. I think it probably comes down to expectations and expectations around AI, and obviously the expectation around margin expansion. If you get underneath, and I've been following this company for over 20 years, I've never seen enterprise demand so strong and consistently strong. And I think it is a great time to be in the infrastructure business right now, and I think Antonio's comments really reflect that. We expect they saw very, very strong demand for total revenue. They saw over 10% growth. They also saw very strong demand in their core server business. Their core server business increased 35%, and that was fueled by AI, but it was also fueled by an upgrade of core infrastructure and core servers that customers need just to run their business on a day-to-day basis. And there was sort of a lull after COVID. Now I think customers are starting to re-engage in two fronts: for their core business, and then also, and most importantly, being fueled by AI. So I think and again, we don't pick stocks here at IDC, but I think that there was probably a lot of expectation around AI, and I think the message that the market probably was excited about that. But what I heard yesterday was there is a sustained demand for AI-based systems, and this is the spot where you're seeing it in the market from an overall growth standpoint.
We also spoke to Antonio Neri. He was on Bloomberg Technology a little earlier today, speaking with Ed Ludlow and Caroline Hyde. Let's take a listen to what he had to say.
We now have to run AI at scale. We have done it for decades. It has been more than a supercomputer, now in generative AI, and that comes on the back of our unique expertise in IP, intellectual property. So we now have to build these systems, have to cool it, and then we have a unique manufacturing footprint for water cooling.
That's Hewlett-Packard Enterprise CEO Antonio Neri a little earlier on Bloomberg Technology. Crawford, go ahead. I know you were going to say something.
Yeah, so what he's talking about there is that they bought Cray a number of years ago. And when they made that acquisition, they actually acquired a significant amount of footprint in HPC, high performance computing. And they did acquire a significant amount of advanced cooling technology and ability to really handle complicated systems. And I think that's kind of another area that people haven't really gotten their head around with HPE, is that they've increased their footprint up into these high-performance systems, and high-performance systems and AI for the hyperscalers, it's not exactly the same, but the technology can be borrowed. And that's what he's really talking about. These systems are complex, they consume a crazy amount of power, and they need to be cooled in pretty sophisticated ways. And HP's got a lot of technology to do that. So, again, I think the market's probably going to wake up to that over the next, few quarters.
Okay, so let me get this, make sure I have this straight. HPC, not HPE, and not
HPC being high performance computing.
Okay.
Exactly.
All right, just keeping track of everything there.
Yeah.
Wow, that was so funny, Tim. Okay, well.
She can't come back tomorrow.
Yeah, I'm not allowed.
Rude.
Crawford, I know you said you don't pick stocks, but I have to ask because HPE is down almost 9% on the week. It was lower today. What are investors missing right now?
Oh, I think there's a lot of trepidation. Well, and again, they may not be missing anything. I mean, there was a lot of excitement around AI, and there's continued to be a lot of excitement around AI. And I think the world is just very, very cynical about the infrastructure segment. I mean, this segment historically has been a punching bag, right? I mean, this segment has been the Rodney Dangerfield, getting absolutely no respect. And I think it's hard to get your head around, well, if the semiconductor stocks are doing super, super well, then it would stand to reason that those semiconductors get wrapped into systems and then those systems get sold. So just to put some harder numbers around it, for 2024, we think that the server and storage market will grow in constant currency, in real dollars, around about 20%. That's 20%. This is a segment that, from a growth standpoint, grew at half that rate last year. I mean, so we're seeing a significant uptick, all really largely based on AI. And I think what investors are really worried about is, did expectations, and again, we don't pick stocks, but did expectations get too high, and have they, will they be coming down from here? And I asked the question very pointedly to Antonio yesterday, are you seeing demand starting to wane? His answer was very straightforward. No, I'm not. I'm seeing very, very sustained demand going forward.
So does that make you, again, you're not picking stocks, but there's an economic signal in there, no? Or is it not fair to look at that as a measure?
So this is the way I think about it. The way I think about it is that you start these transitions with AI. The question is, have we seen a massive trigger, and have we seen the exuberance get so high? And I think we have seen that. And I think the question is, where will you see the benefit of AI? And I think that the benefit of AI is going to take a lot longer in application software and in as-a-service software. There you're going to see, it's going to take a while to get those features rolled out. I think you're seeing an immediate benefit to the semiconductor suppliers. You're seeing a very near immediate benefit to the infrastructure suppliers. And in the case of HPE, I think that people are just, thinking, how long can this go on? And so I think we are going to see some sustained demand going forward. But again, I think the market, is also looking for HP to be able to expand its margins over time. And that was something that they didn't see enough of in this quarter. But I think if you buy into the idea that is the underlying demand there, I am seeing the underlying demand there as it relates to the rest of this year for the server and infrastructure segment, which is the very, very large segment for HPE. Now, beyond that, as you start thinking about HPE's overall strategy, they've leaned in to wireless networking in a huge way with their acquisition a number of years ago with Aruba. And now they're leaning in to service provider networking as they're trying to complete their acquisition of Juniper. That's going to make a sort of soup to nuts infrastructure play that I would argue is extremely compelling in the overall market. And I think that, that deal is going to take a little longer to close. I think they're still waiting on some U.S. approvals, but I'm confident it's going to close. And I think then you start getting what HPE is doing is they're prosecuting the highest margin segments as best they can of the enterprise infrastructure space. I actually think the strategy is playing out pretty well. It's a strategy they laid out a number of years ago. There was a lot of cynicism around it. I think they're executing pretty well.
This trend of consolidation in the semiconductor industry, are you seeing HPE's competitors also go down that path?
So when you think about consolidation, what I'm seeing is HPE's competitors are also benefiting from this AI boom. We saw that over the last few quarters where there was, significant demand for server technology. I think in the semiconductor space, what we're starting to see is actually the opposite. We're starting to see that we're seeing the hyperscalers starting to work with more semiconductor suppliers and trying to diversify their bets long-term away from companies like NVIDIA. And I think that's where you start to see, Broadcom having conversations with OpenAI. You start to see Meta potentially having conversations with more custom silicon manufacturers. And I think what we're actually going to see is people trying to move and diversify their risk over time away from NVIDIA. Now, that's going to be hard to do because NVIDIA also has the CUDA platform, which is really a software programming platform that you use to enable NVIDIA's processors. So I think the moat around NVIDIA is pretty significant, but I do think you're going to see a diversification in semiconductors over the next few years as people try to mitigate their risk with any one supplier.
Crawford Del Pret, president over at IDC, joining us from Massachusetts. And the perfect segue to talk about Broadcom because those shares are moving lower in the after hours, ticker AVGO. The company sees fourth quarter revenue at $14 billion. Estimates were for $14.13 billion. So that does lag the expectations. Broadcom shares fall 4% after that forecast lagged the estimate, now down 4.5%. The company does see fiscal year sales from AI of $12 billion, AI revenue from Ethernet networking and custom accelerators as well. Coming up next on Bloomberg Business Week, we're going to give you everything you need to know about MPOX. That's next on Bloomberg Business Week.
6:21 on Wall Street. We do check markets all day long here at Bloomberg. We got Broadcom shares lower now after hours. Broadcom down by just about 3.6%. Broadcom said it sees fourth quarter revenue about $14 billion. Now the estimates on Broadcom were for $14.1 billion. Again after hours, shares down by about 3.5%. Also reporting after the close of trading, we heard from DocuSign. DocuSign boosted its revenue guidance for the full year. That guidance did beat the average analyst estimate, but after our stock is selling off down now by just about 2%. Turned out to be a mixed day today with the Dow Jones Industrial Average tumbling by 0.5%, down 219 points. S&P lower again, down 16, drop of 0.3%, while NASDAQ was up 43, a gain of 0.2%. The NASDAQ 100 index a little changed, up by about 0.1%. 10-year yield, 3.72%. The 2-year, 3.74%. Gold up $19 the ounce to $25.15, up 0.8%. And West Texas Intermediate crude, little change today, $69.20 for a barrel of WTI. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Shares of Broadcom bouncing around, but now lower by 3%. This after the company forecast revenue for the fourth quarter of $14 billion. That was just shy of estimates. Adjusted earnings per share for the third quarter did come in 2 cents above estimates at $1.24. Adjusted net revenue also came in above estimates at $13.07 billion. The company did see a slight miss on semiconductor solutions revenue and on infrastructure software revenue. That came in a little above estimates at $5.8 billion. Somebody who's watching this very closely is Kunjan Sabani, senior semiconductor analyst at Bloomberg Intelligence. He joins us from our San Francisco bureau. Kunjan, I think the headline here is that revenue forecast. It came in ever so light. Why is the company being punished for such a slight miss?
I don't think there's really much concern here. I think the movement will sort of normalize by tomorrow. Especially, you have to remember the fact that Broadcom gives a lot of segment level color. They have a lot of semiconductor segments and 2 major software businesses. So you will get that color during the call. So that is what really will drive the sentiment. Right now, we just are playing with very limited data. From what we can see so far, I don't see any major concerns. The AI revenue guide was upsided by $1 billion. So that's really positive because that's what's really driving the growth in semiconductor this year. The infrastructure also came in a tad bit higher, which helped the gross margin. And as we can see, the EPS is also a tad bit higher for the next quarters, which suggests that the infrastructure, especially the VMware integration revenue growth is going better than expected. So that will definitely be a tailwind for gross margin.
Remind everybody, before we get too much further, Kunjan, where Broadcom plays in the semiconductor space.
They are spread out. So there are 4, if I had to divide their 4 business segments, major. One is wireless, which is really just Apple, right? So the phone business. The one big chunk, which is the most important right now, which takes into account the AI connectivity and AI ASIC business, falls under the networking, which also has general purpose enterprise networking. Then you also have server storage and in the industrial, as well as the broadband, which has the operators and telcos.
So the headline by Bloomberg News' Ian King, at least just in the couple minutes after the earnings report, is Broadcom gives tepid forecast in sign of sluggish non-AI demand. So when you were looking at the report, what was driving, I guess, the slower demand for non-AI products? And what are non-AI products?
Well, everything other than what I just said, AI, which is really a new business ramping this year. So it's not a surprise. We know that the other non-AI, namely broadband, wireless, telco, enterprise networking, server storage, industrial, all of these end markets, so nothing specific to Broadcom, but all of these end markets are sort of going through their bottom right now. We believe Q2 was a bottom for a few of them, but still coming out of the bottom. You know, there are some pockets where we still have heard weakness from other peers who also play in the same market. So my guess is the weakness or the miss here, slight miss here, is driven by what we thought or what the street thought, that the recovery for these non-AI segments coming out of this quarter is not as strong as what we would have thought.
Is there a story in here that we can take away about demand for phones?
Not really. I mean, look, they are only exposed to iPhone without hearing. We will find out in the call whether the guide does imply a weakness there, so that will validate. But if I had to pick my best guess, I would say it's just those cyclical, lumpy segments that I outlined are just not recovering as fast as we thought.
Yeah, just a reminder, what is this? Is this right? Kunjan, I'm looking at the SPLC function here. Apple's, I mean, it's that second biggest customer of Broadcom.
Yes, the entire wireless segment is just one customer, Apple. That's all they sell the phone chips to.
That's pretty incredible. Is there risk there that Apple will start developing what it uses Broadcom for in-house eventually, like it's done with other chips?
Not in the near term. The focus area for Apple in designing their own chips right now is near the modem and the transceiver areas. So what Broadcom supplies to, and Broadcom has had a very healthy relationship. If I would say, out of all the suppliers for Apple phone, that's the strongest relationship they've had. There have been these concerns coined in the past, but they've been put to bed, and they also just recently renewed their contract with Apple.
What about when it comes to Alphabet and Meta platforms? Alphabet is the fourth biggest customer, Meta fifth biggest. What do they buy from Broadcom?
So Broadcom is the biggest shareholder when it comes to the ASIC, the custom compute accelerator, right? So when we talk about NVIDIA and the biggest risks for NVIDIA, we talk about its largest customers, the Amazon, Microsoft, and Google, designing in their own chips. When they want to design their own chips, they need to work with a semiconductor partner like Broadcom, which sells them ASIC services and ASIC IP and the design and manufacturing services. So that's where Broadcom plays in. We think Broadcom has about somewhere between 70 to 80% market share of that market, and Google and Meta are their two largest ASIC compute customers.
What about Dell? Where does Dell fall into that?
Well, Dell does not have
as a customer, because it's the third biggest customer of Broadcom.
Right. So a big piece apart from the AI compute is the AI connectivity and just general purpose connectivity, which is mainly Ethernet and other connective chips. Again, Broadcom has a majority share in that market from a chip supplier point of view, and Dell, being a big server, significantly large server provider, takes in a lot of those chips through Broadcom directly. Broadcom sells these chips to the OEM and the box manufacturers, who then go into the Dell boxes.
Going back to what Emily mentioned in terms of her question and the way that our colleague Ian has written about this, the tepid forecast is a sign of sluggish non-AI demand. Kunjan, I'm wondering if there is a concern that the non-AI part of the business is going to increasingly become a smaller and smaller part of Broadcom's business.
Well, I would not say that a concern. I would say that would be a good thing, right? Because AI businesses right now get the highest valuation and highest multiples. So if the non-AI business organically does become a slower portion, that would be a good thing. That means AI portion is growing significantly faster. But again, these non-AI portions are very highly cyclical, as well as seasonal and lumpy. So they have been in aggregate going through a downturn for a while now. So sooner or later, if the cycle do turn, they are going to be becoming a tailwind going into like next fiscal year for Broadcom.
Kunjan, back in 2023, Broadcom had acquired VMware. How has that acquisition kind of turned out? Like, did we learn anything in this earnings report that kind of indicated whether that was a successful acquisition by Broadcom?
We have. So if we look at the beat that drove in this quarter as well as last quarter, if you look at the largest beat versus consensus, both of them came from the software division, which was the faster and better integration that's going with VMware, as you can see it in revenue growth. So that is, we have had now multiple quarters of validation points that the VMware integration is going pretty good, faster and better than what they had announced at the time of the deal. And we anticipate, again, VMware to grow actually even stronger in the next quarter, unless we hear something otherwise during the call.
I'm also looking at just some of these third quarter results. CapEx came in at $172 million versus estimates of $140.5. Where do we know about where that is being deployed? Are they looking to maybe do other kinds of acquisitions?
Not really. I mean, Broadcom is predominantly a fabless company, and that CapEx number is really a bullet point error there, so nothing much to read about into that.
Shares now,
acquisitions are generally in billions and billions of dollars.
Sorry about that, Kujan. I was just going to say shares down now about 5% in the after hours. One thing that we wanted to talk to you about before we let you go, Kunjan, is what's been happening in the stocks over the last few days, where we've seen the decline certainly on Tuesday as a result of NVIDIA. But I'm wondering if we're seeing any sort of weakness overall when it comes to the chip space.
Well, currently, I mean, the AI exposed names, right, like NVIDIA, like AMD, like Broadcom, if you see, they're the high beta, high volatility names. But fundamentally, we have not seen any concerns, especially against the demand environment for these semiconductor suppliers. They're, every quarter they keep on upsiding their prior guides, even as short time as the next quarter or even the full year guide. So nothing concerning we have seen, especially for these folks when it comes to fundamental outlook.
Yeah, the stock's down in the last 5 days, so going back to August 29th and 30th, 6.3%. So keep an eye there. Kunjan Sabani, Senior Semiconductor Analyst, joining us from our San Francisco Bureau. He, of course, is with Bloomberg Intelligence. Check out all his research on the Bloomberg terminal. You just got to type in BIGO on the terminal. All right, Emily, I know you have your eye on what's going on when it comes to the airline industry. I spoke about JetBlue a little earlier today. That company reported earnings. It was actually a beneficiary of the outage that Delta experienced as a result of the CrowdStrike errant update. So
Really?
JetBlue shares ended up surging today because people were switching their tickets to JetBlue when they couldn't get on those competing airline flights. But you have your eye on airlines for another reason.
Yeah, well, people are really into these loyalty programs.
The points guy.
The points guy
The points
is really
guy is into
them.
points, right?
I actually get kind of excited by these as well because
Great.
I like, when you're a priority, now you get a free checked bag.
Oh,
Like, I actually see
wow.
some value in these. But there's a story on the Bloomberg terminal about how the rewards programs of the 4 largest U.S. air carriers, Delta, American, United, and Southwest, are being probed by the U.S. Department of Transportation, according to an announcement from the agency. The department has asked the airlines to submit reports on their programs within 90 days to give the government a better understanding of how consumers are impacted by the devaluation of earned rewards, hidden pricing, extra fees, reduced competition, and choice. And this would be the first time that the government has really looked extensively at these rewards programs.
Yeah, they've expanded to produce billions of dollars for airlines annually, in some cases adding more revenue than flight operations. While the potential consequences are unclear, federal regulators could demand changes that might disrupt these profit centers for both carriers and credit card issuers and remove a travel option valued by many consumers.
Maybe a little bit of too good to be true with some of these programs that now could end soon.
Okay, we'll see what happens as a result of this probe. Thanks to Charlie Pellet for sending us
Yes.
that article a little earlier. You're listening and watching Bloomberg Business Week. This is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet, keeping an eye on Broadcom after hours. Here's what you need to know. Stock lower. Broadcom, of course, a chip supplier for Apple and other big tech companies. It's out with a lackluster revenue forecast and a sign that slower demand for non-AI products is weighing on growth. Right now, after hours, we've got Broadcom down by 5%. Also reporting after the close of trading, we heard from DocuSign. It is tumbling before pairing losses, was down as much as 6.2% after the midpoint of its third quarter billings forecast trailed the average analyst estimate. So again, after hours, we do have shares of DocuSign. They are trading lower, little change right now after hours, down by just about 0.1%. It turned out to be a mixed day for the U.S. stock market today. We had the Dow Jones Industrial Average down 0.5%, S&P down 16, drop there of 0.3%. NASDAQ, though, gained 0.2%. 10-year yield, 3.72% with a 2-year 3.73%. Gold up $20 the ounce to $25.16, up 0.8%. And West Texas Intermediate crude up 0.1%, $69.24 a barrel. Wall Street is looking ahead to tomorrow morning's jobs report, absolutely critical for determining the Fed's next move. Jason Britton is founder and chief investment officer at Reflection Asset Management, and he was a guest right here on Bloomberg Business Week.
You'll be able to tell right away whether or not it's going to be a 25 basis point or 50 basis point reduction. My view is that a 25 basis point reduction is best case scenario. 50 basis points to me is scary because it'll mean that they're seeing something that the broader economy hasn't necessarily priced in yet, and it'll make me a little more nervous about getting a little bit closer to the potential for recession.
Jason Britton of Reflection Asset Management, again a guest here on Bloomberg Business Week. The number drops 8:30 a.m. Wall Street time. Complete coverage, expert analysis as you have come to expect over the years from Bloomberg Radio. Again, S&P down by 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. So, in August, the World Health Organization declared an Mpox global health emergency, as one strain of the virus has now killed over 575 people in the Democratic Republic of Congo and infected 30 times more. New cases have recently appeared now in Europe and Asia. We're joined now by Carrie DeBink, Associate Professor in the Department of Molecular Microbiology and Immunology at the Johns Hopkins Bloomberg School of Public Health. And a quick disclaimer, the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. So, Carrie, what do Americans need to know about the threat of Mpox?
So I think the first thing that's really important for the general public to understand is that right now our risk is very low. We have not seen any cases of the specific type of Mpox that the public health emergency has been activated for. However, that health emergency went out to make sure that the governments and public health agencies are gearing up and getting ready in case we do see something, and also helping countries where there are cases combat it there so that it doesn't spread further. So for the general public right now, the risk is very low, but we also are prepared.
How are we prepared?
Yeah, that's a great question. So I think first I want to just give a background on Mpox as far as how it's defined. So there's actually two different big groups of Mpox. There's clade 1 and clade 2. And in 2022, there was a global outbreak of clade 2, including cases here in the United States, and there are still cases of the clade 2 Mpox here in the US. However, this specific public health emergency is actually geared towards one of the clade 1 virus, and the reason for that being it's spreading to places it hasn't spread, it's spreading in ways it hasn't spread, and historically this has been a type of Mpox that causes more severe disease and higher death rates, and so that's why people are concerned. Now, because in 2022 we had that outbreak of the clade 2 virus, our public health agencies and health infrastructure really stepped up to make sure that we're able to do really good surveillance for Mpox. So we do like wastewater testing, and people are doing clinical sample testing. We're also able to detect it in clinical cases. So there's a test that can tell whether or not somebody has Mpox versus another type of virus. And we also have vaccines available for people in high-risk groups. So our health infrastructure really in the United States is set up well in case we do end up seeing clade 1 viruses here.
What are the symptoms of Mpox, and then what are the treatments then if someone does contract it?
So the symptoms of Mpox, they start out like typical flu symptoms, so fever, swollen lymph nodes, headache. Those are some of the general symptoms that people can have. But the characteristic symptom of Mpox, it's a pox virus, so it causes blisters, and so you end up with a rash that starts off as a flat rash. It then erupts into blisters that are fluid-filled. Those burst and scab over, and then it heals. So that's the characteristic. When people think of Mpox, they're thinking usually of that rash and those blisters. So those are the main symptoms. Usually people recover. In severe cases, people might have severe respiratory illness or neurological symptoms, and in rare cases, people die from Mpox, but the majority of people do recover. As far as treatments go, there are no licensed specific antivirals specifically for Mpox. However, there have been cases where people are using antivirals that have been approved for other viral infections to try to treat it. Usually this is in severe cases. For most people that don't end up with a really severe case, it's mostly treating the symptoms, making sure that their pain is managed, that they're not getting secondary infections like from a bacteria that invades like the wounds from the blisters, things like that.
Carrie, who's most at risk for Mpox, and should these people be getting vaccinated?
Right. So traditionally, for clade 1 viruses that were, they're traditionally found in Central Africa. It's usually children there that are the ones that are getting it the most, followed by people with immune deficiencies. So those are like the two highest risk group: children and people with immune deficiencies. Pregnant women are also at a greater risk of to themselves and to the developing fetus or the baby. Here in the United States, in the 2002 outbreak, it was mostly seen in populations of men having sex with men. So it really just depends on the particular location and the main transmission route in a certain area, who might be the most at risk of getting it. But as far as severe infections and death, it's definitely children and people who are already immunocompromised.
So are most children getting a vaccine that would protect against this?
No, in the United States, children are not being vaccinated right now. In the United States, again, we haven't seen any clade 1 viruses at this point. So the vaccinations that have been given into this point have been for the 2002 outbreak of that clade 2 virus. And the CDC has very specific recommendations for who gets that vaccine. It's really only recommended for specific groups that are high risk of being exposed.
In terms of like a worry list right now, where should we be? Where should this be on our list of things to worry about? I have a list.
You have a list. Okay, we'll put this one low.
Okay, thank you.
And there's a couple reasons for that. So I know that it sounds really scary when people hear like public health emergency of international concern, right? Like, that's the WHO's designation, but that's really not meant to be for the average person in the public. That's really meant to be for governments and public health agencies to step up, to prepare their infrastructure and to allow them to provide additional aid to where it needs to go. So that's really telling everybody to get ready for it, not that the average person needs to be worried about contracting it.
Carrie, thank you so much. That's super, super helpful. Carrie Debank, Associate Professor in the Department of Molecular and Microbiology and Immunology at the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Coming up next, we're talking about Beetlejuice. This is Bloomberg.
listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenivek. That's Emily Griffeo here in our Bloomberg Interactive Brokers studio. We're also joined right now by a special guest, writer for Bloomberg Pursuits, Justin Ocean. He's here in the studio with us. It's been a while since we've been able to catch up, Justin. It's good to have you here. The reason we're talking to you is because there's something long delayed finally coming out. A sequel to that 1988 Tim Burton demonic farce, Beetlejuice. But is this Beetlejuice a sequel?
It is a sequel. Be careful. It's full name. If I say it one more time, 3 times, watch out.
I'm not going to do it.
Don't do it. Don't do it. But you say it double. It is a sequel, technically. But in the way that Hollywood is doing sequels now, it's more like a remake.
Okay, so talk a little bit about that. Like, how is Hollywood doing this?
So it's happening a lot. We earlier this summer we had a package on what makes a good Hollywood sequel. And one of the main ways you could do it is you take the same idea, you tweak it slightly, you maybe get some new actors in, and it's technically a sequel, but it hits all the same beats, it has the same vibe, and you're not like elevating it beyond. Which is what this movie is, and what our critic who saw it, he liked. He's a big fan of the original, and now almost 4 decades later, you have half the same cast. You have Winona Ryder back, you have Catherine O'Hara back, but now you have somebody new like Jenna Ortega, jumping in, and but of course Michael Keaton is back as the main character, and it's fun. It's gross. It's zany. It hits all the same beats as the original, but you might not be as surprised as you were had you seen the original as a kid, like I did, and loved. So
what made Beetlejuice, I guess, so loved back when it came out in 1988?
It was just like weird. It was gothic and dark, but funny and gross. And the Michael Keaton's character as Beetlejuice, he's kind of like a stand-up comedian, just like on speed. And he's like this undead demon that tricks these dead. Like the plot of it's insane in the original, and tricks this dead couple who are haunting their house to like help them to get the new inhabitants out. Mark Ladorf, who wrote the review for our new one, said the plot of Beetlejuice is kind of indescribable and besides the point. It's more just about the fun, zany gags like in the underworld where everything is bizarre.
What's amazing is the fact that several of the stars, including Michael Keaton and Winona Ryder, are back in this version of Beetlejuice. You also have to think about it from the context of Michael Keaton in 2024, Winona Ryder in 2024, that's not them in 1988. Like, they've had incredible careers in the last 35 plus years. I mean, they're completely different when it comes to thinking about the Hollywood stardom.
Yeah.
It's incredible.
And it's funny, I think it was at Venice Film Festival is where this premiered, and I think Tim Burton said, he might have said it in some other junket, but I think it was there that he said he did the sequel just for fun, kind of. It wasn't for the money. They've been wanting to do this for years and years, and obviously, maybe that's a little BS. Getting, big actors' schedules aligned to be able to do a big sequel like this is hard, and it's also expensive. They do a lot of practical effects. They're not using CGI.
The $100 million budget?
Yeah. But it will, if the good news is this is likely the first movie in 7 years to break the 100 million mark in September. So it will likely this first weekend make its budget back. There is a lot more, based on marketing, but then, it's going to do big money. It's already, fans are hungry for it. If you haven't seen the original Beetlejuice, the nice idea about this like kind of remake version is that you don't need to have. You can still enjoy it. So, people that now have kids of their own that could take, let their teens see it and it'd be fine and it'll get a whole new generation of fans.
Is Beetlejuice considered a Halloween movie? In my head it is, but...
I would say so. I think it's, they released it now to get ahead of the holiday.
Right.
They probably, there's probably talk to do it in October, but there's no other big movie releases this weekend, so they kind of own it. Warner has had a tough a tough year so far. None of their films have done well. I think it's 170 million for all their movies so far this year, and Beetlejuice on its own will likely exceed that.
I think it's also interesting that Tim Burton's involved in this one, and he was in the first one too, involved in the first one. Like, you don't oftentimes see that with a remake coming decades later.
Yeah, I mean, and he doesn't have the same creative team behind him. This was really, I would say, the original movie was like what cemented his like visual style and his kind of gothic vibe, and you see it again. Jenna Ortega was on the Netflix show Wednesday, and the rest of the cast is kind of crediting her as putting this together because Tim discovered her